is hot. Now you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning. We are back. You're watching Tasty Live. This is your opening bell. This is your morning call. Jamal, the Batistas are letting you and me run the show today. And yes, that's Jamal Chandler. Hey, buddy.
I've been getting a lot of questions, man. Am I back? Am I here? Do I work here anymore? Well, I do. I apparently work here still. They allow me to turn on the lights and the cameras and all that. But look, Chris, it's been great to be off, man. I'm not going to lie to you. It's been great.
I know you've been sending me these texts. I'm long mic around and sipping a pina colada. What else do I need to do?
I wish I sent that text. Wow, that's stock. Holy cow. Look, you know what? To be honest, man, it's not been all about just me being off and doing nothing. I've just had all kinds of stuff going on this month. That's not why, obviously, I took the days off. We had these like kind of forced days off to take, but it's just, dude, I mean, my oldest kid graduated college. There's one. That was something else. That was at the beginning of the month. Thanks. That was just a lot of work, if you will. I know you got young kids, so let me just break this down for you. The money doesn't stop after they get out of high school or college. And then the other thing is like every sort of milestone that happens, it's almost like giving birth again. So like these graduations, they kind of like high school graduation, college graduation, they're like kind of giving birth again. You got to like do all this work that you don't anticipate doing somehow. It's crazy. So there was that. That was graduation. My daughter, I had to help her move out one day. That ended up being a chore. Every kid is created differently, I tell you. I mean, it's a trip. It ended up being, it was just like, she had so much stuff, Chris. Oh my God. I mean, girls versus boys, man, it's a trip, dude. I mean, the amount of stuff, I can't wait for you to go through this. It was just like, babe, this is all coming with us. Well, it doesn't have to. I'm like, yeah, you're right. It doesn't have to. We're going to have to get rid of this and this and this and this and this. And guess what? We can buy them again. We can have them shipped again. Like, no big deal. Like, we don't need this. Jeez. And then my youngest, he's had a lot of basketball going on. He's pretty good. Humble brag. He's pretty darn good. And so he had a really big tournament a couple of weeks ago, but it was like the finality of like this current basketball season that he had going on for the last few months. So that's been great. So it was just kind of a rest from that. Tell you, man, I've gotten some pretty good sleep. I feel pretty good. Been doing some pretty good workouts, hitting the golf balls. It's been nothing but relaxation for the most part, other than the other stuff I talked about.
Beyond the other stuff. Well, that's great, especially for the graduation. Congrats to you and yours. And hey, congrats on a little bit of a raise, maybe? Not paying for all that school. That's always a good thing. We can bet on zero DTEs now. You have more money to bet on zero DTEs.
That's a good thing. It's true. At the same time, you talk about what's going on in the economy and everything like that. I mean, he did end up getting a job, but he is back home for the time being. He's taking advantage of something I didn't take advantage of. I don't know about you, but as soon as I finished school, I actually went straight away to college, like to graduate school again. I didn't stay home. And I think it's been a lot of talk about this current group of college graduates not immediately getting a job, staying at home, doing all these things. We're 50-50 in that camp.
As soon as I was done with high school and turned 18, I was like, all right, mom and dad, I'm an adult. I can do whatever I want now. And they said, you can't. You still live here with us. I went, okay, well, yeah. I guess I'm moving out until I go to college then. So I got a place, Clark and Henry Street, this little crappy 500 square foot apartment in this old motel in Brooklyn.
In a motel?
An old one. Clark and Henry. Like on top of the 2-3 subway station. The whole freaking building would rattle when a subway would come through every 7 minutes. 24 hours a day.
Oh,
but
God.
I just didn't want to do the living at home thing. So I actually, after high school, I moved out. I never moved back home. My brother took advantage of the whole living at home thing after college. He got just absolutely railed by his startup company, though. The day before their 6-month like lockup ended for people to become full-time employees, they fired like 80% of the company.
Wow, that's rough.
And then they went and got like Series A funding for, and now if you go to a baseball, basketball, football stadium, you get those little wine cups with like the peelable lids.
Mm-hmm.
That was his company.
It's them. Oh wow.
Yeah. So, I never took advantage of living at home. No, I was happy to go into the city and okay, I'm 18. I can do whatever I want now. See you guys later.
I think it's better. I didn't really want to live at home, honestly. I knew it would have been better. I mean, me and my mom probably would have argued more. You know what I mean? Like, whereas, hey, I try to be a different parent in a way. You try to be cool, but there's little things that get on your nerves, Chris. There's little things that get on your nerves when your kids come back as adults. We got to have more conversations about it so that we don't get to that point where we start fighting. Enough about me, man. I'm going to go ahead and comment on it. You mentioned it at the start of the show. I see it in the background. I see what's going on. Your Knicks are in the finals, man. Congratulations, man. Congratulations. They've been balling. They've been put on impressive display of basketball.
Just as like an emphasis, and I keep bringing this up, this team is so special. Timothy Chalamet got Kylie Jenner to go to Cleveland. Like, that's not nothing.
I would say he got her to go, but I would say the team got her to go because she started seeing the energy and she knew that everybody's talking about it. All of a sudden it became cool for her. You know what I mean? That's how these Cali girls are.
I get it. I mean, how do you not want to be seen at the Knicks game? I was looking at the stadium prices, Jamal. Back in 1999, to get a courtside seat, max price was around $2,600 for the finals. Right now, the minimum ticket price listed on StubHub to get your foot in the door for the worst seat in the house, $3,500.
Yeah, I'm sure of it.
I don't think I will be going to a game, but
you gotta soak up some of that energy though in the city.
I'm gonna be in Manhattan. If the Knicks are like it's clinching game, I'm gonna be outside the Garden watching. I'm taking off of work. I've got to go in. But this is a good reminder, as I told my dad last night. You did live across the hall from Patrick Ewing, and yeah, and you're the best man in they went to Georgetown together, and the best man in your wedding was his roommate. So if there's ever a time to ask Patrick Ewing for a favor, now is the time.
Yeah, him and millions of other New Yorkers. Hey, Patrick, I saw you at the Garden once, man. Hey, can I get some tickets?
Oh, they're still friendly, so I feel like that's
good. If they're still tight.
Like you're talking about your kids giving you problems. They move back home. Like, Dad, we need this. Help us move. I'm here asking my parents, Daddy, I want NBA Finals tickets. Can you ask your college friend for them?
Look, I'm be honest with you. There's not many times that I've rooted for the Knicks, as you would imagine, in my life being a Chicago Bulls guy. But I will say, in '99, I honestly don't think I've ever rooted. You know what's funny? I don't think I've ever rooted for the Spurs until now. I'm rooting for them against OKC. I love Wemby. That's really where it stems from.
OKC is playing so dirty.
Oh,
they're falling over, light contact. They bait the refs into everything. It's a very bad form of basketball.
Yeah, it's ridiculous. And I do, speaking of them real quick, I do love what last night, apparently, if you see the videos, Wemby was going out of the game and he whispered to Biyombo and whispered to Plumlee something. And then they come in immediately with those fouls. Plumlee hits dude in the back at the end of the game. Like, Wemby is on that, dude. I love that about him, man. And honestly, this is the first time I've ever really rooted for Spurs. So going back, I'd never rooted for them. So when you guys played them in '99, that was probably one of the first times I ever rooted for you guys. So I remember that squad. I always did like Larry Johnson, as it were. I always did like Sprewell. That also made it easy to root for them at the time. And I remember that squad, man. I was rooting for you guys in the finals. It was
Sprewell.
These are big. I mean,
struggling to feed his family.
Look, these are big, man, because you win something like that. The Spurs back then, look what that started something, right? And so it moved on. I mean, this is a big opportunity for you guys. So I will probably be rooting for you unless you play the Spurs somehow, which is probably not going to happen. They're probably a little too young. OKC's probably going to beat them. So I'll definitely be rooting for the Knicks, I suppose.
Jamal, the last time the Knicks were in the finals, none of the players in the Spurs starting lineup were alive.
Makes sense. That's a long time ago.
That does not make any sense to me. I'm not that old yet. Dude,
it makes sense to me. When I think back, I mean, I was in college. I was graduating college that year when that happened. I've had a lot of things happen since then. A whole lot. I've changed careers. I got 3 kids. Are you kidding me? Married? I mean, a whole lot. So it makes sense to me. 99 is a long time ago, man.
So now that you're back, Jamal, all right, you're getting back in the groove, and I think this works out for a lot of folks before we transition to talking about the markets. But it does take a mindset shift to go from not being on top of it every day and worrying about family stuff to getting back into the trenches, so to speak, and going into the mines once more and getting that kind of focus. So how do you plan on transitioning back into the markets now? Because I'm assuming you're not jumping in with 2 feet here. You want to get your bearings a little bit.
Yeah, I mean, it starts actually with sort of the mini shutdown, if you will. I didn't fully shut down because I still had positions on. Most of them are strangles. Some of my bigger positions are strangles, which kind of works out in this situation. I have a really good friend who used to prop firm trade. He ran huge books. Now he just kind of trades his own money. He's independently wealthy. And I was kind of taking his sort of MO and what he does a lot. He'll go out and he'll sell strangles and then he'll just like go for walks. So he'll won't even look at anything for like hours or maybe a day or so. And so I kind of tried to employ that. It hadn't been easy. I mean, I got Qualcomm, I got Intel. Obviously, you've seen what's going on with the semis right now. I am short a year-long trade in MNQs, and it's usually long delta. I just adjusted that again today. So that thing kind of helps, but you got these individual names. Like I said, Intel and Qualcomm. Qualcomm's made a huge move in the last few days to a week. And so, it's like you don't really overreact. You don't really do much, especially since it's strangle. You kind of just sitting in it and watching it. So I'm not trading. I haven't been trading heavy at all. And I haven't looked at any news. That's probably the one thing that I think I've told you this a couple of times when I've been off. I don't really look at news when I'm off. I really don't. I turn off the Twitter. Twitter's probably my main trade engine and thing that I look at every day. I turn off the notifications. I got notifications that come in from probably about, 10 things that can be sometimes actionable or things that are happening. Turn those off. I don't pay attention to any of that. I've mentioned this to you before because I remember years ago when I was trading and I was trying to catch this like senior trader who came back. It was like I had just started and I was thinking like this dude would want to know everything. Hey man, this is what's been going on. He's like, I don't care. I don't want to know. It's like, really? He's like, yeah. I mean, it doesn't really matter. And truthfully, it doesn't. I mean, it's actually a really good time to sort of reset your brain and all the things you've been thinking about and all the relationships that may or may not have existed. Maybe they've changed and it gives you a chance to look at it all with fresh eyes.
How do you actually turn that part of your brain off though? Where you like wipe this like because I try to do this.
No, I know you mean it. I know, dude. There's a lot of people who have a hard time doing it.
So what do you think is the most effective? You just think turning off the news and going for the proverbial walk, just letting your phone sit quietly. That's what you need to do. Every trader should do that. Well, first of all, I had really checked emails like outside of the few times. As you know, most of these last couple of weeks, I was working on Thursdays doing the SIBO from the floor show, and that was the only time I was checking email or anything. And so it's not easy when I see the morning emails that I look at. Yours, my friend in particular, is one of them. When I see those things come in, you want to read it. I just don't. Don't take any offense to it. I archive it. Don't even pay attention to it. I don't want to read it because it won't matter in a week or two when I come back. And that's the thing. I mean, I just don't really care about it. So it's hard. I know for some people can't turn it off over the weekend. I actually do that every single week. No problem. Like Friday comes, I don't look at anything. I don't pay attention to news. So it's kind of like that. I mean, you feel like you're going to lose a step sometimes because you're not paying attention to the news. You're not on top of it, but it'll still be there when you come back. It really will. Like it doesn't, missing some news a week ago that I didn't necessarily know week or two ago doesn't necessarily mean I'm out of the loop at all, is what I found. I think that's probably the most important a takeaway for traders here, right? If you take time off, you're going to get the FOMO, particularly in a bull market when things just keep going up and up and up. But that doesn't mean that you jump back in and start chasing. You just got to stick to your process, and the market's going to be open tomorrow, and you have to keep plugging away at it. And yes, I did notice that you haven't been opening my emails in the sent folder in Microsoft Outlook. There's now a little feedback tool. What % of recipients have opened up the email? And I can see that you haven't been reading them. So I'm just going to take that note.
You would look at that statistic. You totally would look at that statistic. I knew you would.
Maybe. Okay, so now we have summer coming up, Jamal, and we have this. You talk about forced days off. Just for the record, for the people on air, we switched our fiscal calendar around here, and so it used to end at the end of May. And because of that change, we have all these like vacation days that have to be used or they're lost, and they get pushed to next stump year as we fix the calendar. So, Jamal, you were taking that time off to use those days before you lost them. but we have summer trading coming up right now. And this is a time when a lot of folks like you, me, we're going to listen to, I'm sure people in the audience here, they plan on taking time off and traveling. And the market conditions are starting to shift now, where volumes are exceedingly low as we move our way past Memorial Day. So Jamal, how do you change that or incorporate that as part of your process here? You've been away from the market during a hot period, and now you're coming back in when things kind of settle out for a few months and calm down and people go on vacation. How do you balance that perception issue, perhaps?
Well, I mean, are they going to calm down? I feel like we didn't really calm down last year. We certainly had an interesting time. I don't know, man. I don't feel like it's. I feel like the last couple of summers are not similar to the summers we used to experience, 5-10 years ago, where things would completely calm down, volumes would completely dry up. I feel like they've still been kind of interesting. Maybe save for, mid to late August. June and July, I feel like have been kind of interesting the last couple of years. So I don't know. I don't know if I don't know if there's such thing as summer trading. Because there's always seems to be something going on in this market that we occupy nowadays, right? I mean, there's just constant movement. There's constant areas, sectors that are doing something, particularly, obviously, the tech sector more recently. And there's new IPOs coming out. Obviously, we got SpaceX, which is going to be huge for a lot of people. I mean, the whole entire market, honestly, I think is paying attention to it. So I don't know, Chris. I don't know if there's a such thing as summer trading anymore. I think if there is a situation where you do have extended time off and you don't really want to be a slave to the computer, I think those are times where you got to start winding down the book. And so I didn't wind down my book. Like I said, I had on positions that didn't require as much attention, mostly directional. I think more than anything, directional positions have always required more attention, because if there's a move and you're trying to take advantage of that move, you got to be there on the spot to be able to sort of either adjust your position or take it off, one of the two, and or have alerts, which again is not keeping you completely away from the market. So that's the reason why I chose to still have these strangles on, because I really didn't need to pay much attention to them, save for when they had big moves, which again, Qualcomm, but I'll deal with it. I'm sure upside at the 270, and wow, that thing was at 200 not too long ago. Now it's at 251, at least as of this morning. That's why I keep bringing it up. But I think it's just, if you are going to be away from an extended period of time and you're going to be like traveling and you don't want to pay attention, I think you got to wind down the things that are directional plays, long gamma plays is basically what I'm talking about. Other than that, one lot, short something, wide, I think, you only put on an alert maybe for where you care. But if you're really trying to be away, I think you gotta unwind some things.
You got to commit to being away. And I think you got to have a clean break. Over the holiday weekends, I did something similar where I literally just mothball my phone except for phone calls. And I mean, I avoid text messages as much, but I just don't I can't turn that off. But no social media, no email, not professional, not work. I need a break. And so I find it to be very difficult, given how I operate, to just step away like that. But it is so needed. Then I can come back and look at my book or the diminished positions in the book and say, okay, what do I really want to have on? Instead of being, okay, the futures market closes at 5 and now I have an hour to exercise and do stuff with my kids, and then back on at 6 o'clock and we're manning the ship once more. So I think just psychologically speaking, even if you've had a very good run for the past few weeks and months, it's never bad to step away and just make sure you're not pushing too hard. You have to sustain yourself over the long term. So Jamal, I am very jealous that you got this entire month off. You seem to indicate to me and Josh that we all had various similar times off recently. I would debate that, perhaps. So,
it's funny you brought him up. But I will remark on what you said. Basically, while I was out, I texted Josh and Chris like, man, it's been great being off. I need to take off more time, this is fantastic. You guys had extended time off recently, but you guys must know how it feels. And by extended time, well, I mean, Chris had a baby, and we all know with those who do have a baby, when you have time off from a baby, you're not getting much sleep. However, you put yourself in that predicament, Chris, not me, okay? I didn't do that. Josh also put himself in his predicament when he was off several months after breaking his arm doing wheelchair football. I remember somebody in the office during that time came up and said, "Where's Josh?" I was like, "Oh, he's out. He broke his arm." And she was like, "Playing football?" And I was like, "Yeah." And she was like, So, 50-year-olds shouldn't be playing football. It's true. I mean, it is what it is. Speaking of Josh, one of the better texts to ignore is when we tell Josh how great Mad Men is, and all he does is complain to us as to why he binge watched the show. Binge watch being the key word. He's complaining about it. That show is phenomenal. I mean, I don't even know that it doesn't even deserve an answer when he's saying dumb things in text. I mean, what is he? I don't get it.
That is something that binging just is totally taken away. I mean, I think about, I was talking with my younger cousin recently, and he's like, "Oh yeah, Endgame was so good after Infinity War." It's like, yeah, but you watch those movies like back-to-back nights. The fact that we had to wait a year after Infinity War to watch Endgame, all the characters are dead. Like, it sits with you. It resonates. In Mad Men, you have months between the seasons. You have, a week between the episode. We lost that water cooler talk. We would come in and there'd be like that national conversation Monday, Tuesday mornings. Did you see Game of Thrones? Did you see Mad Men? Blah, 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 blah. And now it's just.
So are we not going to have that anymore with a lot of shows these days?
No. I mean,
this is a good convo, honestly. I'm curious about that.
Well, it's a huge, I don't think so. Streaming's so fragmented. Everyone can watch what they want to watch whenever they want to watch it. It's like social media. You can seek out folks who are like-minded, and therefore you're not forced to engage in the broader cultural zeitgeist anymore. So I'm hoping, that's why these sporting events, when you see like the Super Bowl gets 120 million viewers in the United States, it's a big thing because it's a moment of cultural and national unity in some degrees. But TV used to provide that. We don't get that anymore, Jamal.
And even when they try to make events that do that, I mean, two that come to mind recently, which maybe people will laugh because maybe it didn't reach them. Maybe who knows how it reached. The fight between there was the fight recently between Gina Carano and I'm blanking on her other name. Even whatever, the big fight.
Ronda Rousey.
Ronda Rousey. Thank you. I mean, though these are events that try to capture it and then they fall flat. Especially that one. It was over so quick. And the Kevin Hart roast, obviously trying to capture part of that Tom Brady roast crowd more recently. I feel like I didn't watch either one of them. And I feel like the same way I do about news 2 weeks ago. I don't care. I could care less. You're right. It's fragmented.
The Kevin Hart roast was so funny. it was
I heard there were good parts. What's funny? There's been controversial parts too. And it's almost like they're using those to sort of propel and get people to watch, which that's another thing that happens a lot these days.
Yeah, I particularly enjoyed the Shane Gillis, Chelsea Handler interaction, which they're still going at it here.
They are still going at it. I've noticed that. Yeah, exactly. Yeah.
Oh,
they try to keep these things living on. I don't blame them.
Well,
but it's a trip, where we are with streaming.
You got to keep the content wheel spinning. But speaking of the content wheel, Jamal.
Actually, can I say one more thing?
Yes.
Before we go, I will say one thing that I've noticed since I've been off is no bullshit. There's a lot of people doing similar stuff to what we do. But now by that, I mean the way we are communicating and interacting, I've noticed that a lot. And I think ESPN and things like that are in trouble. That's all I'm going to say.
Yeah. I don't know if you watch any of the ESPN morning shows. I watch some of the clips just in part because I'm enjoying all of these people saying like, you can't have Jalen Brunson, 6'1" guard and win anything. And I'm enjoying watching like Nick Wright and Dan Patrick and just everyone down the Colin Cowherd be like, I guess they could do it. But yeah, those have gone to it's not like the Sports Center we watched growing up anymore. I mean, the fact that WWE is on Sports Center seems patently absurd to me as someone who never followed I don't want to call it a sport.
They're trying to go after the money.
Just go, so it's just a total different concept. You get that Pat McAfee vibe and starting to permeate every single
for sure. That they have. And the Ringer and all these other different places I've noticed. And even MLB. I've noticed MLB Network has two people like you and me interacting just like this. It's a trip.
Do you know how awesome it is to listen to Bill Simmons over the past month? Him melting down about the Celtics. So good.
All the time. How about with Bill Simmons?
All the time. Actually, yeah, I hate listening to him all the time. Zach Lowe's pretty good, but I hate that it's on Netflix now. Like I have to open up Netflix to listen to a podcast. It's ridiculous, but
I know.
You don't have to do that here, Jamal. We're still on YouTube. We're still on the platform. You can visit us on tastylive.com. As folks who may be tuning in are wondering, where's Tony? Where's Nick? The guys are off today, so Jamal and I are here leading the way. It's going to be a little bit of a different schedule this morning here for the morning show. We're going to take a brief break in a few minutes' time, but we're going to go through a futures market update shortly at 8 Central, 9 Eastern. We're going to go through options jive. We'll go through our typical morning opening bell at 9:20 Eastern, 8:20 Central. We'll likewise have what's your assumption, market measures, and live from the trade desk before we ultimately go into Liz and Jenny. So we're going to have a little bit of it all. Vanetta's not here. Tony's not here. Nick's not here. Jamal, but that doesn't mean that we can't handle things. We're big boys. We got this. Let's go into some trades shortly. We're going to take a quick break here, Tasty Live. We'll be back in about 2 or 3 minutes, and then we'll get to some futures quotes, ES and Q. They're charging higher. Lots to talk about with Micron.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
All right. Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No.
I
This
will
is mine.
take
It's
it.
mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I am overturning everything, and
You're
I am
in over
allowed
your
to buy.
head.
Excuse me?
You're in over your cute little head.
Don't
right.
patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads, and what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue, a beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Jamal, we are back. It's just past 8:30 Eastern here in New York, 7:30 Central Time in Chicago. The markets are getting ready to open. It's a good time to take a look at futures quotes here as we are 1 hour away from the cash bell in New York City. 75.65, Laura. We can go right to the platform. 75.65 here for the S&P 500 right now. That's 28 points higher, 0.4%. It's also another big move higher for the NASDAQ, which is up by 0.9%. 30,000 NASDAQ, Jamal, 30,340 here. Overnight, Taiwan, Korea, they led again as memory and AI-linked names extended their gains in Europe. We're seeing with the fall in oil, really oil over the past hour or two has really started to accelerate to the downside, Jamal. We can pull up a 5-minute chart here. You can see that maybe 8.10, we were trading at 90. We're now down about $1.50 over the past 30 minutes. But treasury yields are lower overnight as well. We can take a look at the bond market here where bond prices are continuing to bounce back with that drop in oil prices, much needed relief. In FX, the dollar's mixed. The Australian dollar is actually a touch weaker here, despite the fact we had RBA tightening expectations increase overnight. They had a weaker inflation report right now. IVRs across the board, I think we want to pay attention to here. They're coming in for the S&P 500 right around 35, up about 0.4% over the past week. The NASDAQ 56 or change, up about 0.5% over the past week. In oil, that's where you're going to see the biggest decline across the board of the major assets, down 8.8% in raw volatility terms. The past week, Jamal, it's a 47 IVR, and volatility is starting to crack here, perhaps in a way that we haven't seen in some time. I know that you haven't been paying much attention to markets on your break, but oil here, I'm curious to get your thoughts shortly. We move beyond that, though, Jamal, into the crypto space where Bitcoin has exceedingly low vol. It's a dead asset. And, I'm just going to call this out here. I've seen the numbers on air, Jamal, over the past 2 months. I've seen the YouTube videos. People are not trading crypto right now.
No.
It's unbelievable, the lack of attention that it's getting, the lack of enthusiasm behind it. Of course, price tells you everything. But, you make a video about Micron or you talk about Micron or you tweet about Micron versus Bitcoin, you're getting a way different response here. So it's all semiconductors. The crypto is not really alive and well right now.
It's true.
Futures market here is still hinging on this AI trade. And I think that's where we want to start the morning, so to speak. I write this morning note, as you alluded to, every day to give some folks who are coming in Chicago a heads up on what's been moving the market overnight. The AI rally is proving strongest in the infrastructure space again. I mean, this feels like it's another day. You could say the same thing over and over again, but the memory stocks are the clearest example right now. Micron's up another 5% or so here pre-market, trading $9.58 after closing $8.95 yesterday, a 19% gain. We're seeing that the SK Hynix and Micron now both have market caps north of $1 trillion here. UBS upgraded Micron yesterday, calling for a 1625 price target, which would give it a $1.8 trillion market cap. All was said and done. These are momentum names right now. We're in a full chase mode in this market here. But I think for traders, this is creating a relative strength setup in the short term with a bit of a dispersion opportunity. You have momentum firmest, strongest in names with those companies with direct leverage or revenue exposure to the AI capacity expansion rather than just broad tech exposure. Right? We can see how semiconductors are doing better than broad tech, XLK. But for traders, right, this is a difficult environment. You're chasing something up at all-time highs. How do you justify getting long something that was up 20% today when you see pre-markets up another 5% here? I'm finding that it's better to have tactical exposure than oversized directional chasing at these levels. And that may mean something like on a short-term basis, you go to something like ES and you buy at the 1 week moving average. You go in on a day in, day out, short-term, 1 day, 2 days, 3 days, but you're not staking out that 45-day long position, hoping that this thing goes up another 10 or 20%. You have to be very tactical about this. I saw a tweet today, though, that really rung in my ears, and I figured you would be the person to comment on this. Quantian, I don't know if anyone else follows them on Twitter. Quantian1 is their handle. I've been following them for over a decade. I feel like they're pretty popular. They said, quote, I know everyone hates bears right now, and I will get many quote tweets calling me a boomer moron, but please consider that mega caps being up 20% in a day ex earnings is not early cycle behavior, and there's a very real chance of long-term top or years of zero or negative equity returns from here. Jamal, how do you as a trader, and I'm having this trouble myself, the trader in me says keep buying hand over fist. If it's a bubble, who cares? Rush in. How do you square the fact that we're seeing some astronomical price moves that typically come across as unhealthy?
It's true. Although I can't say I agree with every single word that Quantian, you said?
Quantian.
I can't believe that I don't agree with every single word that they said. The idea of a top, I do think this is some type of, I actually hope it's close to a top, just based on the way a lot of these charts look. I actually hope that we're near top area, and then the pullback won't be as bad, because if we do keep rising at the rate that we're rising, the pullback always happens. It's just a matter of how bad it is, right? So when you look at the way Micron is done, again, that was something that stood out to me yesterday. Obviously, a 20% move when the stock is already over several $100s, $800 in fact, and now that you are after the close, by the way, yesterday, it wasn't just doing this like 962. If you looked after the close yesterday, you saw that it was already trading higher in the aftermarket. As somebody who was largely trained in momentum moves, when you see that, first of all, if you're longer, you're excited as hell, but you know that it's getting jammed higher, and there's no telling when it might stop, and it might get ugly at some point when it does. Again, I told you I'm short strangling a couple of names, and I've noticed Qualcomm making moves more recently. Again, this is after earnings. The vol is still high, and these names are still making these moves. The Microns of the world, the Qualcomms of the world. Marvell has earnings coming out after the close. Why would I not play it to the upside? That's the other part of it, right? As a trader, I'm like, if I'm gonna play it, I'm gonna play it to the upside. What the hell? Like, there's no reason why I wouldn't. But I think when you talk about, you ask the question, how do you justify chasing it? That's when you're just kind of smart about your strategy, which I happen to know a little something about. You try to be smart about your strategy in the way that you're chasing it, and you pick basically a number that, as far as premium, that you'd be okay losing if it doesn't make the move that it's supposed to make. So that's the thing. I don't think you get heavy. I don't think it's hard to justify buying calls in some of these going forward now when you look at the implied vol. I mean, let's look at Micron. Let's take a look at Micron. Let's look at the options here.
Where we going?
Let's look at June. This is regular June without earnings, right? And again, this thing has earnings it doesn't have earnings for another couple of weeks. But if we just look at stocks trading 960, obviously is going to be weird. Look at the 1,000 calls. Those are $5,000, dude. I mean, those are crazy expensive. And this is based on yesterday's prices. Those are going to be like, I mean, I don't know. Those are, where's the 950? Those are going to be $6,000 coming today. Easily going to be up at $18 to $20. So it's crazy what's going on. It's super expensive. These type of names are getting harder and harder to play. The implied vol is over 100. I mean, and rightfully so. But does that mean you want to fade it? I don't necessarily, again, I don't necessarily know if you want to fade it neither. I think at some point you just have to stay away from these. These get harder and harder to trade. Micron is definitely one of them. And it's really not that surprising when you look at the moves that it's been making for the last several months. This is really not that surprising. SanDisk is another one. SanDisk, I remember when SanDisk was trading 700. I was like, this stock is easily going to be trading 1,000 if we keep doing what it felt like we were going to do. And sure enough, I mean, this stock is moving in $100 increments now.
Remember when you were thinking that all the way back then on April 12th, when it was it's doubled in the past 5 weeks.
Yeah, I know.
It's not a small company. That's what makes this. That's what makes it so interesting, because I could make I'm now putting on like my CFA charter holder hat. I could make a cogent argument, as I feel like I've been making for the past month with Ilya, that these stocks are value stocks still, that you have this interesting combination where they're operating like mega cap tech growth and value all at the same time because of the valuations that have been attached to them, thanks to the historical perception about the cyclical nature of the semiconductor industry. And if we've broken out of that mold, where all of a sudden the underlying demand for building out global compute has destroyed the boom bust cycle, and it's just boom. I don't just boom, but there's strong underlying demand persistently moving forward. That changes the valuation structure completely, because you're putting these companies in a similar stratosphere as national security or energy security policy, where there's going to be a ton of turnover, obsolescence every 2, 3, 4 years. You need more data centers, you need more build out, you need more compute, you need more compute to get done what you want to get done. I'm not saying that they're going to make money perpetually forever. Ilya thinks that my attitude towards this is, irresponsibly bullish.
Callous.
Arrogant. Describe it. But I'm trying to square in like a response manner the price action itself. Quantian points out 20% up ex earnings. That's not early cycle kind of activity. People are chasing here. But Micron still has a forward PE of 9 as of the market close yesterday. That is not a stock that is overvalued by any stretch of the imagination if we are merging into a new type of regime here, Jamal.
Yeah, I would say that, but at the same time, I don't think PEs tell the whole story here. I mean, I think looking at volatility, right? Look at that vol. That vol is pretty high, and I don't think it can. I don't think it can sustain being over 100 vol for that long. I think at some point something changes. That's the thing that probably scares me more than anything.
So I think from a positioning standpoint right now, the environment is continuing to favor, right? If we get through yesterday, we look at today, define risk, bullish exposure, and a handful of these AI names. If there's an opportunity to buy dips, as a momentum person, my inclination is keep putting coins into the machine until the machine stops spitting out prizes.
I agree with that.
But relative strength trades focused on memory, networking, cooling, power demand, bottlenecks in the system. Last year, it was the GPUs. Now it's becoming or moving down the line. We've solved the GPU bottleneck, we think, to the extent that we have to worry about the next one. Where's the next bottleneck after this? Will it be in battery storage? Will it be in energy itself? Transmission in the United States is a huge problem. We don't have enough transmission lines built. Refused to do that appropriately over the past 10 or 15 years. We certainly don't have enough base power load to do what we need to do without pushing up electricity costs for consumers and businesses alike, which we can look at, the CPI data has it, Jamal. In counties with data centers that have been built in the past 3 years, inflation is running about 7% higher than the national average. And that's not great for people. So we're going to have to build more power along the way. Does that mean we're going to get nuclear? Should we be looking at Oklo and SMR and those names? Like, where's the next bottleneck? But chasing this is going to be difficult. It's tricky. It's scary. No one wants to buy a stock that's up 15, 20, 30% over the past week, over the past month. That does not speak to the contrarian nature. But then again, the markets sometimes give you things, and you have to keep taking what the market's giving it to you.
Well, I'll tell you what, just look even at just a quick snapshot of this screen, and I'll tell you why it's not. I love the momentum play. You know that. I really do. But it's not fully sustainable. When you look at these, just look at the IVRs on the screen. Micron, 87, SanDisk, 70, Intel, 81, Qualcomm, 98. Look at the like you said, you talked about the indices. Look at ES, look at NQ, look at those IVRs. And they've steadily been above 30 for like the last several months. We already talked about Bitcoin and Ether, and look at those IVRs. Of course, it's very low because nobody cares about that right now. But you look at the currencies, similar deal. Implied vols are pretty high. So there's a story being told for sure. And I think while it's hard, it is hard not to chase, but I think you sort of have to at some point take the hand off the wheel a little bit and just like, you know what, and park the car for a little bit. Like, I'm not going to drive. I might have a couple of things on, but I don't want to get too heavily involved in this, even though this is the area, semis and tech, if you will, that's really been moving. That being said, I mean, it's easy for me to say I'm kind of in it. I have the year-long trade and I keep moving it higher. How can I not? I keep moving my strangle / straddle higher because I don't want to be short delta. And it's hard not to because it just keeps going up every day. I didn't really think we would eclipse 30,000 in the way we have, but boy, have we ever, and we just keep going higher. So I don't know when it stops, but I think at some point you have to either tamp down risk and just see what happens from here on out, or be out altogether. One of the two. I think it's hard to fade the upside because it's just moving that strongly right now.
I think that's right. I mean, if you're trading this, you're either on long, but you're not calling it top. Calling it top, it's very appealing to be the hero, but there's no hero wall around here. Jamal, I was looking at whether or not this is overextended, right? SMH being overextended is a conversation that lots of folks are having right now. One way that you can measure that is by taking the distance of SMH from, say, its 1 month moving average, which is the yellow line here on the chart. Currently, it is 10.88% above its 1 month moving average. I'm interested in that because throughout the rally since the end of March, beginning of April, whenever we've seen SMH move more than about 10.5% above its 1 month moving average, the rally has slowed down, taken a breather for a day or two, and we've started to enter that territory again. The other point that I wanted to bring up with respect to that was how far it's above its 200-day moving average. A few weeks ago, back on May 11th, we had reached a point where SMH was trading more than, let me double check my number here, 55.6% above its 200-day moving average. That was the most it had ever traded above its 200-day moving average. Today, it's 56.7% above its 200-day moving average. So it's eclipsed the previous high all time. And when we got to that all-time high, the market basically through yesterday had done nothing for 2 weeks. So it's getting a little long in the tooth again, is what I'm going to say here. Mm-hmm. If there is a dip, it's a dip that I'll be looking to buy. But it does feel like we're now back into that heavy territory where on the trader part of my brain says, I want to get in on this, but I need to see a pullback first. The investor part of my brain says forward PE of 9, don't worry about anything if you want to keep allocating to it. But in terms of the next rhythm and dance step in this little routine, it does, laying out new long capital here today, to me, is a little bit difficult endeavor. I'd rather buy SMH again on a pullback to its 1 week or its 1 month, now that we have this overextension, if you will.
Yeah, I mean, I think that's the way to think about it. I mean, God, you look at this, you look at EWY, similar chart, obviously, because of what's going on in Korea and obviously the effects, the knock-on effects of a lot of these tech names. I mean, these things look the same, and the implied vol is just as high. I tell you, Chris, I mean, look, I love the story that's you're painting here as far as what's going on with PEs, but as an options guy, I just look at these expected moves and I'm like, these are pretty darn high. And it makes me a little bit nervous.
Can you put that into plain terms? What is when you see an IV index, IVR at 92.2, when you're looking at the raw volatility, why does that scare you so much?
Well, again, let's go back to Micron, that 92 IVR, but just the raw volatility of, I mean, anytime something is, what is it? Let's go to the trade tab. Is the actual regular implied vol. I mean, over 100. I mean, anything over 100 is high. I don't care if it's a biotech or whatever the hell it may be. You see over 100 vol, that's pretty darn high. And just look at the way the implied vol is looking in the near term. Like forget the 1 day or 2 day. Let's go 115%, 108, 105, and then it thins out, starts to get down into 90s and 80s. That's backwardation, right? Strong backwardation. Anytime we kind of see that, there's obviously a reason why. There's a lot more going on in the near term than further out. But that's high, man. That's really high implied vols. I mean, I don't know how else to say it. I mean, go to NVIDIA. Let's go to NVIDIA. I mean, these things are just the way that they're moving. Again, this is a lot more. This makes normal a little bit more sense, right? Even though this is NVIDIA and this is obviously the name that launched 1,000 chips, if you will. But look at it's in the 40s, and further out, it's higher than the nearer term. I mean, this is kind of what you want to see. So any name that you see that's doing the opposite, and trust me, I'm trading plenty of them. I'm trading Intel. I'm trading Qualcomm. I'm trying to take advantage of the implied vol. But like when you see that, you see like there's a lot more going on in the near term than the back term, and this is really high implied vol. And this is moving a whole lot day in and day out. So just be careful. Those are the ones that you play in. It's a lot of chase.
It's a lot of chase, right? When you see that backwardation and the volatility for these single stock names, folks.
I mean, it's fun.
It's fun, yeah.
It's fun if you can just buy calls and like, oh my God, I'm making money all of a sudden. Like, I mean, that's awesome.
You feel so smart. You just feel you're like, oh yeah, I've outsmarted the market, and the market then turns around and It's like, you want to buy silver calls up at 118? We'll teach you a lesson. We'll teach you a lesson. Time for your tuition, Mr. Vecchio. Time for your tuition.
Actually, you know what's funny? Let's go to this trade tab. I'm curious. What do these June calls look like? These June, let's do 130, 140s. You know what's crazy is like, I mean, those are expensive, but those aren't nearly as expensive as some of the other names that we're talking about here. Like, but those are expensive. I mean, looking at like, no, look, I'd be the first to tell you I'd be interested in buying upside calls and names that are moving a lot, but these are really kind of expensive at this point. I mean, they are. Let's look at Marvell. Marvell has earnings, right? Tonight. For those who are playing Marvell earnings at some point. Say you want, let's look at the 2 days. I'm just curious. Stock's trading 219 now, or 208 as of yesterday. Oh, geez. 10% move would be 220. I mean, look at that's expensive.
Well, 220 right now, pre-market for what it's worth.
Yeah. No, I was just saying if it was 208 yesterday and had a 10% move, that'd be at 220, 230, $7. I mean, I'd much rather pay $2 and change for those. $7 is jacked. I mean, it really is. What does the calendar spread look like? 230, 2 day versus the next whatever expiration.
230.
Yeah, sure. 230, and then what's the next expiration? 2 day versus what?
It's giving me it's
9 day.
Do
the 9 day. Yeah.
Let's get rid of you. It automatically set me up at the.
Yeah. See, it doesn't. See, we need to have the Jamal Chandler strat. You know, like the 2 day versus the 9 day, 3 day versus whatever. 230s. And look at that. They're opening new strikes today. I mean, wow. They're opening new half strikes in here. There's top signs, and then there's that, folks. Like half strikes, seriously? Wow. That's crazy.
In hindsight, when they made those, like, what were those, the mini micro gold futures contracts or the silver futures ones? Yeah, back in January.
Yes.
It's one of those high. You mentioned that, and it seems like tongue in cheek that you bring that up, but I remember December 2017, our parent company became the first company to start dabbling with the CME futures in Bitcoin.
Yeah.
And that marked the top in December 2017.
Yeah. I mean, it's tongue in cheek, but you and I both know we've seen these type of things before. All of a sudden, the fever pitch is just so high that you're introducing new ways to get exposure. And that's usually not far from kind of a top.
That is usually, people are trying to squeeze the blood out of the stone. Like,
and as somebody who believes somewhat in this story of what's going on with tech, like I believe in what's going on. You look around and everything that we're using involves more and more chips and more and more capacity and all that. So I don't think there's anything wrong with the story. It's just the way the names are moving right now. If there is a bit of a pullback, there's still time for a decent pullback, Chris, is really what I'm pleading for. There's still time for a decent pullback because we get another 10% in the index and another 25 to 50% in the names. Upside, it's going to be ugly, dude, when the pullback does happen.
It will probably.
And $3 for this call, for that calendar call, is expensive, by the way. Wouldn't play it.
First pullback we get, Jamal. I mean, if we had a down day tomorrow, like minus 5%, 10% in some of these names, first blush, you got to buy it. That's it.
Yeah, I would agree. And, people are going to act like the sky is falling when it happens. Oh, this is it. We knew this was going to happen. But, I think that would be a good
because
thing.
Everyone's leveraged up at the highs. And so a little bit of a pullback is going to freak people out and everyone's going to melt down.
Yeah.
We have to work through all this call skew too. That's been, at the end of last week, Jamal, 30% of stocks in the S&P 500, their calls are more expensive than their puts. And that is, again, one of those signs people are, volatility tends to rise at the top. How come stocks are rallying, but the VIX is going up? People are chasing. So, the bulls have it right now. And we're probably going to see this play out over the course of the day. S&P 500 early quote 75.52 up by 15 points here. We're a little bit off the high. NASDAQ still up by 191 points, 30,264. Your Russell up by 0.5%. That's a new high here as well. So really, no matter how you break it down as we look to the futures market, if it's small cap, if it's mega cap, if we wanted to look at QQEW, obviously not a futures quote, but something from yesterday, equal weighted NASDAQ closing at an all-time high, there has been improved breadth. There has been improved participation, improved leadership. Number of stocks above their 20-day moving average, their 1-month average has gone up from 30% to over 56% over the past 10 days. So there are signs here that this is not just the semis now. There are other things that are jumping in.
Well,
Jamal.
there is also the number of stocks above the 50-day moving average. That's still only about 55. And let's look at Walmart. Let's look at Costco over the last week or so. I just noticed this morning. A bit of a pullback here in some of these names. Utilities are also very underutilized, which I don't blame you. I mean, who the hell wants to be in utilities right now when you could be in tech? So there are other areas that are underserved. And when we do, because it's not an if, when. I just don't know when, but when we get a rotation, that's exactly where they're going to run. They're going to run into the names you just mentioned.
Recreating the S&P 500 through first principles. You own too many semis right now. Buying some utilities and energy may not hurt if you want to maintain your semi exposure. Just given how we've seen these things do their dance. But Jamal, utilities last year, there was a point when they got that big kick to the upside, when all of a sudden, this AI revolution's happening and we don't have enough power supply to effectuate it. Jamal, we're going to take another brief break here in a few minutes. But before we get there, we are nearing the end of May, which means June 4th is right around the corner. June 4th, of course, would be Liberation Day for traders. Liberation Day. Laura, can we put that up on the screen? Is that allowed? You want to put that up here? Yeah. PDT rule, pattern day trader rule. After 25 years, it's going away. That $25,000 minimum equity requirement is now out the door. This has been an important part of how the market's been shaped over the past 10 or 25 years. Now, don't even need to ballpark it. A lot of folks, myself included, went into futures trading because we couldn't trade the S&P 500 through SPY the way that we wanted to. You're forced into different accounting, different long-term capital gains, short-term capital gains, accounting issues. You're dealing with wash rule trading in a number of stocks. So why even bother? You go over to futures. Now this restriction is gone. It will change how traders have the opportunity to express themselves in the market. And more importantly, they can trade the product that they want based on their account size. No longer being forced into something that they never wanted to get into in the first place. From all, I think PDT going away is going to be great for people's freedom and ability to make the decisions that they want to make. So head over to Tasty Trade, head over to tastylive, learn more about the PDT rule falling apart and us going into an era where traders can make their own decisions like adults.
No, it's going to be great. And I would say for people, don't use it as an excuse to just day trade. I mean, use it for what it's intended for, to be able to eliminate risk and help yourself in some situations. So I think it's going to be great.
It should be helpful long-term. And more importantly, Jamal, we're taking a brief break here. We're going to be back in a few minutes' time. After this, what do we have coming up next here on the show? We've got a bunch of good things planned. We're going to go directly to Options Jive. Finding a trade doesn't have to be this hard, Jamal. See you in 90 seconds.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
It's options. Jive.
Jamal, we're back about 30 minutes to opening bell here, which means it's as good of a time as ever to go over options jive, 9 Eastern, 8 Central time. So production, I think we can just get right into it, right? Finding a trade doesn't have to be this hard. Jamal,
I like
do you
this
find
one.
do you find yourself sitting sometimes in front of the market going, what do I do? How do I even approach this?
Absolutely. I mean, there's plenty of times, even like right now, like if you don't want to trade tech, what else is there to trade? It feels like. So that's why I kind of like this one. I mean, I think it goes through some ideas and some tools for you to check and some checklists to go down before you make a trade. So I like it.
Right. So, I mean, for a new trader and even for experienced traders, finding the trade that you want to take can be difficult. It can feel overwhelming and you box yourself into paralysis by analysis sometimes. So what you need to do, and something that Jamal does, something that I do, is you just need to find a starting point, if you will, a jumping off. So let's talk about how you streamline this process, build out your trading checklist, and get from 0 to 1, right? How do we actually make the trade? We can go to the next step here. Jamal, we talk about finding a trade doesn't have to be this hard. The first step in finding a new trade is to look at your overall portfolio delta and portfolio theta goals. You frequently talk about delta and your beta weighted delta in your portfolio whenever you're adding a new position.
Yeah, and I'll tell you, this is interesting in that I have 2 accounts that I trade regularly. So that's why this is really fascinating, because I do trade them a little bit differently. And some trades that might fit in one portfolio, say like the show account portfolio that I'm always showing the trades, might not fit in the other long-term portfolio that I'm doing. So I think this is a good sort of guideline to look through at your deltas, look at how you want to position your deltas, particularly beta weighted deltas. And I would say theta too, to some degree. I mean, I don't look at theta as much as I used to, oddly enough, but just being able to sort of decide, does this trade fit in this portfolio and this is what I want to do? I think these are great sort of parameters to look at.
Yeah, and I think number one right there, it's the bottom left, leverage to SPY. Are you taking a bet on the market? Are you betting against the market, right? If I'm putting something on that it looks really good, what are the implications here? We talk about TLT, for example. Oh, bonds look really fantastic. Well, they've been trading against stocks recently. So what does this mean broadly speaking? Am I adding more eggs to the basket, less eggs to the basket? You want to limit your risk of ruin, of course, at the end of the day. And so you don't want to add more leverage to an existing trade unless it's intentional, of course, but you don't want to ultimately put a trade in your basket and say, wow, how come the market is hurting me so much today? That doesn't make sense. Well, now you're over leveraged to a particular idea, a particular factor. I'm with you. I don't look at portfolio theta as much as I do portfolio delta on any given day, but I do consider the fact, like, let's say the trade is 45 in and it's costing $450, right? And if I'm long the market, if I don't, if it doesn't work out, what am I paying here? Well, this trade cost me about $10 a day. It helps me conceptualize things in those terms. And I like using it for the way that I approach the market. That's how I incorporate theta. But the delta to me is the more important of the two. They're both important, but the delta to me is the more important of the two. And once we have figured out, Jamal, when we have examined our portfolio delta and portfolio theta, if this is the appropriate trade to put on, we can go to the second step here, which is finding the trade using one of the watch lists that we can put together here. We have a default watch list that's on the platform. There's also various sorted watch lists here. If you're a volatility seller, for example, you can go to the platform and click on IVR, and it will sort the watch list by the highest volatility product. And vice versa. If you want to say, oh no, I want to get a cheap vol play here, I want to get some upside, I want some high convexity, I want to get a lotto ticket, right? I'm going to get a out of the money call. Where's the vol cheap? Where can I express that view in the most cost efficient way possible? You have the ability to do that here with those watch lists.
Yeah, and one of the things that I actually like to do a whole lot is basically use the S&P 500 watch list, and then I'll usually sort that by market cap, which I do a lot. A lot of my trades are based off the market cap, mostly because once you do that, you're basically if you're dealing with higher market cap names, you're dealing with very liquid names, and I always want to be in very liquid names. So I'll usually run through that, and I also have IVR on that list, and I'll just a lot of times I'll go down that list sorted by market cap, look at IVRs, maybe what's high, maybe possibly looking at selling vol in something because it's above 30 IVR, as long as there's no earnings, which is kind of hard to do probably around. It's starting to get a little easier to do now, but that's usually how I'll sort down a list.
That's exactly what I'm doing here as well. We go to step 3 here, and this is where you really get into the weeds a little bit. We're going to check the options chain at this point in time. There are 4 things that you really need to be paying attention to here: liquidity, volatility levels, IVR level, the earnings and events, whatever binary event risk is coming down the pipeline, and then the DTE selection. How long are you going to be staying in this trade? In terms of liquidity, Jamal, the tight bid-ask spreads that you see on the screen, those are going to mean better fills. You want to look for the penny-wide markets and high open interest as your target strikes. When you and I talk about this on Futures Power Hour, we often go into some of the commodity futures. Maybe it's copper, maybe it's silver. And we have these ideas, but then we look at the options chain and go, oh, there's only one contract open interest here at the strike.
Right.
Okay, well, I could hotel California myself into this. I could get in. I'll never be able to get out. And so you have to keep those things in mind. Liquidity has to be the primary consideration when you're placing any sort of trade. Just because you can buy it, you need to be able to make sure you can sell it and vice versa.
Yeah, I think I kind of inadvertently talked about everything on this screen in the last slide. But again, if you're looking at high market cap names, most of the time liquidity is already taken care of. Of course, we have the star thing on the platform, so you can see how many stars it has. IVR level, again, looking at high IVRs and trying to do. If I'm selling something, it's going to be in an area where it doesn't have earnings, usually with a little more than 20 to 30 days. But yeah, I mean, this is part of the checklist.
Yeah, so in the earnings and the events, if we have something like an earnings release, we have Dell earnings coming up. You talk about Micron and worrying about finding the strike, the expiration cycle within the next earnings release. I think that's June 24th is the next earnings release for Micron. So you don't have to know what's coming. Some of these events don't matter, right? CPI matters some months, it doesn't matter other months. Non-farm payrolls matter some months, it doesn't matter other months. Sometimes the earnings don't matter. AppLovin, APP, they had a great set of earnings recently. They're making a ton of money right now. You wouldn't know it by looking at the stock. But the point is you have to have awareness, situational awareness of what's coming. So all of a sudden the market doesn't just have one of those big moves against you. Why did this occur? Oh, there was a big data set due out this morning. I totally forgot about that. I'm trading industrials and it was the PMI report for industrials and here I am. IVR level, Jamal, I don't think this is going to be new news for anyone here, but we have a very simple mindset. When volatility is very high, we tend to look for it to go back down. Why? Historically speaking, volatility is mean reverting. So when you have a high IVR, we like to sell the premium in these parts. And on the flip side, when you have low IVR, you consider buying strategies or even just sitting on your hands. IVR is going to tell you if the juice is worth the squeeze here. And so I think about my own position right now in natural gas, Jamal. I'm long, but I'm long via out of the money call spreads here because they're cheap, because they don't cost as much, because the volatility is down. So in an event where, you have your typical IVR in natural gas over recent years, 50, 60, 70, buying the calls is not the most efficacious way to express that long view. You could actually just get short puts or short put spreads and have a very similar risk to reward. But right now with a low IVR, I'm thinking about those buying strategies, a different way to express that view to take advantage of the low vol.
It's a fascinating environment when you see the low IVR in certain areas that typically aren't. We mentioned cryptos earlier, we mentioned nat gas, just kind of fascinating, something to notice.
And I suppose we can round this out with the DTE selection. Around these parts, we talk about 45 in, 21 out. That is for a reason. 45 DTE sweet spot balances the theta decay rate against the gamma risk, and it gives you plenty of time to manage your trade. If we're talking about 45 days out from now, Jamal, we're looking at a trade, that would go July 11th, July 12th at this point in time. A lot can change between now and July 11th and 12th. America's going to turn 250 years old between now and then. it gives you time to actually operate in the market. And if something occurs, the longer duration means, yes, your convexity to the upside may be limited in the short term. But if you do find yourself on the wrong side of the market, there's probably going to be an opportunity to get out at a smaller loss. Very different dealing with a position that goes underwater immediately that has 60 days left to expiration versus one that has 0.
Very much. Very different profiles.
Jamal, we can keep moving here. We talk about finding a trade doesn't have to be this hard, and we're working our way through our checklist. The 4th step is finding the appropriate strategy to fit your directional bias and your time requirement, your theta requirement here. Jamal, there's 3 different outlooks, bullish, bearish, and neutral. And within each one, we have 3 different ways to express those particular perspectives. Short put spread, short put or long call spread for the bulls, opposite for the bear, short call spread, long put spread, and a broken wing butterfly. And then for neutral, short strangle, short iron condor, or calendar spread. Around these parts, we call you the king of calendar spreads out in Chicago there. Why do you like calendar spreads so much as your preferred neutral trading strategy?
Good question. I actually use them a lot for earnings, and I didn't used to like them at all. Again, traditionally for a calendar spread, it just means that volatility is a lot higher versus in one expiration versus another, whether you're buying the calendar spread, meaning you're long the further out option, or you're selling a calendar spread. And that just doesn't happen as much anymore. I know we saw some examples of that more recently, but there's a reason for that. It's not because it's wrong. And people used to actually put these spreads on because something was seriously wrong in one expiration versus another. I have found a different way to repurpose them. I go, say a stock is trading 200, as we looked at earlier when we looked at Marvell, I'll go further upside. And that way I'm not necessarily, I'm selling the further upside to buy further out upside, but I'm also sort of manipulating the strike structure, if you will. So that's why I kind of like doing those. But look, besides those for earnings, I mean, you can, right now, like I think a good example of a short put play would be in Walmart. The implied vol is up there. It's kind of high. And there's no earnings. It already just had earnings. So like, and it's a name that I think is kind of fairly trusted. It's not, some biotech name, or it's not a tech name that's sort of extended in the time being. And so I think that's an interesting play for short put. Short strangle just really depends. But again, you want to get outside of the expected move on a short strangle, right? And so those are plays, and I think there's plenty of plays where the implied vol is sort of elevated. One of them I'm doing in GE right now. I don't know if it's successful, but I got a short strangle in that one. But I think, the thing that people do struggle with, there's so many different strategies. How do you determine which way you want to deploy it? And for me, a lot of times it's just based on what's going on in the sector, what's going on in a specific name, or what sector that name might be in, and how volatile that name is or is not. That helps me determine how I want to play it.
Each strategy is going to have a different characteristic to it, right? As you alluded to. For a short call spread, for example, it's a defined risk, bearish to neutral strategy where you sell a call and buy a higher strike call for protection. You're collecting a net credit up front. The delta profile is negative. It's usually just modestly bearish, often between negative 0.1 and negative 0.4, depending upon the width and the strike placement here. It also yields positive theta. The spread benefits from time decay as long as price stays below the short strike. So the risk here, it's a maximum loss capped at the spread minus the credit received, and the risk increases as the underlying rallies toward or through the short strike. But if you look at something like a short iron condor, it's obviously very different. An iron condor combines a short put spread and a short call spread. It's a neutral risk-defined premium selling strategy designed to profit from low realized volatility and time decay. So your delta profile, unlike the call spread, this is near delta neutral initially, probably going to oscillate between plus 0.1 and negative 0.1. And the theta profile, though, is strongly positive. The position benefits from time decay across both sides, the call and the puts simultaneously. What happens here, your loss is if the underlying market makes a large move outside of the expected range. So your risk is capped on both sides because of the long protective wings. But again, it's a different way of expressing a view in the market. So depending upon what you're looking for, are you looking for positive theta, negative theta? Are you looking to be delta neutral? Do you want positive delta, negative delta? You have to pick the right strategy out of the toolbox. One thing that I see a lot of new traders frequently make a mistake about, and I did this myself, you think you have something. You think you figured it out. You've got your strategy that's working frequently a lot, and then the market regime changes. And so instead of changing your strategy, you have your square peg and you now are trying to jam it into this triangular hole. And you're like, how come this isn't working anymore? You have to recognize and read the market conditions first. Oh, does this require a hammer or a screwdriver? Okay, not everything is going to be a nail. So short iron condor is not going to be the appropriate strategy for every market condition, Jamal. You have to be willing to learn what these do. You have to be able to learn what their delta profiles, theta profiles are, and pick the right one out of the bag, depending upon where you find yourself.
Yeah, as we traders who have been around a long time always say, everything works until it doesn't.
Everything works until it doesn't. I think that's exceptionally well said. And you got to adapt. You got to evolve. So let's go to the fifth step here. Sizing it right. Position sizing and risk management. Look, this is why the product choice is so important. Why I brought up the futures with the PDT rule. Trading MES or ES may be too big for a lot of folks. They may be better suited going into something like SPY. The idea here is that you have your trade idea in your head. What is the most appropriate way to express that view? You have to find the right vehicle. You also have to have the right amount of risk on. Taking, in my view, more than 0.5% of 1% of risk per trade, you can put yourself on a path to ruin very, very quickly. We see here, in terms of the research behind portfolio allocation and broadly speaking, trade management theory, allocating about 1 to 5% of net liquidity value per individual position, that is the top level of risk you want to take. If you take 5% risk for your overall portfolio in every single trade, you can have 20 trades in theory, Jamal, right? Before you go bust. I like to keep it to 0.5% or 1% because I like to afford myself a lot of breathing room for being wrong here. As someone whose winning percentage is below 50%. And granted, I'm okay with that because of my own style, being a momentum guy. I buy dips, I ride it up. Eventually, it's not going to work out. You have to have your winners bigger than your losers. But you have to make sure that your risk is constrained. Any given trade, all of a sudden you find yourself 10% in the hole. You're taking too much risk. You're using too much leverage. You have the wrong size on. It's a double-edged sword.
I agree. This is arguably the most important thing right here, the sizing of trades. And this is something that I didn't necessarily do that well for a long time, even after being a professional trader. I mean, I traded at a firm for about 1.5 years. I traded my own account, and there's plenty of times I was way too big because I was still thinking like a prop firm mentality and putting on, 50 lots, 100 lots, and positions that maybe might have been, well, they were definitely too big. But in my mind, I was thinking about it from a premium, right? If I buy 2 calls, 100 of them, I'm buying, $2,000 worth, and I'm fine with that. Or 20 grand worth of that. I felt fine with that given the size of the account that I was trading, which was like over 150K, but sometimes it's just too big. And it definitely was at times.
It absolutely. So we talk about diversifying across sectors, underlyings, and expiration cycles, but really you have to set your management rules for your trade ahead of time. I know some folks like Mike Butler, ruthless. You get to 50% profit target on a trade, and it occurs within a certain amount of time of the trade being initiated. He takes it off.
Yeah.
He takes the money and run. Automatically at 21 DTE, 45 in, 21 out. Doesn't matter where you are. If you've made money, lost money, you have enough time left in the decay cycle, get out, reestablish a new position, get yourself more time. Time is your friend. Time is the apex predator in the market, Jamal. If you are right, but you're not timing it correctly, you're not going to make money. And that's all this is about. It's not about stroking our egos. It's about making the money. So time matters. Preserve your time. So what's the takeaway here? We've been running through this for about 20 minutes, Jamal. Yes, we know that the world of options and the world of trading can be overstimulating, overwhelming. There are so many concepts, strategies, ways to crack this egg. Should I be a technical trader? Should I only look at balance sheets? Do I rely on AI, only algorithmic? Am I a quantamental person? That was a phrase they used for a long time in the early 2010s. Quantamentals. But having a process is what's most important. Figuring out the process that fits with yourself, your personality, your work cadence, your sleep schedule, your stress levels, right? You will have to figure that out for yourself. You need to take that, personality quiz, if you will, and see what jives. I'm an emotional person, Jamal. I think a lot about politics. I can't scalp. I interpret the information wrong. It leads me to make bad decisions. So in recognizing what works for me and doesn't work for me, I've become a better trader by stop doing the thing that I'm bad at. And recognizing that within your process and refining your process repeatedly over time is necessary to have sustainable positive results. So to help make the next time you look for a trade more efficient, work through your checklist. Think about your portfolio deltas and thetas. Think about the overall composition of trades that you currently have on. go through your watch list. Go look at the options change for liquidity, the events that could be coming up, earnings, the IVR levels. Think about your theta cycle. Think about how you want to approach the market, bullish, bearish, neutral, and then size your trade with the appropriate product correctly. Don't trade ES nakedly. If you have a smaller account, if you have $10,000 account, you shouldn't be trading ES. If you have $1 million account, you can probably do more than trade single lots of SPY to effectuate your view. So pick the product appropriate for your account size, not the other way around. Jamal, you have the final word here. As you build out your process, what's been the number one thing that you've learned to do or not do over the years?
Trade too big. Again, I think that's why that fifth step is so huge. Paying attention to your trade size versus the size of your portfolio, I think, is arguably the most important thing. And so from there, you can easily determine, look at expected move. What's going on with the name? Does it have earnings coming up? If not, maybe this is one where I want to sell vol in. Why do I want to get long here? How am I going to get long? Do I want to do a diagonal? Do I want to do calendar call? Is there earnings coming up? Based on all those things. So you do have to, there's a lot to think about when you're putting the trade together. But I think going through this checklist, and even bigger as you get further down the line, learning yourself, like you mentioned, learning what works for you and what doesn't. I think those are the big things when it comes to putting on a trade.
Jamal, we're going to take a brief break in a few minutes' time. But before we get to the opening bell, there has been a little bit of oscillation here in the market, so to speak. Laura, can we go back to the at least my chart real quick? Crude oil prices, which had come down fairly sharply at the start of this morning show from about 90.5, dropped all the way down to a low of 87.80, are back to $89.45. That doesn't seem like a lot, and quite frankly, I don't think it is a lot. But when you look at what's happening with the stock market here, you do see that as oil has rebounded a little bit over the past 30 minutes, an hour or so, you're getting that pullback here in stock. So oil up, stocks back down. I know we can't escape this whole thing.
Thank God. Gotta have we gotta have some sanity here in the markets, because we cannot have another day where we go up 30 to 40 handles on the ES and almost 250 handles in NQ. We need a pullback. We need a breather. We need a chill day.
We need a chill day. It could be a chill day. Yeah, you and I are in air. Save the craziness for Nick and Tony when they get back. We don't deal with that right now. I'm just trying to find a catalyst here of what's been going on in terms of the market. I do see that, according to Reuters, Iran State TV said Tehran had obtained a draft of an initial unofficial framework of a memorandum of understanding with the U.S.
You're still believing this news? It doesn't matter. Yes.
I don't believe this news. It's all fake.
It's all fake. All this, they're coming a memorandum of agreement. They're going to... Bullshit, dude. I'm telling you, I've read the least amount of news pertaining to this war in the last several months, and that's actually been really good for me. I'm telling you, it's ridiculous.
Are you telling me that me having a fire hose of fake news being pumped into my brain 24/7 on Twitter is not good for my mental health?
Well, I'm not saying that. I don't think it's good for your trading health, is really what I'm saying.
No, it has not. But we do have a market here today, Jamal. Volatility is up a bit. VIX, as we get ready for this open pre-market, no longer down below 1680, back to 1692, about 9-cent drop. Jamal, you have the final closing thought here before we take a brief break and get ready for that opening bell here in New York.
I hope it's somewhat of a calm day. I really do. I hope we don't have another day where I hope Micron turns around. I hope Micron doesn't go straight moonshot to 1,000. I really don't think that's a good idea.
Jamal, we're going to get back here. We're going to take a look at some opening trades. I have some puts to sell in oil here. We're going to talk through how we can take advantage of this oil move to the downside, even if we're not going to be directional bulls about it. Tasty Live programming back in, we'll call it 3 minutes, and then we'll get ready for that opening bell. See you soon.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. You're watching Tasty Live. This is the opening bell. I'm Chris Vecchio. He's Jamal Chandler. Tony and Nick are out today, so we'll be driving the ship for the next 90 minutes before Liz and Jenny join us. Jamal, we have some big moves pre-market here. Opening bells in less than 2 minutes time now. S&P 500 in the futures market currently trading in at 75.43. That's exactly where we are. 75.43 here in the market. It's been a pullback of about 25, maybe 30 points now over the past, we'll call it 40 minutes of trading or so. We hit a high of near 75.70, just briefly eclipsing the all-time high, 75.69 established earlier this week. But we have now since pulled back here, 75.43. Your NASDAQ, which has been your leadership group as we talk about a market going into the open, Micron, SanDisk, all these names charging higher. We're getting that reversal here this morning. NASDAQ was up at a high of 30,379. We're off about 200 points now to 30,197. Still 0.4% higher. Your Russell 2000 coming in only about 8 points higher now, and that has reversed off of its high here as we make our way into the U.S. trading session. Jamal, a quick look at the bond markets ahead of the open. ZN, again, another reversal there. We talk about that move in crude over the past 40 minutes, reversing and bouncing back up about $1.50. Bonds were trading higher. They have since reversed and started to move a little bit lower here. Same thing for those notes, but here we have bonds. Likewise, very similar price action going into that open. Crude oil here is still down 4.5%, but off the lows, was below 88, now at 89.66. You have gold prices, which are down 2.2%.
Yeah.
Dear God, do the
at.
gold, do the metals look so sad and pathetic these days, Jamal? Gold, silver.
I was looking at all these commodities, actually. Gold, silver, oil. You look at wheat, corn, the commodity super cycle. Yeah, there you go. Pull that up because that's where it's at. Commodity super cycle appears to be over for the time being.
There is something that's occurring here in the price action. If it's DBC or DJP, which are both commodity tracking indexes, they have seen a meaningful deterioration here in recent sessions. But with that, Jamal, we get our opening bell. And with that opening bell comes this move higher here in stocks. It's a gap open higher, ever so modestly here for SPY, currently trading at 70.67. We're going to pop over to one of those watch lists on the platform. Check out the liquidity and the high options volume. No surprise here with those opening prints, Jamal, and given what we saw overnight, it's going to be your big index name SPY, Triple Q, SPX at the top of the leaderboard, as is so often the case around these parts. But we have the usual suspects here in the single stock names as well. NVIDIA, Tesla, and Micron right now, running to the upside. Micron, that big mover pre-market, now up to 939. It's another 4.8% higher here, Jamal. Tesla, I do want to talk about here because there is a headline right now on CNBC.com. Tesla and SpaceX may be folded into one company.
I've been hearing that
Jamal.
a lot.
Yeah, this has been one of the stories that you've missed out on over the past few weeks while you've been, taking your time off here. Well earned. June 12th is when the SpaceX IPO comes down the pipeline.
Well, that's a great day because that's my birthday.
Oh, why is that? Oh, well, happy birthday.
Thanks, buddy. Hasn't happened yet.
How much of SpaceX are you getting for your birthday?
That would be a great present, I think. At least it seems like. Look, it's an interesting. I don't know where this idea is coming from. This idea of them merging into one. I don't know if this is. I don't remember if Elon has mentioned this in the past. I really don't remember. To me, this sounds like. Remember when Tesla was supposed to be getting taken out at $420.69? Is that what it was? That's kind of what this sounds like to me.
Very specific number.
Yeah. And for whatever reason, it didn't materialize, right? That's kind of what this sounds like to me. I don't know. I don't know if there's any basis for this at all, but I do think obviously there's a lot of excitement around the IPO. You look at these other names, the Rocket Labs of the world. I don't even pay enough attention to the space to know the other names besides Rocket Lab. That's just the first one that comes to mind. But look at these moves more recently. This tells you the excitement coming up for this IPO.
Rocket Lab.
You got something in here?
I did last year, ever so briefly.
That's how it goes, though, right?
When it's trading around $20.
That's how it goes, right? I mean, these names. Iron. I don't think that's not in the same space, but I just think about these sort of names that have sort of been recently popping off. This is one of them. Iron, NBIS. These type of names. I mean, it's been.
And quantum computing has gotten a little bit of a lift here too in recent sessions. Don't want to ignore that.
Yeah. The last week when I was on again, I actually traded a Strangle and Ion Q, I think, because that vol kind of popped up. But I don't know about this rumor you mentioned. I don't know. I don't see why that makes any sense, honestly. I mean, help me understand it. Does it make sense to you?
It makes sense. It's a good question. If you operationally, I think SpaceX and Tesla share several key employees. Like there are senior engineers who work for Tesla that have helped SpaceX do things, and then there are SpaceX folks who've helped Tesla do things. So they're pulling, salaries from both companies. So it's not, it wouldn't be crazy to bring it all under one roof. Would it? Hasn't Musk said that's his dream all along, to have like one mega corporation like, Weyland Yutani or something from the Blade Runner alien movies?
Yeah, I was like, why is that so familiar? Yeah. Well, I do like the idea of all one app for social media. I am tired of all these different bifurcated things. I'll be honest with you. That would be a lot more helpful.
I'm, watching I never got off of Twitter. I saw all these people flee to Blue Sky and Threads, and every now and again I go in and check and see what's going on. What sterile places. Blue Sky is like a freaking mausoleum. It's like a garden. You go in there, you look around, everything is preened and proper and nice, and nothing's really happening. And no one's really talking about it.
Yeah, I never got off of Twitter neither, for the exact reason that I don't care what people say. I just want to know who's saying it, and I want to make sure it's a verified source. That's all I care about. I don't give a damn if you say stuff that doesn't jive with what I feel. That's fine, as long as I know it's you. You know what I'm saying?
Yeah, Blue Sky and Threads. The Ayatollah didn't follow me on there, so I had no reason to move over.
Yeah, I believe. I'm sure. Well, he's never following you now. That's for sure. It's never going to happen.
Oh, someone has been managing his accounts. He unfollowed me, and I can no longer DM his old account, which is interesting.
As long as he doesn't have your geolocation, it's all good.
That's fine. It's whatever, Jamal.
What else is going on besides? It seems like I haven't missed a whole lot. I mean, tech is still teching. I've seen that pullback in the Costco's and the Walmarts of the world. This commodity super cycle looks like, I felt like this a while ago. I told you with gold and silver, it just felt like it was going to be a different trade moving forward. Boy, has that definitely been the case. I mean, they're just not moving the way that we were accustomed to them moving. So that's been a whole different vibe.
Can you talk to me a little bit about software here? I did see a question come into the chat. Is software,
sucks.
It does, but it's also, from 75 up to 92 over the past month and a half.
Well, I'll say this. This one is almost out of my realm. As a trader, I look at it and I'm like, man, these names seem like they'd be primed for a bounce. And I've had a couple of plays, namely CRM. This is one of them. Again, I've tried to stay in the larger market cap related names, and that's been Microsoft, CRM, and Palantir. Microsoft has worked out well. CRM, not so much. Palantir, same deal. I almost feel like this is definitely a question probably more suited for you, something going on with their PEs or forward PEs and names like these that are really starting to struggle. There's clearly a seismic shift that has taken place in the software names. This has been a story all year, maybe even going back to late last year. And when something is persisting for that long, it definitely should get your attention. I honestly think the positions I have in CRM and in Palantir, they're Super Bowl trades, sold a put spread to finance buying a long call spread. And I've even rolled those call spreads down because I initiated both of those positions over a month ago. They're both June. So honestly, when June is done, I think I'm tired of trying to get long software, unless it's like a leap play, but I don't have any right now. It's except for Microsoft. I do have a leap play in Microsoft. And again, talk about positions that are better for certain accounts versus others. I do have a leap play in Microsoft, but other than that, this software, these names, they have been struggling for a lot of months here, and it's probably time to throw in the towel on trying to get long these things.
I hear you on that, but these are starting to look like value plays. And you talk about, not trading in and out in the short term. Maybe it's going to be a longer term perspective. Maybe you're right there. CRM, for example, Salesforce, forward PE of 12 right now. Its PEG ratio, the price to earnings growth ratio, which that's something that I look at from time to time. You're effectively measuring a stock's valuation by dividing the PE ratio by its expected earnings growth rate. So when you're above 1, the stock is too expensive. When you're below 1, the stock is considered relatively cheaper or undervalued. CRM's PEG ratio right now is at 0.96. Its price to free cash flow ratio is 10.2. These are all relatively low numbers. So when you go back a year, this is not what you're looking at. These are all much higher. They're being valued and treated like peak growth. At an 85 IVR, Jamal, with maybe a double bottom following on down here near 162, 163. Better people have done worse things. Right?
I get it. Like I said, I think it's more possible to go further out and do a longer play. It's harder to do an intermediate term, which is what I've been doing. I've been in the May and then in the June. And, normally I would roll out to July, but I think it's time for me to chill out on those. But, a longer term play, again, CRM has never been cheaper than it is now. Not for a long time. So maybe it's a Jan 2027, maybe it's a Jan 2028 play. But I think in near term, these just kind of cooked.
I hear you. I'm going to take a look at this double bottom here, though, with a floor right near 163. I like to go just beyond support and resistance when I'm measuring these moves. And so I'm going to go to 160, 155, $5 wide short put spread here at 51 days to expiration is yielding a 3-to-1 right on the nose, risk to reward. Max loss of 375, max profit of 125. The buying power is 375. So you're looking to make a third of the buying power back at a 73% probability of profit. First off, 73% probability of profit, I rarely ever see a 3-to-1 risk to reward. It's probably closer to 4, maybe 4.5. So the fact that I'm getting 3-to-1 here, I would say, okay, what's the probability of profit? 50. No, this feels good. I like this trade. I know it's beaten down. Maybe it's the contrarian side of me that's saying we could take a swipe here. Peak software valuations are probably not coming back. We're probably not going to be looking at forward PEs of 30, 35 again.
Yeah.
But this is a company that's a going concern. It's making a ton of money. Its market cap is 146 billion. Its enterprise value is 154. It's cheap. by all standards, by historical standards right now. And that's difficult to say because of what's happened in software. And yes, IGV is up 15, 20% off of its lows. So it's not exactly like we're making a hero's call here. But there's enough here to take a little bit of a swipe and see what we can do, particularly when the probabilities and pricing are yielding what they are.
Again, I agree. I mean, this has been one of the ones that I've played. I guess what I'm saying is it's hard to imagine on a quick comeback for those who are probably getting long calls, really. Your play is probably the lot more smarter play. I think a lot of people have been playing these for a quick bounce back. In the case of CRM, this is going to bounce back above a 200. And it did for a little while until it faded. And I think people are looking for the 200, 250 bounce back. This stock is really, the sell-off has been overdone, but it just hasn't moved like that. And that's been the hard part, I think, of that trade.
Jamal, can you talk to me about, the staples? I know one of the charts that you like to share around a lot is the relationship between staples and discretionary here. Mm-hmm. What is that telling you right now?
Yeah, we kind of mentioned this a little bit at the top of the show. I mean, Walmart and Costco were kind of those staples, and you've seen the sell-off in those more recently. And it's been all about the flashy stuff, the consumer discretionary, right? I mean, those have really been strong. Although Tesla is in that consumer discretionary group, and it's not exactly killing it. But in general, when we have a bull market, consumer discretionary is going to be doing well, and that's kind of what you're seeing here. It's really not that much of a surprise. If we do get some sort of nasty turnaround at some point, you would expect people to flock to those consumer staples, and that's exactly what you'll see.
Consumer staples have not been having a good time. And one of the things that I've liked about this market is that when you look at the pecking order of, top sector performers the past week or two, it's energy, it's staples, it's healthcare at the bottom of the totem pole. And then you have the semis, the industrials, the tech, the telecom, all that stuff has been sitting at the top. So it's very growthy looking. The consumer right now is going through some stuff, Jamal. I mean, this is one of the more interesting things. So I should pull this chart for Futures Power Hour later, or maybe even for last call, because you and I are closing out the day here as well. Mm-hmm. But if you were to take a model of modeling the inputs for consumer confidence pre-COVID, and you were to use that exact model and try to retrofit it with the data today, where interest rates are, mortgage rates, inflation, yada, 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 consumer sentiment should be much higher than where it currently is. And we know it's at an all-time low, which is really difficult. If staples can't get a gust of wind behind their back when consumers are feeling the most defensive that they've ever been in history, what's the bull case here for this sector? Is it just that people are never going to stop buying toilet paper? So, there's a floor underneath names like Kimberly-Clark and Clorox, or how do you approach this? It doesn't feel like it has the love right now. When you mentioned before, everyone's piling into semis, they're going to start looking at utilities and staples and the defensive stuff naturally, organically, if they become overconcentrated.
Yeah, it's tough to get in some of those names, honestly. I mean, like you mentioned, but the ones I keep mentioning, the Walmarts of the world. Walmart, I think, is one that's really easy to get into. I mean, it has its time where it actually kind of moves like a borderline growth stock more recently. So I think that one is a happy medium. Costco, I think, is another interesting one. And you're already seeing today. I mean, look at we've slightly turned negative, and this name is trying to pop, and Costco is popping as well. So I think those are the easier ones to possibly get into. But yeah, it is funny when you mention that. That's a good call out. I mean, the difference between the economy, a little bit around COVID, and the economy around now. I mean, you would think people would be a little bit more optimistic, but things are a little bit expensive. And if that can change, maybe honestly, that could lead to a market where I think things end up sort of evening out a little bit more, as opposed to just this tech heavy environment. We've seen the 10-year yield sort of pull back. haven't been too gone to notice that pullback in the 10-year yield more recently, and I think that spells better things for the market ahead.
Jamal, you're looking at, you brought up Walmart here, and there's part of me that says, oh, that looks like a double top, and then there's part of me that says we're still in an uptrend and we're just coming back to trend support here. So following a pullback from 135 down to 119 and change, that's maybe something that's worth fading out here. I'm going to just take a quick little peek down here at 51 days to go. What does a 110, 105 look like? The pricing here isn't fantastic. 115. It's not bad. 115, 110, 67% probability of profit. Again, risking less than 3 to make 1. Similar type of trade setup that we had before. You'd be calling the low. You'd effectively saying that the uptrend's in place from last April. Is that difficult for you to, digest if you want to make that bet? I want to sell. It's a 40.5 IVR short. It's not a 90 like we're seeing in some of the semis, but we're at support.
I mean, no, not really. A week ago, I sold a put in here. So again, I just feel like this is a name where I can actually feel comfortable of selling a put and not being too scared. I sold the 115 and I went out to August because I wanted a little bit more premium and a little bit more time on it. This is one that I feel fine sitting in. So no, not for Walmart. I mean, I feel pretty strong about that. This is a company that obviously supplies a lot of different things to a lot of different people based on a lot of different sort of incomes, if you will. So I don't mind it,
Yeah, I like what you're saying here. I'm looking at the 110, 115 short put spread, 86 days to expiration. You mentioned that you're out in the August cycle. I think I'm going to join you there with a little bit of a flyer here. I say that because 115, 110 with that extra time, the probability of profit is reduced, but you talk about getting a little bit of a better, potential payout on your end. Sure enough, I'm with you. So let's join you there. We'll get this on the board filled right away. That never feels good. We move on, Jamal. What do you think about some of the Mag 7 here now? We work through the market here today. Mag 7 are off by 4 cents. It's a 0.06% move to the downside. We can go over to ES, for example, and just take a look at how the stock market is moving over the course of this opening bell. 20 minutes in, and we are now negative on the day by 0.1%. NASDAQ here is off by 0.4% here. Back below 30K, Jamal. Looking like a little ugly turnaround there. That's a pretty ugly looking 4-hour candle, a bearish engulfing bar key reversal if I've ever seen one.
It's a good thing. We need it. I'm telling you, this is actually good for those who want prices to go higher. You need this mini pullback. You definitely need it. Mag 7, I got to refer you.
Before you get there, could I just quick note here? Past week or so on the show on Futures Power Hour and Overtime, we've been adding this inverse head and shoulders pattern in the NASDAQ with a neckline right around 29,450. The measured move was for up towards 30,225 or so. That was achieved overnight. So if you had been trading, for anyone who had been trading the inverse head and shoulders pattern, technically it's been completed. That's no longer the primary bullish thrust off the lows right now.
This is awesome. As I just moved rolled up and out my year-long trade, and I'm short 31K put and 32,000 call in July. So this is great. I took one for the team, I feel, for the rest of us. We needed this pullback. But Mag 7, man, it's interesting. NVIDIA just hasn't been able to recover since earnings. Google, NVIDIA hasn't been able to recover since earnings. It's been a steep fall here. All the while, all these other chip names are making moves. I mean, is this something where people are just selling out NVIDIA to buy more Micron and the other names? It's kind of interesting. Google,
I love this reversal. I love this reversal in semis, by the way. Right before the opening bell, we're like, it's 56% above its 200-day moving average. It's a little lofty. The last time that we did this, we had a pullback. Is it a pullback to buy? Probably. Maybe we're going to get it today on the show, Jamal. We can put our money where our mouth is.
It doesn't look like it. It looks like they're trying to buy it right now. They're not letting this thing go yet. Not yet.
Give me 580. Give me 580. Like 1 week moving average in semis is 583. Like a little bit more. Scare the kids here this Wednesday.
I would like it. I really would. Google had that Google I/O thing, like a week ago, right? You thought it was going to take off from there, but it's kind of gotten quiet, a little bit calm in here. What else we got? Microsoft. Where's Microsoft these days? This one, again, it's trying to get out of that software lull, but it seems like as soon as they start to try, you have these pullback days, and so this is still one of the most interesting trades on the board, I feel, Chris. I know we've talked about software, but at the end of the day, this is Microsoft. It's the largest of the group. So if this thing can pull itself together and get back over 500 in the next few months, I think that would be meaningful. What else we got? Apple, I know, has been at all-time highs quietly, even though we're not talking about Apple nearly as much as we used to. I mean, it used to be the main stock that we talked about when you talk about the Mag 7, but nobody seems to care about Apple as much as they used to anymore, which is odd now that it's at all-time highs. So crazy.
It gets no love.
I mean,
it gets no love
none
whatsoever. And, you know,
well,
and
why should it? There's no new products, right?
Yeah. And they're giving away their products right now. I just went and upgraded my phone with Verizon. They're like, oh yeah, you know, with your plan and your tenure here, like we can give you a new iPad for $5 a month for the next 3 years. It's like $5. It's like $5 a month. Yeah, like hell yeah. Hell yeah, I got myself a new iPad for $5 a month.
It never used to be like that.
Yeah, no, so that's just that's not how things were. But hey, you know, 310 right now, Jamal. Apple, if they don't have enough AI, they have too much AI. It's been really funny watching the narratives kind of wrap themselves around Apple, and Apple has just shrugged them all off. It hasn't been prone to this boom bust cycle around AI like some of these other companies have been. Is it a safe haven? Is that what this is?
Yeah,
it's like
it kind of seems like it.
Dividend stalwart. You're guaranteed to make money here. No one is going to be shocked if Apple turns up another tens of billions, hundreds of $billions of profit. It is ingrained in the culture.
Yeah, it prints money. I mean, it's not a growth company anymore. It prints money. I guess the last one I'll comment on is Meta. I mean, I don't know. I'm close to getting rid of my Facebook account. Honestly, I feel like a lot of people feel the same way.
Oh no! I see. I haven't had my Facebook account for a number of years, but you know we're getting closer. It's election season right now here, with primaries a month away, and I've seen some people that live close to me posting some very uninformed things that I feel like they should be corrected on and called out on. And who better to do it than me?
So is that what you have it for? Basically, just to mess with the people? That's great. That's fantastic.
No, there's a misunderstanding here. I can buy green bananas; they can't. So like we got to recalibrate people's understanding of like locally how things should work as opposed to how they have not been working. And I'm being looped into this stuff, Jamal. People sending me Instagram links and Facebook links. I'm like, I don't want to do this. Stop. Stop it.
Oh man, that's funny. Yeah, I guess in the meantime, you know, as interesting as normally I'd be so interested in getting, and again, I've done it with Microsoft. I made money, but I've been out for the last few weeks. Same thing with Meta. I'd be normally interested in getting positions and some long positions in both of those. Right now, not interested. I'd rather see some strength.
Need to see some strength. Microsoft and Meta Meta in particular has been plagued by the whole CapEx overrun costs. Microsoft seems like it's being treated like a software company, and it doesn't matter that it has ties to Anthropic. It doesn't matter that it has ties to OpenAI. One thing that's just quietly sitting here behind the scenes, Microsoft has this new chip, the Maya 200. It's their custom AI inference chip built on TSMC's 3 nanometer process. Satya Nadella said that based on the testing that they've done, Maya is delivering roughly 30% better token per dollar economics relative to the traditional GPUs. All this doesn't really mean anything until you get to the point of Anthropic is close to signing on to this Maya infrastructure which means both OpenAI and Anthropic, the foremost LLM models, will be running on custom in-house silicon that Microsoft has built themselves. And maybe that's what this stock needs to shake off. The software windows of it all. It needs to be seen as a player in the hardware game, the GPU game. So running custom, this custom in-house silicon may be the next step for Microsoft, the next catalyst to get it out of the woods here.
Yeah, this is one where I don't have any near-term stuff. I think it's harder to play in the near term, but long-term, I still got bets on. I got a leap call in here. I don't remember at expiration. I'll look real quick. In my longer-term account, I have the Jan 2028 leap call, and then no, that's not 2028, 233 days, 2027. And then I also have I have some call spreads too. The 500 and 600, I was able to get that for $11, $100 wide. We got 230 days. Let's see if something can get sparked in here.
I think that's enough time. That's enough time to play that future Mall.
Let's see something get sparked in here.
Before we hop off and we get ready for our next segment here, we did talk about wanting to do something in crude at the open because it is sitting below $90. We talk about, likewise, the necessity to clean up our book before we put on more trades, Jamal. One thing that I'm going to do during the break, I have a lot of short put spreads here in crude. I have a bunch of short call spreads here in crude sitting at 20 days. I need to get those off. I also have exposure at 50, 82, 174, all of which are the same views. When oil's been rallying above 100, looking to sell calls, call spreads. When oil dips below 90, looking to sell puts, put spreads below 70. So at 50 days to expiration right now, we have another opportunity here to get into the market, going $2 wide. If you want to give me the chance, CLQ6 here, Jamal, just to put this into perspective for folks, CLQ6 at the open of the start of the war is trading around $65. We can make a bet over the next 50 days that we are not going to get down close to those levels. The one standard deviation move is, and you can find yourself in a risking 4 to make 1, which isn't great, but 72, 74? I mean, how are we going to get back down there? Where are the molecules going to move? We're going to do another bite of the apple. I'm going to get rid of some of the other short calls, take profits on the short calls and the short put spreads at 20 days to expiration, and then start rebuilding into the position 30, 50 days in that window. You dip below 90. Oil has been the single best thing I've traded all year long. It's highest win rate, most profit, better than gold, silver, any individual stock. This has been working. There's no reason to change the strategy. Today is a great opportunity to get in there and layer in new positions with a little bit more time.
I'd venture to say over the next 50 days, we'd see 95 before we see 75.
Yeah, absolutely. And if we get triple digits again, we sell the 120s and 130s once more.
Yeah.
Because if we get up to those levels, then you're talking about such significant demand destruction that starting to come into play for a lot of economies around the world that you don't need to worry about anything else in the short term. But hey, before we go off, Laura, do we have the 200% commission rebate? I heard that we have a commission rebate special that's going on around here. We can do that, right? Oh, yeah. Double commission rebate. That is very much happening. Jamal, I need to get this ad read up here. So we're going to just get this going. Hey, double commission rebates for new customers who open and fund a Tasty Trade account. The rebate is tied to how much you trade, not how much you deposit. So the more active you are, the more that you get back. So these are eligibility, new customers and existing customers who have never funded an account, US-based accounts only, margin and cash accounts qualify. Rebates to account will be credited within 14 days of the trading window ending. So if you've been thinking about making the switch, now is the time. You get double your commissions back just for trading options the way that you like to trade them, Jamal. Go to tastytrade.com, double commission for more information.
Dos Toros. That's right.
We're going to take a quick 2-minute break here. We'll be back at the top of the hour as we work our way through these opening bells. Stocks a little bit softer where they were overnight. When we come back, it's the top of the hour, which means it's time for... we didn't do What's Your Assumption? We got to do What's Your Assumption.
We got to do that. Yeah.
What do I know? We're doing What's Your Assumption at the top of the hour. Coming up next.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was
awesome.
Not a paid, you're not getting paid for this advertisement.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Jamal, we are back. You know what they say. What happens when you assume? You get your trade featured here on Tasty Live. Is what's your assumption?
I thought they said something else.
That's the only expression I know. When you assume, you get your trade featured on Tasty Live. That's pretty sure that's the classic assume. Say, what's your assumption, Jamal? We're going to work through trades here. We have a bunch of trades that were submitted by folks, sending them into our desk this morning. Yes, very nice.
Can't get enough of that one.
We're going to, I'm pretty sure the soundboard has like 4 buttons on it. There's the cash register, the laughing, that, and there we go. So let's get into these trades, Jamal. I'm going to be your assumer here, and you're going to tell me what your assumption is. We have Dan in Columbus, Ohio, taking a look at EEM. Neutral bias, looking for a trade out in July. He knows that EM has an 80% IVR. It's a neutral strangle for him, just betting that vol comes in. Jamal, is this a trade you'd be interested in taking? Talk me through it.
Looking at it, the only thing I'd say about this, these options are a little bit wide. I mean, the 73 call stocks trading 68. The 73 call is $1.01 at 175. That's the big problem with this trade. Other than that, I mean, I like the way the IVR work. We were talking about trade assumptions earlier and going through our process. I like the way the IVR is. I like the way the implied vol is for a ETF. It's at 33%. That's decent enough for an ETF to sell, but I just got to say the options in here are way too wide.
Way too wide. I see that, right now, this is not basically, well, is it an emerging markets ETF? Well, do you know what the 2 largest components of EEM are right now?
What?
One of them would be Samsung. The other would be Taiwan Semiconductor. Okay. The third would be SK Hynix. So yes, EEM is basically is an AI ETF at this point.
Well, EWI is probably has those same 3 things in it, I assume, right?
EWI holdings are SK Hynix and Samsung. That is about 51% of the ETF.
And this one is actually jacked and a lot more tradable, but it's a harder trade. I had a strangle on here for quite some time, and I don't think I ever won on it. So if you want to play one, it's also an ETF, but that one is the options markets are better, but it's spicy for sure.
EEM and EWI right now are varying degrees of AI. EEM is probably the top 3 holdings: Taiwan, Samsung, and SK, about 25%. You go over to EWI, it's 50%. So pick your poison. How much leverage do you want in the semiconductor space? That's what EEM is right now. Jamal, this is a trade that, for my reasons, just like yours, I personally am going to have to pass on this one for myself. We can go to the next slide here. We have a comment in from Ian over in Sacramento in Marvel. I don't know is his directional bias. The earnings play here. Tuesday's move made me back off the bullish idea. Still want to play earnings, but I don't want to force the direction. Marvel is something that you were talking about earlier today, Jamal. What do you think is the best way to approach Marvel here?
This is definitely one where I would line up calendar calls, though we were looking this morning and I'm looking at them again. They're pretty expensive on the upside. I wouldn't play this thing anyway but upside. Why not? Given what's going on in the market more recently, given what's happened in a lot of these earnings, most of them have gone to the upside. And I think you do it in a risk-defined way, one that's cost-effective for you. Only problem is, like I said, I mean, I'm looking at the 2-day versus the 9-day, and I'm looking at the 250 calendar call, which again, $45 away, which is not impossible, given the moves we've seen, but that's $3. Normally, I like to buy these things for like $1, $1.50, $2 max. $3 for that's easily a 20% move to the upside. That's a lot. I don't necessarily know if it works out, but again, I mean, doing 2 days versus 9. What you need is maybe it runs $20 this week, and then all of a sudden it runs another, $15 to $20 next week. Entirely possible. We've seen other names do it.
We can go to slide number 3 here, Jamal. SPX, directional bias neutral, time frame 0 DTE, which is among the more popular time frames for folks to trade around here. Gabe is saying, no obvious big news coming. Give me a neutral iron condor and a quiet tape. Ching. That seems eminently reasonable, at least right now. 0 DTE today. Why wouldn't you do that, Jamal?
I don't see any reason why not. You can easily do it $10 wide. You can do it $5 wide. You can do it for tomorrow even. A lot of times, Mike and I will look at the 1 day out. So it was a 1 DTE, around the expected move, and just do $5 wide. If you can get that for $2 and change, that's usually pretty decent. I got to defer to you, though, as far as any big major news, macro news coming out this week. Is there anything I'm missing or not aware of?
No, I mean, I'm looking at the earnings calendar for today. It's Marvel, it's CRM, PDD Holdings.
It's that stuff, and it's like mostly retail stuff right now.
Costco, Royal Bank of Canada, Dell. But on the macro calendar today had some interesting events. We had, where is this here? Mortgage application data. We had the weekly Redbook sales, the Richmond Fed Index. In about 3 hours, we're going to get a 5-year note auction, $70 billion worth of notes. We have API crude inventories coming up this afternoon as well at 4:30 Eastern. I don't see any of these things being the necessary catalyst during the trading day today. To force a big move in stocks. Although, those oil inventory data, we got to stop ignoring them. We're seeing incredible drawdowns right now, and we're getting pretty close to tank bottoms in a lot of places, including here in the US. So yeah, we're sending a lot of oil abroad right now, refined fuel products abroad right now out of the Gulf Coast region, but it means that domestic oil inventories and refined fuel products are lower. That's why gas prices are staying up. We just don't have the things that we need. So maybe that is the catalyst for today. People start to freak out about energy inventories. That's on the other side of the market close. That's at 4:30 Eastern. So I don't see this. You're going to have to get an Iran war headline that comes out of the blue.
So yeah, there you go. Fire away. 0 DT or 1 DT.
I like that a lot. That makes that for today contextually, I think that makes a decent amount of sense. So we move on to the next one here, Jamal. This one is about Bitcoin. IBIT bullish long term. They have a longer term bullish view on crypto, BTC and Ethereum included. IV is low. So I bought some shares today. Justin out in Milwaukee. I'm already in this. I'm with you.
Same.
Nothing to really take here or not take here. I'm in. I think IBIT, in terms of the bottoming, it made that nice move through the April 2025 low again. It's broken the downtrend from the halving cycle high, which is October 25. So we break the October 25, January 26 downtrend. Look, crypto's not getting a lot of love right now. I pointed out earlier that you folks are the reasons why we don't think crypto's getting a lot of love right now. The views just aren't there. I did an interview, Jamal, a few weeks ago while you were away with the CEO of Binance US. The CEO of Binance US. You would think that would be a big getter, and nothing. Nothing at all.
People aren't really that interested in crypto right now. That said, it's I think a lot of times these things are sort of measured by how they react when people aren't paying that much attention, and it's not like it's at all-time lows. I've been saying this for months now, and so I think it tells you the way that it's holding up is really interesting. I'm long shares in here via a short put that I had from months ago, and I actually have a short call against it, and I think you can get short calls against your stock in this as well. There's usually like the upside calls are kind of, they're not jacked right now, but they're a little higher than most. I think that part is interesting for against your long shares.
We can go to the next trade here, Jamal. You and I are already in IBIT, so we move on to Palantir. Palantir bullish. God. Everyone's bullish on Palantir. I mean, this is all I see. We're buying the dip in Palantir, right? It is a name, and let's listen to what Ty has to say. He is neutral to slightly bullish. The June, August 140, 145 bullish directional, then roll if it just sits. Jamal, this seems like a way that you would approach the market.
Yeah, I would be in a diagonal. As it sits right now, I'm in, like I said, a super bull trade, short the put spread to finance being long the call spread. Look, I mean, I like the idea. The reason why, again, it's not against your idea per se. It's just more against about the way that this space has been trading. It's been hard to trade this name, but I don't blame you. I mean, take a shot if you can. I think, you could maybe even push that to be what they're long. You could push that to be long Aug versus short July. I don't remember exactly when earnings are. That determines how much that short call will come into the upside. Earnings are in August. So you could be long August. I would actually be long August and short July if you can do a diagonal in that way. Oh, it looks like they're already long August. I'm tripping. Yeah, long August, short the June. You can sell the July against. You'll get more premium.
For me, the chart setup just doesn't look great. It kind of looks like it's bleeding out a little bit here.
Exactly. No, you're right. That's what I'm trying to say. And it's been tough trade because of that.
One of the filters that I use from just a pure technical basis, and obviously this doesn't work all the time, but I like to get long when there's bullish technical drift, for example. And so that means two ways to view that. One, your moving averages are in bullish sequential order. The 5 is above the 20, it's above the 50, right? Shorter term above the longer term ones. But then more importantly, likewise, we see that there's a positive rate of change for the moving averages. So right now in Palantir, the past 3 sessions, we've run into the 1 week and the 1 month, and we haven't been able to advance through there. Today, we gap open lower, and we're failing against them. 1 week is below the 1 month. 1 month is below the 50-day. And all 3 have a negative rate of change. And the 1 week's rate of change is more negative than it was yesterday. This is just downside momentum still. It's not strong downside momentum, but it's still downside momentum. So for me, instead of trying to be the hero and pick low, I would rather wait to see some stability and a change in momentum. This is ticker agnostic. That has nothing to do with Palantir.
Yeah.
Any stock trading like this, I wouldn't want to touch on the long side just yet. I get the temptation, but a little bit of price improvement here, rather have more confidence in the pattern and the pricing than simply trying to buy something with cheap IVR, because it is a 17 IVR right now. I understand wanting to get long if you're looking for something AI adjacent. Everything else has been so petty. This is relatively cheap speaking.
Yeah, no, I agree.
Queb, next trade here. Queb, the Chinese internet ETF, pulling up on our screen now, has been in the doldrums. The China internet ETF is down at $27 here, Jamal. We started the year closer to 34. Chinese high tech has been beaten up long enough. I'm ready to play the bounce, says Sean in Hong Kong. They're looking for a July-August timeframe here. Jamal, this feels very much, almost feels worse than the Palantir setup, like we're trying to catch a falling knife.
Yeah, kind of similar deal in here. I just don't even know how you really play this one neither. I mean, I wouldn't sell a put in here. It's not enough premium. I don't necessarily know if I'm buying calls in here. I could see why you buy calls. It's not, I know the IVR says 45, but again, this is an ETF and there's actually a 34 implied vol, which is not cheap. So I could see if you wanted to go August and buy some calls. I don't blame you. But like Chris said, personally, I wouldn't really want to get long here.
Not looking at the chart on my screen here. The past 4 sessions, we had a support in March right near $27.5 on Friday, I suppose that is. No, Thursday last week. We do break below that swing low, and we're still trading below there. We haven't been able to see any sort of significant recovery, at least as far as I can tell on the chart. This is calling a low, and I get the relative value plays. If you're buying Chinese tech versus US tech, you're buying one at lows versus one at the highs. And buying something that's cheap is more comfortable than buying something that's expensive on a relative basis. But again, bottom picking here.
You know what? For our official record, I will say, since we're tallying these, what we're doing, I would do this trade. I would just go further out, August or September. I think even you need some time on this. Same thing with Palantir. So I do like those ideas. They're just further out. They're not the traditional tasty methods. I don't think you go 45-day windows on these.
No, I don't think you can either. We move on to snow. Miles in San Antonio saying snow is tricky.
Sounds
Neutral
earnings,
overall,
right? Yeah, that's what I thought.
A neutral overall, but I don't want to get steamrolled to the upside. Jade Lizard ratio spread. What are you guys like? His directional bias here is neutral around these earnings, Jamal. Up at 178, another 0.75% rally.
It's a software name, so I would be scared about a Jade Lizard because I don't want to sell the downside. Neutral. What do they want to be? Neutral to bullish, huh? Neutral overall. I think. Geez, I don't know. I don't even know if this is neutral. Maybe it's an Iron Condor play. You keep it tight to the downside, $5 wide. You can go at expected move. I can right now in July. You can do the 220, 230, 140. Sorry, you can't go $5 upside. Shoot, they're $10 wide upside. That sucks. Well, you could do that type of skewed Iron Condor. You could do $5 to the downside, 140, 145. Put spread versus 220, 230 call spread. I think that's one way you could do it, and you could stay neutral, and the implied vol is kind of high, so that works, I would say.
Yeah, I think the point that you have about software being a problem here is well,
they've all fallen on earnings, every one of them.
They all have fallen on earnings, and the volatility makes us very, very expensive. 90.7 IVR right now, Jamal. That to me is what stands out. We've had this really nice recovery off the lows. What's volatility done? Done nothing but continue to go up on a relative basis throughout the recovery. That's fascinating. That's not what we had seen in past episodes. It's usually prices go up and vol calms down here. I appreciate that what you're saying. You don't want to be exposed to the downside either. I already have my CRM exposure. I don't need more software right now, but the stock does look better. For what it's worth, we're talking about the snow here. We've seen snow's been in the news. Snow and ServiceNow have both been in the news for what it's worth. They've had commercials on TV recently that I've seen talking about their AI efforts. They're trying to change the narrative around the companies. Maybe this is a good trade, Jamal. I would
do that Iron Condor. I would do the 140, 145 for those. I'm not doing it, but I would do that trade. 140, 145 to the downside, $5 wide to downside.
I would rather do that too. But here's something that's not going to be problematic for me to get along with. NVIDIA, which is the next trade here. NVIDIA bullish, medium to long term. NVIDIA as the AI underdog makes no sense to me. I didn't know it was an AI underdog either. So nor have I heard it described as that. But he says, I don't think that story lasts. So covered calls or a PMCC are on my list. Look, I think that's spot on here. This is a trade I like. They're making a lot of money. They're continuing to grow the business. Valuation wise, we've seen that after the last earnings report, valuations came in. Went from a 45 PE down to like a 37, 36. This has been a fairly usual path for NVIDIA post earnings where the market sells off, but the market broadly doesn't go down, right? So NVIDIA has been coming in, but what's been happening to tech stocks? NASDAQ's above 30K. The rally's broadening out, right? People are taking profit in NVIDIA and they're using it to buy other things. So medium to long term in NVIDIA bullish, yes, very much so. Still can go up, still has opportunity, still has some headroom. If this global compute build out is anywhere close to where we think it is right now, then there is a long tail here left, and they're going to make $250 billion in the next few years. Jamal, look how much money they're making on a quarterly basis right now. Extrapolate that; it's outrageous.
Yeah, this is one where I might add more to it. So I forgot that I have these leftover June calls from calendar spreads from earnings. They're way further upside, 235, 240, 245. But they're in June. I'm still long them. And I like the idea of getting long NVIDIA right now. I'm with him. It does feel like it's the underdog. So why not?
Laura, is there a way that we could pull back up my chart real quick so I can pull up the NVIDIA chart here? Is that allowed? Can we do that? Jamal, during this rally off the lows from March, we've had this occurrence where we punch up into a new high, then pull back to a prior swing level here.
Mm-hmm.
And NVIDIA seems to be doing that right now, where we had this punch up into a new high, and then we get this zoop pull back into the former swing area here. Okay. So if there was a place to buy the dip, so to speak, this envelope between the 1 month and the 50-day has provided that support region. I'm in fact going to scale up an NVIDIA long trade here just for the sake of this. What are the highs? We got a 235 high here. I think we can go a little bit beyond there. Just a quick, 240, 250, get a bounce into the summer months, risking 1 to make 4.5. or no, excuse me. Yeah. Want him to make 4.5, 5. We can do that. It's a 20% probability of profit. It's a little bit of an upside flyer. I like this trade. The pullback after earnings, fine. The chart looks good. We get filled. We move on.
Yeah,
Jamal, we have
it.
We have one more. We have two more trades left here. Two more trades left here. And after NVIDIA comes a name that you have been talking about all morning long. We can go back to the slides there, folks. It's Walmart. That's going to be the trade that you have here, Mr. Jared, over in Tampa, Florida. Walmart's down more than 10% in earnings. I want some long delta outside the AI and semi circus. Jamal, I'm with him. In fact, we just put this trade on this morning.
Yep, I'm with him already too. I like it. I also think it doubles as something that will probably move when there is a turnaround in the AI circus.
Today, if Jared missed us on the show for what's your assumption, he's looking for a long deltas here. I put that on as well. Short put spread 110, 115 at 86 days to expiration. So I am very much with that assumption there. We can move over to the last trade.
And I have a short put in the same expiration.
And there we have it. So we and I are both over here with our friend Jared over in Tampa. Finally, Uber, July, bullish. Uber back to support. Our friend Victor in Buffalo, New York is saying, I'm not bearish, so I'm staying on the long side here. Jamal, Uber put out a statement a few days ago saying that the AI that they've incorporated into their business is not helping. People still need to drive the cars, after all. So they're not really sure what they can do to improve their business model necessarily with Claude or OpenAI. Uber is back down to 70, though. This is support where it's been trading for the past few weeks. I can't help but feel like this is a proxy for the broader economy. People aren't taking Ubers if they're feeling like their pockets are being pinched. Why are you taking a car anywhere if gas prices are through the roof? You're probably not going to do that kind of transportation. But that's not what the options market's telling us. It's giving us a 30.8 IVR. It's telling us prices are at nearly a 52-week low. Do you use this opportunity to buy the dip like our friend Victor in Buffalo is doing?
I mean, this is essentially being treated like a software company as well, right? I mean, in some ways it kind of is, right? I mean, it pretty much is. I still don't know why it's getting attacked the way that it is. To your point, maybe it's because the AI stuff isn't working for them. But look, if you, I think this is also one that's interesting. I think you go further out. I mean, Uber has shown some resilience. I just think you got to go further out. I don't know if July is long enough. I think it's one where you got to go August, maybe September, and give it some time if you're going to play it.
Well, we have our scoreboard here for our assumptions over the course of the day today. We can pull it up here on the screen. You and I are on board with a handful of these, kind of, right? Depends the setup in the situation. I don't want to catch a falling knife. I look at Uber and I see a similar situation to a Palantir, for example, being that ticker agnostic. The negative technical drift, the rate of change that's down, you're trying to call a low. But there are a few of these where you and I this morning have already been doing them or are exploring these opportunities ourselves. So I think this was a good run of what's your assumption today. Most of the trades here, you and I can get down this in some form or fashion. iBit, NVIDIA, Walmart, we have some activity going on there.
Yeah, I mean, again, these are good trades, ideas, if you will, and it's just all about execution and what months that you go out that potentially gives yourself a chance to win on them.
Jamal, we can wrap up this what's your assumption. We still have more great programming coming down the pipeline here. We have about 40 minutes left in this morning show. Before we get to Liz and Jenny in about 40 minutes time, you and I will find ourselves crossing the threshold to talk, well, market measures next. We're going to do market measures next here on Tasty Live. See you after the break.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
first thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Jamal, stocks are still a little bit weak here after the open. We're about an hour into the day's cash trade here. You're watching your opening bell, your morning show here on Tasty Live. You know what time it is, Jamal?
What time is it?
Time for a market measure. No music? Oh, okay.
We don't have no fancy. I know, right? What's up? Yeah, wow. So anticlimactic.
I was expecting something there. You know, if you can measure risk. Thank you. You can trade any market if you can measure the risk, Jamal. That's what we're told.
Yeah.
Let's get into it. So when a trading philosophy is based on statistics and probability, a core tenet of your trading approach is going to be product indifference. We talk about ticker agnosticism, Jamal. The same thing comes in options, not just in technical analysis. Product indifference means discounting nearly all notions of the fundamentals of the underlying product you're trading and instead focusing on constructing a trade based on the risk that is given to you by that market.
I will say, I do like this idea. This is something that I've really leaned into being at Tasty. That said, and I think both of us can agree on this, it really does depend. Sometimes things change, you know, vis-a-vis what we saw with silver and gold more recently, even with oil more recently. So sometimes you adjust, but product indifference in general is a really good thing.
We can go to the next slide here. When we make a trade based on product indifference, we're making a choice that's fairly easy, straightforward to understand. We are trying to choose something that fits a particular profile. The ticker could be XYZ, ABC, it could be futures, it could be spot FX. If it fits the profile, we want to trade it. So we talk about options here. You can compare the risk of the underlyings by comparing their IV adjusted notional values. That's IV as a percentage times the price times the multiplier. And obviously that changes from product to product, Jamal. You need to take into account the different product sizes. If it's SPY versus ES, you're going to have a different sort of risk profile. On to the next slide. Let's do a little bit of a study here. Consider the following data from 2020 to 2026 and the following symbols. These are some of the major futures tickers here. ES, CL, GC, SI, NG, ZB, and 6J. That's S&P, crude, gold, silver, natural gas, bonds, and the yen. So these are all broad range. We're covering everything. We're looking at equities. We're looking at bonds, metals, energy. The only futures category that's not really touched on here is agriculture, soft ag, wheats, corn, what have you. But to compare that, we're going to take a look at the IV adjusted notional of each future symbol and the risk of each by comparing their IV adjusted notional values. So we go to the next slide, and starting with the period from 2020 to today, 2026, we analyze how prices and applied volatility have evolved. What stands out to you here, Jamal, in terms of what's the biggest mover on this?
ZB, no. Obviously, silver, massive move in silver. And again, it's an interesting range that we chose. We chose a 6-year period. Usually we do these studies, it's like 15 plus years. It's a smaller, more concentrated period, arguably one of the higher volatility periods of the last 25 years.
And I've seen some people, and I've had this chat back and forth with folks, not just on network and in the chat, so to speak, but outside professionally, in the context of seasonality, right? It's important to have a big data size. You want a good sample size. The bigger, the better in some regards, right? 30 years, n equals 30 is typically the baseline for statistical reliability. But the market also goes through regime changes. And so if you do a 20-year seasonality, you're going to get the global financial crisis. But does what happened in 2007 and 2008 really matter as much as what's happened more recently? The market structure has changed significantly. Do you really pay attention to anything pre-COVID anymore? Is that just from a different era? So I hear the whole statistical imperative of having a bigger sample size than just 5 or 6 years. But the way that the market has traded post-COVID is unique relative to other periods in history.
Yeah, and I would, to piggyback on that, I would also say it really depends on what kind of trade you're talking about. I mean, if you're talking about a long-term trade, the idea of the market only goes up, I mean, it ignores something like 2008, right? And it should. Versus if you're talking about options, volatility, and trading, you might want to break those down into different sectors and different regimes, because there are different things that happen at those times. And again, we're not usually trading leaps. We're usually trading something within a monthly or month, 6 weeks or something like that.
So it's not just silver with the most significant change in prices from January 2020 onwards. It's up 286%, gold up 196 compared to stocks, S&P 500 only being up 96%. They also share that volatility change as well. You can see, Jamal, on that second graph, the bottom panel there, gold vol up over this period, 189%, silver 125% here. We need to make the adjustments now, right? We're talking about making the IV adjusted notional values for these futures products. We can go to the next slide here. If we have
does that stand out to you though? That oil vol that has come in 28% over that 6-year time period? That stands out.
That does stand out. Yes, it does. Particularly because of everything that's happened. Oil prices were negative, Russia, Ukraine war, Iran war, the various missile strikes along the way. So let's just take a step back here. What's the IV adjusted notional value for each of these products? Jamal, when we take the price, the multiplier, and the IV, you could see how this broadens out and changes dramatically. Gold and silver have had far and away the largest IV adjusted notional value changes during this time period. When you look at something like the yen, though, the price is small, the multiplier, given that it's a yen denominated product, and the IV where it is, you could see that it's not exactly something that's considered a great deal of risk. The risk has been in the precious metals, so to speak.
Yeah, absolutely. And one of the larger products in the world, the S&P 500. So it's all been inside of those. Not what you would think, right? You would think probably more. I mean, definitely in the gold and silver. Probably wouldn't think as much in the S&P. Probably think a little bit more natural gas, but this is fascinating.
So when we take these IV adjusted notional values, we're comparing one to another to figure out how risky one product is compared to another. And so think about the last slide, for example. You have a position in silver carrying about 22.5 times the risk that the same position does in the yen. Because if you go to the next slide, right, anchoring this as, say, to silver as the baseline here, silver being the risk ratio around silver is 1-to-1. You look at that adjusted notional value, it's 22.56 times than what it is for the yen. Trading silver, 1.98 times the risk versus trading the S&P 500, 12 times the risk as trading bonds here. And so when you get yourself into product selection right now, being product agnostic, you also have to consider the risk. If you can measure the risk, you can figure out a way to trade the market. So Jamal, looking at that here, do you think that it's worth even trading silver at this point in time? And I think that maybe the number here on the S&P 500 is off. We're going to fix that in post.
I would say it's worth trading. I mean, but I've been short vol in SLV, so it just really depends on how you're trading it, right? We were talking about finding the right trade for the portfolio and what works. For me, the SLV short vol play has worked. Short strangle has worked. Directionally, a lot tougher.
So why are you doing this then? Why do even bother trading? Multiple underlyings at all if the risk is solely determined by the IV adjusted notional. Well, one, looking at this, you can help mitigate outlier risk in your portfolio. Two, you can mitigate day-to-day risk via diversification. If correlations are low and you're adding a new trade to your basket, right? Does this bring down the overall correlation of my portfolio? If it does, then maybe it's something you should do. It's also worth having a slew of different strategies, positions, directional assumptions, time frame assumptions baked into the cake, right? You don't want to have all your eggs in one basket, but that means not just all high volatility, it's also low volatility. And that brings you to the fourth point, which is fun is on there, but it keeps you engaged and aware of what's happening in the market and how different events impact different types of products and different type of regime, or rather say volatility regimes within those products. And it gives you that market awareness that as a trader, I think you need to build up that library in your head over time of how markets respond to certain things. And you can only do that when you have skin in the game. Paper trading is not going to cut it after a while. You need to build up that muscle memory of what high and low IV trades work and don't work in the various market conditions, Jamal, to be successful over time.
I agree. A lot of times we talk about correlations of different things that are happening in the market. And usually if you have on positions like these we're talking here, you have some metals on, you have some equities on, you have a currency on, you kind of see those correlations as they're happening anyway.
So an important note is that the actual IV adjusted notional value should be compared, and we can go to the next slide. It should be compared to another IV adjusted notional value as opposed to a single standalone metric. The comparison of risk is definite, not conditional, because even if the euros have a huge outlier move and natural gas does nothing, that doesn't mean that the risk was mispriced at the time of the trade.
Agree.
Last slide. So what are your takeaways here? When you're comparing IV adjusted notional values, the idea here is that you're comparing the pure risk between the underlyings regardless of the fundamentals of the underlyings. You're not worried about earnings or inflation or the latest jobs report. We're just looking at the risk that the market is providing us. And IV adjusted notional values are easily calculated by multiplying notional value by IV, as we showed in those previous slides, Jamal. You have to know what you're getting into, right? Trading the yen is not the same thing as trading silver, even if the IVRs in the platform may look the same.
Yeah, newsflash. Some things a little bit more risky than others, but it all depends on the time period. And I think it's a very interesting time period we just compared.
Jamal, we had, this is a market measure, but before we had what your assumption, one of the trades in what your assumption was directionally neutral SPX 0 DTE, no catalyst today, and therefore nothing would happen. S&P 500 trading in at 75.40 right now. We are up by 0.04%. It's a 2-point move to the upside right now. We're doing nothing here as we make our way through the middle of this week, but we still have more to come down the pipeline here. We've got 20 more minutes left here, Jamal, which means it's time to bring on our friend Quentin. They're going to bring in Quentin live from the trade desk after a brief break.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission.
I got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter, call me one of a kind. I'm a true believer. I got a good feeling. 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 Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green light. I got that fever. I got a good feeling. 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 And when it comes, you gotta grab it. Never let it go. I got a good feeling. I got a good feeling. I got a good feeling.
Jamal, we're back. We have just a few minutes left here. It's a good time to check in on the markets. S&P 500 up by 3 points, barely anything, 75.40. The NASDAQ, which was up over nearly 1% earlier, is now down by 0.25%, down by 78 points here. But you know what, Jamal? You're talking so much here today. I've had, what does Tony say? Enough out of you.
You got to do the thing, Chris. There you go.
Hey, Quentin.
Fellas, how's it going?
Live from the trade desk. We've got you.
Yes, sir. How are you guys doing?
Surviving.
Great,
Thriving, in fact.
So you got to give him like the deet. Otherwise, he has no idea if he's supposed to speak or not. It's literally like, I've seen it. I've seen it go wrong. People like come on and they don't get the deet. They just sit there. They don't know what to do.
No, we're all good. We're professional here now. We're all good.
Yeah, you are.
We're trying to be. Building the plane as we fly it. Quentin, what do you say? What's going on?
Hey, how was your Memorial Day? What'd you do, man? Did you go home? Did you go to New York? You're in New York, dude, right?
Yes, yeah. Hey, Vecchio, go Knicks. Am I right? Are you a Knicks fan?
Am I a Knicks fan?
Oh, yeah. No, there we go. Go Knicks. Go Knicks. We were talking a little bit about it yesterday. Go Knicks. I mean,
your dad got
we're
any tickets, or what's going on? What's the deal?
Yeah, I wish. Those have got to be some pretty expensive tickets. So, no, I do not have
there are
any
floor
tickets,
seats. Floor seats for selling Game 1 in Madison Square Garden are going for over $1 million right now.
Yeah, wait, I heard something like that is absurd. Like, how does that even happen for a sporting event? $1 million, like for a couple hours, $1 million. You know, I mean, that's crazy.
Well, there's this thing called supply and demand, Q. You've heard of it.
Yeah,
it's crazy.
For sure. I think about it every
day. They have not increased the supply of tickets at Madison Square Garden. Believe it or not, there's a fixed number of seats.
When you put it like that, it sort of makes sense.
Who's paying for these seats, though? Because most of those people on the floor don't pay for the seats that they get anyway.
Yeah, it's got to be all
So
like
the slimmers are
celebrities and stuff like that.
You get a lot of hedge fund guys who are trying to show off.
Mhm.
You know, I mean, listen, if you made half $500 million trading Micron over the last month, why wouldn't you go to yeah, why wouldn't you go to a game? $1 million a ticket, or you could buy a house in Oklahoma. But
would you walk in with like a jacket that just had a bunch of chips on them? You know what I mean? Like just a whole gang of chips. You just walk in with a chip hat and chip jacket. Just
this is beyond
sit on the
Quentin's
floor.
time. But like Billionaires Boys Club, remember that clothing from the 2010s?
Oh, wait, I know what that is. Yeah.
Yeah.
That's how you'd have to dress.
Yeah, but you know what my favorite outfits are is Walt Frazier, all his like crazy suits and stuff like that.
Yeah.
Yeah.
Oh yeah.
We love those.
People don't appreciate him and Mike Breen, the national announcer for ESPN. Like him and Frazier are the next local guys.
Yeah,
So we
yeah,
get to
they're
hear
the
them
best. I love them.
They're the best. And you saw them crying the other day after the Knicks won. People are like, oh yeah, they're biased. No, do you know how much losing basketball they've watched over the past 30 years? Since 1999?
Yeah, it doesn't even feel real.
We were celebrating when Clee Anthony Early got out of the hospital after shooting himself. Like it's been dark. It's been really dark. After
Yeah.
you're talking about Frank Ntilikina, like he's gonna be the savior. What were we doing?
Yeah, it's been a long time. It's been a long time coming. So it feels great. I mean, Jalen Brunson is like the hero of New York City. And yeah, Karl Anthony Towns, also great. I love the whole, like all the characters that we have, you know.
You mean Mr. Illinois basketball of like what 2008?
Oh yeah.
10? Something like that.
Yeah.
Just had to throw that in there.
Yes, as we know, anytime Brunson comes up, Josh, the producer's like, well, you know, I went to high school with him. Well, no, you didn't. You're 25 years older than him.
Yeah.
Okay. But I helped build those walls. And without my contribution, Brunson wouldn't be who he is. Okay.
Yeah, I mean, without him, you know, where would he be, really?
Okay, Quentin. What's going on in this market today? It feels like it's choppy, it's sideways. What are people trading?
Yeah, well, so not much going on like in the overall indices, things like that. But I mean, Micron is for sure the number one talked about thing today. It it just doesn't stop, you know. And people are talking about like, oh, are they going to do like some sort of 10-to-1 stock split or something like that? And it's like crazy. You know, I was trading for $300 just the other day. It feels like, right? And now it's almost up to 1,000, or I don't know where it's at right now. But
you're right, it's close to 1,000. That seems to be the number. Every time stocks get close to 1,000, people want a stock split. It was like that with Netflix. It's like with all Chipotle. It's all of them. For whatever reason, it's like $1,000 is the number where they want the split.
Yeah,
and that's when things get fun.
Crazy.
Actually,
yeah, yeah, it's crazy that I mean, I remember trading Micron when it was 300, like a couple months ago. You know, and it's just straight up tripled in value. Absurd. It's not a small company either. You know, now it's probably one of the bigger companies in the market as well. It should be like the Mag 8 or something like that now, you know?
Mag 8, Mag 9.
I mean, I'm looking back. I remember Micron when it was $30 and it barely moved every day. And I remember hearing stories of what it used to be like 20 plus years ago, and now seeing it full circle again is kind of crazy.
Yeah.
I pulled up an email last night that I sent to my buddy Carter Roof, who was at Citadel for a while. He now runs his own hedge fund out of Dallas. Pitching him Micron back in like 2012. Like, hey, this is a stock that we should be buying. Look what's going on here. Like it was trading at $25. Didn't have enough of it. Great idea. Thesis worked out really well.
I mean, it's sat in that price range for years. I mean, it's just crazy how these things happen. What else is the list? What's the list, Q?
Yeah. All right. Let's go over it. Top 20 symbols going through the system and their IVR. At number 1, no surprise, Micron with a 105. So volatility expanding throughout the day. Tesla with a 21. NVIDIA 33. AMD 89. GLD 31. Intel 80. Apple 37. Microsoft 48. Amazon 23. IREN 51. Palantir 17. SLV 32. SOXL 97. Zscaler 60, SoFi 17, RKLB 82, Google 35, USO 37, SNDK 74, and TQQQ with a 56. How is Zscaler on there? Did they have like earnings or something like that? I don't know. I swear my Zscaler is like always messed up in the office. We use it, and I swear it's always messed up. I might have to sell some calls or something like that.
I was saying something about that to Chris. I was noticing how it was down big. It moved around a lot. Yesterday? A decent amount, but down big today. I think it was earnings. Yeah.
Oh, were they down big? I mean, it makes sense with how often my Zscaler is messing up. I swear.
I love the like. What's your internet speed at home? Like 450 over Wi-Fi because I have a 2 gig wired connection now. And they're like, okay, but how come it's only coming through at 10? It's like, Zscaler's on.
Yeah. Yeah.
Cool. Great. Zscaler had really bad guidance. Their guidance fell short of expectations. They were projecting 875, or at least the street was projecting 875 to 878. The company came in with 875 to 878 million, which was below the consensus forecast of 879. They've reduced their free cash flow outlook due to increased capital expenditures. And the management's attributing weaker guidance to changes in the sales team and acknowledged challenges in acquiring new clients in the AI era. Oh, those things all seem
I was
bad.
told security is going to be the area to be in this time period. That's what I was sold. And that's why you don't listen to shit like that.
Yeah.
Yeah, I wish I knew they had earnings. I would have bought some puts for sure. I mean, of course, I'm saying that after the fact, but
yeah, so it goes from 140 to 190 in like 2 weeks in before earnings, and now we're down here 31.5% loss today. So it makes a lot of sense that people are trading this that are tracking it right now.
Mm-hmm.
There are knock-on effects. You can see like a CrowdStrike, for example, it's down 4% today, and almost like a sympathy sell-off right now. Have you seen an evolution in how people are approaching the market in terms of their product selection in recent days, Quentin?
Yeah, I would say, well, because like we look at the lists that I go over every day, and it's been like consistently now where implied volatility rank is like always above 30 for a lot of the symbols we're seeing. So there's a lot of different products that are in play, a lot of, more diversity with what you're able to trade. You can obviously trade, like right now, the indexes are in play, the SPOOs, the Qs, things like that. And then also gold and silver, also still in play. The Microns of the world, the SanDisks of the world, also in play. And then we've got smaller names, like the Zscalers that have earnings, but then things like, IREN's been on the list a lot, Palantir recently. And so, yeah, just a lot of different products that are in play. Whereas like normally, there's not, it's usually like one sector, right? But a lot of AI names and just everything is in play right now for premium sellers with the high implied volatility rank, which is what a lot of our customers like to do.
Yeah, Jamal, we're having this dispersion here where like the indexes, that IVR of 34.5 in the S&P is not nothing, but when you look to the VIX, it's below a 17, sitting at 17. It's not exactly screaming high right now. If you're looking for that premium selling, what are you doing? You got to go into the single stock names.
Yeah, and they've been there, like he just said. I mean, there's plenty of times we look at this list and not every name is over 30. The fact that they're all over 30 tells you there's a lot going on. We talked about it very early on this morning, all the different names in the vols that are existing right now in the IVRs. It's all pretty elevated, and it's kind of sneaky because, like you just said, the VIX is below 17 or might be rising back above right now. It's just 16, 17 area. It's not usually what you see, so it's a fascinating market.
Yeah, well, I mean, to me, it's surprising that we're even as high as 17. I feel like we're at all-time highs, and we've done nothing but go up over the past however many weeks. And it's like, I'm surprised we're still at 17 and not at something like, 12.
I think we should be higher because of, look at those tech names. If you look at all of those and the way that they're moving, we should certainly be above 16, 17. And for whatever reason, we're not. And I find it's an interesting dichotomy right now.
Mm-hmm.
It feels like we should be at 12, but those names say we should be higher.
Yeah, clearly.
Clearly. And yet we're not doing anything today. S&P 500 is down by 2 points in today's session, giving up some of the gains.
I think there's a big rotation that's coming in the next few weeks to a month. We'll see.
Hopefully, I mean, listen, the worst thing that could happen for the market is everything sells off, obviously. But in a world where the NASDAQ trades sideways and you see the equal weighted S&P and NASDAQ rally and small caps rally, and it's not just SMH and XLK and telecom, XTL, but it's going to be things like banks, housing.
Yeah.
That's what you want to see. I want to see names like XHB, XLY at the top of the leaderboard, and less so SMH through the summer, if we're going to see a rally that has a chance to broaden out and continue into year end. Because you know what? I still have those 8,000 December 31st calls.
I know you do.
And need this market to keep going up, Jamal, Quentin. So let's get some broadening out here. But guys, this went by fast, Jamal. I can't believe it's been 3 hours. Quentin, thank you so much for coming in, telling us what's going on the trade desk. We've made it. Thanks for tuning in this morning. I've been Chris Vecchio. He's been Jamal Chandler. We've been filling in for Tony and Nick. We made it through. Thanks for the production team for their great support along the way. We're going to keep Tasty Live programming continuing, though. We're going to go to a brief break, and in a few minutes, top of the hour, Liz and Jenny here. We'll keep this train moving. This train doesn't stop, Jamal. We'll see you later today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. How you doing, Jenny?
Oh, I'm great. I'm great. It is a wacky Wednesday here on the trading floor. There was a little bit of action a couple minutes ago behind me. SPOOs are down 6, so we have a slightly red day today.
Slightly red. I mean, they've gone nowhere quick, though. We've been here before. We're kind of staying right around this area. They've been as unched to down 6, so that's about as crazy as we can get it.
Yeah.
The craziest thing that happened to me today is Jenny's new outfit, where she monogrammed my maiden name into her blazer.
Liz, L.R., Liz Ruda.
That's correct.
I told you about my trip to Ralph Lauren looking for some blazers, and they all had Liz Ruda's initials on it.
I need to go to Ralph Lauren now because I was like, whoa, that's amazing. It says LR. That's my maiden name.
Her maiden name, she didn't want to get rid of it, so then she hyphenated her name. Liz Ruda.
I never hyphenated it. It was an alias.
Oh, an alias.
I could be and or.
Oh. Which caused you a handful of problems.
Never, a PSA announcement, never do that.
Never make an alias because she's had quite a few problems when we're traveling on the road.
Do you have another name? Well, yes, I do. That's all you have to do. But nonetheless, we've got an exciting show today, Jenny, because we've got the study from Jacob, our resident genius who we love, our SPX study. We are in front of the SPX pit. We're at our happiest place on earth. We can't wait to go over it.
And I think the results are great. Results are great. I love it. This is a short-term jade lizard study. That we're going to get into that soon. I love to take profits when we have them. Do you want to close our earnings trades from yesterday?
Heck yes.
Just in case. I like to take winners when they're winners in case they turn from a winner to a loser. So let's get in. And so glad I took the time during last call yesterday to get on my phone and put these trades on myself.
I'm telling you, I'll run last call because I can I have four monitors running. I can watch YouTube. I can do everything. Here we go.
I am not a multitasker.
Let's pop into the platform and we're going to take off our winning trades from yesterday.
Okay, we did an earnings trade in A&F. A&F is up 850, so quite a move in A&F. We put on a diagonal, the 75, 85, 9-day, 2-day diagonal. It was 10-day, 3-day. Now it's 9-day, 2-day. And it could be worth $10 if we go through 85 at 83.32. This is worth about $8.25. We paid $3.65, so we made $460 overnight in A&F. And I will say thank you very much. I looked at my salty sweater from Abercrombie, thought about wearing it today, but it's 87 degrees where I live.
I'm not gonna lie to you. If you wore that sweater, I think I might die looking at you in the heat.
This is closing 8:25, and I got a pretty quick fill. The markets are a little bit wide, but I got a quick fill getting out of mine.
Yes, and this is something we're going to keep. You've got the market in. Hopefully, we do get filled. There were a handful of other things. The
Bath and Body Works. Yeah, Bed Bath and Beyond no longer. That was BBBY. Now, yeah, that's gone. This is Mikey's Bath and Body Works. I hope we just sold puts. I hope Mikey's just straight up long because it's up 225. It's up 12%. Bath and Body Works. We sold puts for $45. There are 2 cents to buy them back with Bath and Body Works up to almost 20. So that's a big move for Bath and Body Works. Take a look at this chart, Liz. Look at that jump.
Woo! Woo! Do you know, we also got filled on our Carnival Cruise GTC.
Carnival Cruise, another one. Carnival Cruise up 4% today, and it was up yesterday, and it had a little bit of a rally as the week's gone on. So our CCL position,
we got filled on.
Filled.
It's gone. Be gone.
Closed. Here it is. GTC hit. Great.
So we're still working. That's the only thing we've been filled on so far. We will make sure we cancel replace and look at the A&F and
I'll adjust A&F
and the BBWI.
In A&F, the markets are wide, so instead of going down by a penny, I went down by a dime.
Whew. You're crazy.
I'm giving up a dime, but we're taking a winner. I'm not going to give up a dime to get into a new trade, but I'll give up a dime to close a winner.
For sure. Absolutely.
Yeah. Okay, so those were yesterday's earnings. As far as today's...
Did you put an order in to close the Bath and Body Works?
I didn't.
Yeah, close it.
Well, only because I have these too, and I put in a 2-cent bid to close it, and I wasn't getting filled. I wasn't getting filled.
Pay 3 cents, carp your own market.
No, so this is quoted in nickels. So you see my 2-cent bid is not showing.
Yeah.
It's in a book. It's in a book along with my 2-cent bid, but I never got filled on it.
So things that are quoted in nickels, they're still traded in pennies. So you might get filled on it. Just leave it.
You never know. The only reason I didn't put it in because I knew I wasn't getting. I put it in early this morning. Never got filled on mine. With it trading at 20. I'm not sweating the 16.5 puts. Something would really have to go.
You're sweating for other reasons.
It was a hot day today in our train. It was this morning when I said, Alexa, what's the temperature? And she said 87 degrees today. I almost died.
You're like, Liz isn't going to handle this well.
And our train was 30 minutes delayed and we were out in the blazing sun waiting for the train.
Yes.
Our makeup all melted off before we ever got on the train.
Well, it's gone as well. Okay, so we managed all of our earnings trades from yesterday. There are a handful that are today. We will be taking live tweets with the hashtag LIZJNY. Frank the Great, if anybody is coming in from YouTube, maybe you can help us out and put those on there as well. He's amazing.
This is what we're looking for. Any tweet. Oh, look at what's going on in forward, Mikey. Mimi needs some more mind eraser money, so trying to strangle in forward.
Ooh.
Strangling forward. You watch out. You better watch out for that 17 call, Mikey.
He's a crazy man. He's a crazy man, that Mikey.
So this is what we're looking for. Anything with the hashtag LAZJNY. We've got a handful of tweets coming in, and we will get to those. But before we get to tweets, do you want to get to the market measures?
This is my favorite 15 minutes of the week. So yes.
Her favorite 15 minutes of the week, talking about looking over the results of Jacob's most recent SPX study, and this time it's on extremely short-term jade lizards.
Extremely short-term jade lizards, and as we go through this, I will be talking as well because I've been doing extremely short-term jade lizards for about 2 weeks now.
Yes, and they've been great.
They've been very, very good to me.
They've been great. I think it's from Liz Deerking.
No, Mikey, I'm going to need you. It's been very, very good to me. You're supposed to say it with an accent. Some baseball player, I think.
I don't know, but they have been nice. But we've been in a market that's been going up or not moving much. We haven't seen wild moves. To the downside.
No, they've been wild, but they come right back. So sometimes you'll get a bounce down or a bounce up, but it seems to kind of normalize, which is kind of crazy.
And so I'm really excited to start this study. Let's just jump right in. Extremely short-term jade lizards. We asked Jacob to do this. He did the 5-day, 7-day, 10-day jade lizard, and Liz said, forget it, I want my money today. She started doing daily jade lizards, so we asked Jacob for a study on daily. He did daily and 1 day.
And this is building, right? So we're going to keep going forward with these until we vet all this. Because there's a lot of other things that we have questions about.
And the results are great. I love when he gets a study because the results are great. It might not change your entry trade, but it might change your profit target.
Yes. My profit target, I don't think is on here. We'll take a look.
You'll wait till you see these results. I mean, I liked it. I liked it because I know yesterday, some of the days you're just trying to leave it for full profit.
I've left them every day for 2 weeks.
So when you see these results, you may change your mind.
Possibly. We'll see. I'm pretty stubborn.
You might change your mind, but I like this study, and let's see. In my mind, there's a clear winner. There's a clear winner as far as 0 day, 1 day, but they're all winners across the board.
That's good to hear.
Oh, someone's doing push-ups.
One-armed push-ups, like the Wildcat.
Someone's doing push-ups, and I don't know if they lost a bet or if they're just working out.
Do you know that this is a true story? One day, down here years and years and years and years and years ago, I was in a push-up contest.
Can we get the push-ups on camera? I would love it. I would love it if we could get the push-ups on camera.
Do you know who I had a push-up contest against? Who? Chickser. Do you remember him?
Oh, yes. Yeah. Something tells me you could do more push-ups than he can.
He was little and could do a lot, but at that time in my life, I was in good shape. Yes.
All right, back to our study. Here we go. The classic jade lizard pairs a short call spread with a naked put, with the credit covering the call spread with and eliminated all risk to the upside.
Okay. In short-term contracts, the buying power requirement on a naked short put becomes prohibitive, to say the least. So short-term jade lizards swap it for a wide put spread, taking in sufficient credit to retain the upside protection, but technically as a skewed iron condor. I'm glad you're putting this to bed because we get that all the time.
We call it a jade lizard. People say, isn't this an iron condor? But we're looking at it as a Jade Lizard. We have to buy that put because SPX is just too much buying power.
Well, and it goes in as the platform puts it in as an iron condor. It doesn't know how to separate it.
Okay, recently we've explored a range of approaches to trading these Jade Lizards beginning at 7 DTE, finding strong and consistent results across a wide range of parameters.
Yes, and this week, a week out is short by most standards, but 0 and 1 day traders might reasonably ask, why wait at all? Today we test the fastest Jade Lizards available.
All right, why wait? Some people want their money today.
It's me.
Here's the study using 3 years of data in 0 DTE SPX options collected every 10 minutes.
And then they considered the results from selling short-term Jade Lizards either at market open on the day of expiration. So this is different than 9 a.m.
Yeah, this is market open.
Market open. He's sometimes has done at 9 a.m. Consider the results from selling short-term Jade Lizards at market open on the day of expiration, zeros, or 15 minutes before the market closes on the day before, the one day. So you're not doing it now for tomorrow. You're doing it right before it closes.
Right. Our trade right now it's 10:17 a.m. Chicago time. So we are not putting either of these on today because the study is market open for the 0 day or 15 minutes before market close for the 1 day.
Correct.
There's no study for 10:17 a.m. for the 0 day or 1 day.
I'm putting it on the list, Jacob.
Following previous lessons, each structure was placed as far out of the money as it could be and still relatively reliably collect enough credit to eliminate all upside risk, resulting in a 0 DTE $20 wide put spread and $5 wide call spread at 25%
the expected move. So you got to remember, with that one, he's bringing it pretty close. That's not the expected move. He's saying 25% the expected move. Okay.
And then $30 wide put spreads, $10 wide call spreads at the money. That's really close.
Those are iron flies.
Yes.
Look at those before.
$20 wide puts and $5 wide call spreads at the expected move, which is usually what we go to.
That's usually what I do. Actually, I've been doing 10-20.
Okay.
And I'm not collecting over. I'm collecting less. But that's fine.
Okay, slightly less. And then 1 DTE, 30. So the 1 DTE is $30 wide puts, $10 wide calls at 25% of the expected move, or the previous one was 1 DTE, $20 wide puts, $5 wide calls at the expected move.
And you know what? I'm really glad he's doing this study and they have to put the parameters. So he's doing a true Jade Lizard, meaning there's no risk to the upside, which is why your calls are so far in. When I'm placing mine, I'm doing the expected move, and I'm not collecting over, but I know that it's less than the bottom.
I don't know if you noticed it here, but on the 0 day, there aren't any studies with it at the expected move. It's either at 25% the expected move or at the money. There's no study for the 0 day
because you can't cover.
You can't cover it.
You can't cover it. So Jacob had to be smart about it and bring it in.
Right. So if you put these on the 0 day and you're trying to go to the expected move, just know you're not collecting enough credit to cover that call spread. But that's okay.
Can you pop in the platform? Okay, so the rest is up there. Examine profitability, typical trade duration resulting from closing winners, variety of profit targets. Some highlights of the 7 research are presented for comparison. Thank you. And all trades were exercised at Chicago times.
So you want me to go on the platform? I'll take a look at SPX 0 day today if we were on the open, what he's talking about. 25% the expected move is close, right? If the expected move is $21, I'm going to go $5 down. So we're trading almost at 75.10.
Well, he did 25% of the expected move to the upside
and downside.
Was it?
Well, why
wouldn't it?
Why wouldn't it be?
I don't know why.
You could see
with wide calls at 20. Oh, I guess it's both.
You could see the 0 day DT, $20 wide puts and $5 wide calls.
Do you know what? In my mind, I just assumed he brought the calls down because the puts were at the expected move. Because that's real tight. If it's 25%, you're going to get well over $5.
And $10. Does it say anywhere that the puts were at the expected move?
It does not. It does not say. We need some clarification there, but I think you'd be well over. So let's go vet that out.
Let's take a look. Because if I'm going just 20% of the expected move or 25%, I'll keep it here. $20 wide puts and $5 wide calls.
I'm getting well over.
I would like to make it the put at the expected move, and that's how I would set this up.
This is how I'm going to assume. I'm going to make a little bit of an assumption here because you're still collecting over. That's why he's 25% the width on the call side, and it makes sense because you have no risk to the upside in the calls that you bring those in instead of the other one.
But I'm not 100% sure. I'm not 100% sure if Jacob's putting both shorts at the 25%.
I don't know. I don't know.
But that's
because otherwise it's very Ironfly-esque. It's very much like the at the money's.
And you've got a lot. Your risk is to the downside. So why would you want that? I'd want that as far as I can get. As far as I can get.
Yeah. In my small little brain, he's got one at the expected move, and that makes sense to bring the call in because that's to collect over.
Right. Okay. So if we take a look at the next slide, here we have 0 DTE, $20 wide put, $5 wide call at 25% of the expected move. It doesn't say just calls.
I know. We'll get to the bottom of it. But I think that's a lot. That's very similar to the next one then, where it's 0 DTE is at the money.
At the money.
They're so the same thing.
Right away, my eye line goes to average P&L, and they're all positive. And the best performers are either closed at 50% or closed at 75%. So this is one I saw where I thought if you're doing these 0-day, closed at 50% or 75%, seem to perform quite a bit better than the no management.
Do you know what's funny? So I have an order in. When I place the trade, I'll put an order in for 50%. If I don't get it by the end of the show, I cancel it.
Okay.
Because right now I'm gonna hit 50% during our show.
Right.
And if it hits during the show, that's what I do. If not, I cancel it because I was like, I'm just gonna let it ride anyway.
Sure. So I
don't know if
think
that's
the
right or
reason
wrong.
the no management P&L is lower is because it ends up blowing through the calls.
I think so too.
Right. And then you make nothing.
But right, that's why, because you make less.
Mm-hmm.
So it's not bad.
No, I honestly think this is the one, to me, this might be my choice. These are good average P&Ls. These are daily 0-day trades. The win percent is high.
I like this a lot. And I'm glad he did this study. We're going to get some clarification, and we will get it after the show, and we'll report back tomorrow on our live show.
Yeah, you could always team some.
Yeah, we'll report back on our live show too tomorrow when we do it. But right now, I kind of agree with you. So no, these are the at the monies. So that's what I'm saying.
He's going wider, $30 wide put spread, $10 wide
but
call
they're
spread.
still at the monies. That's an iron fly, which is very similar to what the other one was.
So you're going $30 wide put spread, 0575.
0575.
And then $10 wide call spread. You are getting over $10. These aren't bad. Your risk is $1,700 in this. Your risk is $1,500 on the other. Mm-hmm. So the risk isn't that much different.
I would be surprised I think this is going to make less because I think this is going to go through the call spread.
No, it made more. 162, 141 versus 110,
Whoa,
116.
how much do you have overage? How much do you have over the $10?
You've got $12.
Exactly.
Here.
So this is blowing through the call spread.
I almost like this one.
We did this last week, and we got a full loss.
So I almost like this one. Right, we did this last week. I know, because if you get a down move during the day, it will be a full loss.
Correct.
Right.
And the reason that you're getting more money for this is because you have over on the call spread.
So best performer here closed at 50%. If you're getting $12 and you close it at 50%, you're making $600 on each one. So the fact that your average P&L is 162, you're going to have quite a few losers.
You're having a lot of losers.
Yeah. But your average P&L is 162.
Yeah.
So you're going to have a lot of losers.
So this is interesting, and I'm glad he's taken his own take on it. We looked at this because we liked that we looked at this last week because the drawdown seemed a lot better. But I really do like my method. It's been working, so I'm not going to mess with it.
Right. I might start trying this every day just to see. To me, the risk is similar to the $20 wide because you're collecting so much more on this
and
one.
I don't mind because you have an overage over $10.
You got an overage.
Yes, the overage is helpful.
Well, and the overage, when we say overage, we've got a $10 wide call spread and we're collecting $11.30. So
but it's also 10 whatever time in the morning. So you should be around $12.
It's going to be more on the open. It's going to be more on the open. You might get, but this is with the vol at 18. We've got this IV here in the 0 day of 18. If we get to a very low, dreadful point in the middle of summer where vol's 14, you're not going to get as much.
Dreadful. I mean, that's good verbiage. That was a good, excellent word usage.
Okay, so to me, mean time in trade when you're doing a 0 day doesn't really matter.
I agree. Okay, now let's go to the 1 day, the next two slides.
Okay, the results are worse.
So this is putting it on at night.
And you're getting less than half. So our best performer was winners close at 50% and 75%.
No, this is at expected move. So this is a totally different study.
Yeah. It's going at expected move.
So this is
you're collecting less. But I don't know, it's the next day.
No, he's the next day you're collecting $5. His parameters say when you can put it, like remember the last week's, it's if you put it on. Do you think it's why your average P&L is less?
That's what I was going to say. If you're collecting less, then your average P&L would be less. Because if you compare, this is a $20 wide put, $5 wide call. You go to the 0 day, $20 wide put, $5 wide call. Your results are much better. That's why I do think these are both at the 25% expected number. I think he's collecting more.
I think you're collecting a lot, and I think you must have an overage here too. You have to have an overage here. Meaning, what we're talking about with an overage is if you've got a $5 wide, say you collect $6 or $7 on it. That's where you're getting these numbers from.
But I'd rather make $110, $116 in the 0 day than
that's why
$46 or $62 overnight.
I'm telling you, these have been instant gratification for me because I'm watching this, and like I said, with my son's account, I think differently. I'm watching this, I'm watching his. He's just doing the put spread portion of it, and I'm watching these, and they are very instant gratification. Yeah. You need to stockpile a little bit of wins to make it feel a little bit better because if you lost on your first two, it would hurt.
It would hurt. It would hurt. We saw in that $10, $30, $1,700 in risk. If you lose $1,700 today, $1,700 tomorrow, you might not come back to the third day.
It's a kick. It's a real kick in the teeth.
Yeah, and you can't. And these can hit full loss.
Yeah.
These are something that I wouldn't put on if we've got some number coming out. I'm not going to put this on the open if we've got a number coming out 30 minutes later.
Well, like I said, it's fascinating to me because my son is a bot when he does it. Like the other day when he put it on, spoos were up 59, and he put it on. I was like, "What did you?" It's okay.
But still, I think if I'm doing the 0 day, taking $1,700 in risk on that $30 wide put spread, if we've got FOMC or something happening during the day, I might skip that day.
Yeah, I mean, that's your prerogative.
Right.
Jenny Andrews, that is your prerogative.
Skip that day. All right, so here we have the 1DT $30 wide put spread, $10 wide call spread, slightly higher average P&L, but still the 0 day is an outperformer.
Right, zeros for the win. I mean,
zeros for the win.
I like trading zeros because you know what's happening at the end of the day. You're not carrying any risk overnight. You don't have to look over and be like, what is the market doing right now?
Right.
It's gone.
You can go to bed, sleep soundly, not worry about where the market's opening tomorrow.
But I will tell you, I watch that SPX position at the end of the trading day like it's going out of style because sometimes it's teetering on full loss, full win.
Liz, the results on the 0 day are close it at 50 to 75%.
You would be shocked at how well it's been working for me in the 0 DTE. But I'm not, I have a different one. I'm not covering the width. I'm not.
Right.
I'm not. I'm actually doing a $10 wide, $20 wide. So I'm collecting between $6 and $7.
Right.
So I have $300 in risk to the upside, but it's far away. It's at the expected move.
So ask him to study
that right now.
Because I was going to say, you
strikes?
have like 2 weeks of data. This is 3 years of data.
Here, look at my strikes. Let's go into the SPX if you don't mind, because I have them pulled up. So this is what I have on this morning, and I put it on. Now I'm later. This is at
9 a.m.
This was at 8:53, so I was a little bit earlier. Okay, I've got this on the put side, 74.80, 74.60.
$20 wide.
Yep.
And then the $5 wide.
$10 wide on top. 75.40, 75.50.
Yeah. But this, to me,
and I collected on this one $6.
To me,
so look, that's 50%.
This is, because you're going the expected move, this is Jack Tucker-esque, Blue Wackadoo-esque. This is similar to just an iron condor.
So I started with the puts, but I was like, I'm going to add the calls on, but I want the calls to be far enough away where if I get hurt on them, I'm okay with it. So, and the other thing I'm doing is if it's meandering up, like if you're meandering up,
close to the call
I'm closing
spread,
it.
Close it. Right. Close it.
Yeah.
But this is similar to an iron condor more, because you're not covering the width. It's two wider spreads. You're at the expected move on both sides.
But there's more risk to the downside
so
than there is
just
the
like
upside.
a iron condor. Okay.
So it's been pretty interesting. Let's look at Jacob's takeaways.
No, he does show the 7 day
the
from
7
last
day.
week just to compare. And here, again, the results on a 7 day where you're in this, the best case scenario managed at 50%, 25%, you're in it for 4.6 days. Or give me the 0 day.
I'd rather $117 in 0 days.
That's why the 0 days are the most active SPX options.
Yeah.
Yeah, give me the 0 day.
So, and I will be doing Annabelle's going to come on our morning show, and I'm going to talk a little bit about this tomorrow as well. She's going to be simultaneously learning from the basics and having a 0 day in. I just got filled at 50%, or more than 50%. Going through the whole process. So you'll see all those.
And so that was, it's 10:30. You've had it on since just about 9.
Yep.
So about an hour and a half. And so here he looks at the $30, $10 wide. This one, you're in longer because he's at the money. But
about an hour. I collected $6, made $3.
Yeah.
I'm kind of mad I didn't hold it. We don't seem to be going anywhere. I can always put it right back on, though. That's the great part about closing a trade.
Okay. So the 7 day, it performed well. It did perform well, but I think I like the 0
And
day.
some people, if they want to stay in it longer, like I said, this is a choose your own adventure. If you feel better having a longer duration trade on, go for it.
But you're not battling with the 0 day. You're not battling the news. You're not battling any news that could be coming out tomorrow or coming out the next day. It's on. It's off in a day. You're not worried about what kind of news is coming out tonight.
No, these guys have got it right.
All right. Takeaways. 0 DTE Jade Lizard shows strong promise for traders looking to sell short-term SPX premium. In particular, the at-the-money $30 put, $10 white call version with moderate profit taking produced some of the highest daily returns we have seen.
So that's when we entered at a very unlucky time. Remember when Jacob used to say these are the unlucky times? That's what we did. We entered at an unlucky time. I think we need to get back into it.
We did one. We did this. But I think these need to go on the open. They shouldn't go on at 10 a.m.
No, they shouldn't. Okay. No, we did it for the next days, I think. Okay.
Right.
Or the 7 day. The last few minutes of the trading day have been treacherous for short premium. So even though 75% profit targets rarely triggered until shortly before the close, they significantly outperformed no management. Now, I will tell you those are facts because I've been tested more. Like I'm like, oh, it's easy. I'm going to hold out for my last.
At the very end of the day.
I've been tested at the end, and luckily it's kind of the deck has swung in my direction at the very end. But they've been tested like to the point where I was like, oh, I'm going to leave it because I need the extra $50.
Why don't
that's
we
the voice in my
ask
head.
Jacob to give him exactly what you're doing?
I did.
At the expected move, call spread, put spread, and we'll ask for that study next week.
Yes. And that because rapid management can't protect you from overnight moves, 1 DTE Jade Lizards performed more poorly with very low profit targets, unlike either the 0 or the 7.
Yeah, 7 day for the 7 day. 0 day in my mind, 0 day for the win. For traders who've cut their teeth on the 7 DTE version and aren't phased by a potentially rougher ride, the 0 or 1 day Jade Lizards may be an appealing addition. A slightly rougher ride. Slightly rougher ride with the 0 days, but we don't mind the risk.
Yeah, I mean, I guess it is but you're subject to the movement no matter what. Right?
I feel like it's less risk when you're in the 0 day.
That's what I'm saying. You're subject to the movement of what the SPX is doing no matter what.
Right.
You just have the hope that it's going to bounce back. We were in the 7 days when we did it the last time.
I wish I was always 0 day because I've got all the. Although I don't mind my 45-day Aaron Kinders, and we do know a lot of people who've that was their bread and butter back in the day. Back in the day when retail traders were really getting started, that was almost like the main thing they were doing. 45-day Aaron Condors. Yeah.
I agree.
So that's old school.
Hey, but you know what though? Times change, people change, right? Hey, times change, markets move.
Markets move, times change, new products emerged, and now
these didn't exist. And I've said this before, and I'll say it again. In my opinion, in my humble opinion, the 0 DTE SPX has been the biggest game changer I've seen in my 30-year trading history.
For sure. And it's brought such life back onto the floor because it's getting busier and busier. More people are coming down. More people are trying to get down here.
And everybody's got the zeros, but the SPX in particular, because it is cash settled, meaning you can let it go until the bitter end.
Speaking of cash settled, we are not going to put on the SPX. We're not putting on this SPX today because it's 10:34. But what we can put on is Mag 10.
Oh, sure.
You want to? Want to take a look? Let's take a look at Mag 10.
Let's pop in there and be descriptive, please.
Okay, MGTN. This is, you said cash settled. I thought, let's look at cash settled. We got into Mag 10 briefly. Well, you got filled.
I got filled on 2 separate trades.
So it's new. It's not super active yet. So it's harder to get it filled. We didn't get filled, but I almost want to try again. What do you think? What do you think we should do in Mag 10?
So it is cash settled. You can go where they have the 2 day.
I want to check the I'm going to check the open interest and see where there's the most. There's a little bit of open interest in the 21 day. Yeah, maybe the 21 day.
Or do you want to have 0? Let's go instant gratification. Oh, never mind. It's too expensive.
Yeah, it's an expensive product, but maybe if we just.
Oh, what's great about this? Hold on for 1 second, Jenny. Go to the 0 day. Let's put our money where our mouth is. We just did a 0 day. Go aggressive. Do the 509, 505. $4 wide for $1. We either get $1.
Well,
or it's cash settled. We're not going to come in with anything.
It is cash settled.
We're not going to come in with anything.
Okay, Spoo's down 7. But again, I think all of our studies show if you're trading these 0 days, it's got to be on the open or at 9 a.m.
This is just saying that I think it's going to stay. All I'm saying, and I like to put these in terms for my son, I think it's going to stay above 509 today.
I don't know. Spooks are down 9. I feel like we could be down 20.
We could be. I got him out of my trade.
That's what
my poor kid's still in it though.
Let's give ourselves a little bit of room. Let's give ourselves a little bit of time. I'm going to try the 21 day. And maybe we do Jacob Ask, but 21 day, where we have $10 wide call spread, $10 wide call spread, $20 wide put spread. Get $12.
Go for it. Press that button. We'll see if we can get filled. Leave it mid-market and let it work.
Max lost $1,800. Oh, I did $30 wide. $20 wide? None of these are that appealing to me. I was hoping we'd go to Mag 10 and we'd have $5 wide strikes.
You don't.
We don't. We want. Here's what we want: $5 wide strikes in the Mag 10.
Yeah. We're not gonna take it. No.
All right, let's move.
It'll come.
Yeah, we're waiting for it. I'll go talk to those guys. When we leave here, we pass the Mag 10 pit. I'm gonna talk to those guys and tell them we want $5 wide strikes.
She's gonna go shake down the Mag 10
Shake
pit.
down the Mag 10 pit. Fazia came in today and said, "How about a short-term reverse jade lizard in CL?" So sure, CL's a big product. Fazia's Big by Big. She's amazing. You can follow her on our follow page. For the two of us, I think we need a MCL reverse jade
In this
lizard.
account.
Yes, in this account, MCL jade lizard.
Let's take a look at it. We'll follow after Fazia. Did she put it on? Let me go to the follow page.
She posted that yesterday afternoon. So MCL's slightly moved since then.
Yeah, but I was
so
going to see if she
it wouldn't be the same strike.
And she did an adjustment today. Yes. So she did post it. She posted it yesterday at 11:22 a.m. Sold a reverse jade lizard. You can see it right there. Just hit Fazia.
Here she is.
And she is a couple down from there. She did it at about 11:22 a.m. yesterday on 526.
Are these all of her trades?
Yeah, you got to go up a little bit more. Go to the top. And then go to...
here we go.
Yeah, right there.
So sold reverse jade lizard. And then today made a little bit of an adjustment.
No, just follow the trade and then we'll adjust our strikes.
But
we're doing
going to do
MCL.
MCL.
Okay.
We're going to do MCL. So she's in CL. We're going to do MCL. But a reverse jade lizard, I'm going to stick. Okay, we've got MCL trading 90 in the MCLN future. Then we go to MCLQ with the 50-day. Do we stay 20-day current future, 50-day next future? 20-day. 20-day. And a reverse jade lizard is a naked call and a put spread.
And what's interesting here is you can kind of make it as put spready as you want because there is 0.5 strikes. You have a 94.25, 94.5, 94.75. Like the world is your oyster here. They just added a lot.
So if I just go down and sell the 81.80 for $1, I'm only getting $22 for that. I'm going to make it wider.
You need at least 30 cents.
How about a $2 wide? 82.80 for 50 cents.
Great. And you got to find a
call for $1.50. So scrolling up, call for 150, and this is going to be where our risk is going to be in MCL. Call for $1.50. I'm going all the way up to the 103, even the 104.
Yeah, you can do the 104.
Yeah, because I don't care if we have there's a nickel in risk. So if I sell that 104 call.
I like that you're sticking with the round numbers just because you can see the open interest versus the volume in these. They are landing at the round numbers.
104 call and the 82.80 put spread. Our risk is at 104. What would happen, Liz, if oil went to 150?
150 and we have 104?
Yeah.
I was told there'd be no math, but
we'd be out we'd be out
couple grand.
Yeah, for like $4,000.
Couple thousand, yeah.
Yeah.
Just under.
So our short is at 104. Our break even's at 106. If oil went to 116, this would lose $1,000.
Yes.
If oil went to 126, we'd lose $2,000. So our risk is that naked call.
If you take you can press the button, but take a look at the chart because the chart you're hitting the top it's been. Our short is the 104. That's exactly where it seems to have painted the top a couple times before.
And that's all. This is just the chart for MCLN, the N future.
Yeah.
So
sure, let's do it. Let's jump in with Fazia.
Yeah, let's jump in with Fazia. I agree. Yes, boost down 12 now.
Yeah.
So we're having a little bit of a red day.
No, it's not though. Like this is nothing. Like boost down 12 is
when
nothing.
We're green every day. I would say anything red is a little bit of a red day because all we see usually when we log in is green.
Wasn't yesterday a red day or a green day? A red day. Was it? Yes, NASDAQ was down all day yesterday, which would have been your MAG 10.
This I'm shipping this. We're taking in just under $200. It's using it's using 1,400. And actually, I'll go. I'm going to go to the curve view so everyone could see what this trade looks like. On the analysis page, here we have. This is a reverse jade lizard. You see us so many times do a regular jade lizard. A reverse is where we have no risk to the downside, and our risk is to the upside.
Yes, and it's got a decent IBR, so this is good.
Yeah. All right, shipping this.
I'm not shaking yet. We're selling a naked collar oil.
It's MCL. That's why I wanted to talk about the risk. Like if oil went to 150, which would be crazy because we haven't seen it over, 104, 105. I mean, it did get higher than that.
This over 104, 105.
So if you want to see the longer term chart, you type in what / $$ $. Is it $? $/ $/
MCL. Go MCL. Don't go CL.
MCL. Then you'll get a longer term chart. And we could see it got as high as the previous future, got as high as like 115, 117, even saw
120 print.
119.49. Yeah. Highest it got. So our risk is at around 106.
Yeah. Yeah.
That's why
that's why I like the shorter term. Do I think oil is going to stay in this range forever or for life? That's what I love about options trading.
This is a 20-day.
No, that's what I'm saying. The shorter term makes me feel better. I don't, even when we're selling puts and doing things of that nature, I'm not saying that I think it's going to stay above this or below this for life. I'm picking a time frame.
And we're in with Fazia now. I know hers is the big dog, and she's probably collecting more because she does like to collect more. But ours is a baby version.
Oh, good. We're filled. We only got filled on CL so far.
We're filled on that. I'm gonna adjust this Abercrombie because I really want to get out of this trade for a win. If we paid 365,
how wide are the markets in it?
They're wide. They're wide. If we paid 365 and can I get out for 765, that's $400, and I feel like we should just take it.
Oh, for sure.
I'll go down to the mid-market, 773. It's annoying giving up so much. This is why we like liquid products. You give up a lot trying to get out of these wide markets.
You give up more than you want to give up.
Yeah,
those mid markets.
Okay, and that is it. Let me jump into Twitter, see if any other trade ideas coming in. So thank you, Fazia, for that, and Frank Walsh. Tuesday option volume. What calls leading puts 11 to 7.
11 to 7. Thanks, Frank the Great. He gives us all of our financial information. Then Frank the Great comes in with a financial calendar, which is also good information. We appreciate him posting those.
And let's see what else we have. Semper Augustus. The slides about short-term jade lizards show how to manage winners, but how do you manage losers? If it's a 0 day, I don't think there's a lot of management for the 0 day.
No, I don't think there's a lot of management for the 1 day either. It's almost like game over. Your risk is managed at order entry, and your probabilities are managed at order entry. I think those are,
especially when your shorts are so close to at the money, you can't roll down. If you're at the expected move, market's going down, going through your puts, you can keep rolling your calls down. You keep rolling those calls down and collecting more because you don't have risk to the upside.
I know, but I still don't know that that's the right.
It's not going to help you.
It's not going to help you that much. That's part of the problem.
Maybe it'll knock off $1 risk here, $1 risk there if you keep rolling the calls down. But
so I do think when I'm looking at these, I don't think there's a management technique. I think it's on, and then you can decide. My management is decide if you don't want to take a full loss, right? So if you're looking at this, so say I had $1,700 in risk, or I'm sorry, $1,300 in risk, and I get to the point where I'm down $200 and I've been on a winning streak, I might be like, that's my management. It's where my pain point hits.
I feel like
but I'm not going to try to roll it out to the next day. I want a fresh set of eyes on it the next day.
There's only management when you're at the expected move. So if I'm at the expected move with my put spread and my call spread's up here and we're down, yes, I can roll my call spread all the way down and keep collecting money until my short call is the same as my short put. And if you can keep collecting over and you've covered that with the call spread, you can keep doing that. But when you're starting with the at the money, or you're starting at 25% the expected move, there's no room to roll down.
Well, in rolling down, you will notice. Now you're in the 1 day. In the zeros, I've looked at this before. When you're in the zeros, you're not getting much. Like I've looked at it and been like, wow. Do I need the 40 cents?
That's a good point.
That's part of where, just in case it pops back up and this market. Like, do you need the 40 cents? You don't get as much as in theory it makes sense, but I don't necessarily know that in practice it does.
And so this is why in the results here, if we look at this, these 0-day results,
it's managed winners or no management.
$30 wide, $10 wide, you're collecting $12, so $1,200. And if you're keeping 50%, you're keeping $600 a day. Your average win over time is 160 because you have losers.
You have a lot of losers.
You have losers, yeah. And so the management of losers, we've done studies. It doesn't make sense to close it by noon if it doesn't work out, and the results haven't been good. They haven't been favorable for.
They haven't been. I mean, the way that I look at it, like I said, it's a personal preference because it's a pain tolerance. Like, what do you think the market's going to do?
A Jeep, Costco. Look at this, Costco, $1,000, over $1,000. Short strangles. I think a Jeep loves to impress us. So he collects so much. It makes people jealous. A Jeep, people with a small account like us here on this show, we get very jealous. He's selling a strangle in Costco. What are his strikes? 940, 1080, 618, 618. In Costco, 940 put, 1080 call.
I'm in a Jeep.
$1,200.
Do they have earnings? They don't have earnings.
No, they do. So you're getting $1,200, but your
earnings on Thursday.
Out of the way of the expected move. Rank is 72. Earnings are
Thursday
coming up.
Yeah,
he's a Jeep.
I like it, a Jeep.
He doesn't mind risk.
And then go underneath too, because go underneath his Costco trade because he comes in with earnings plays with elevated implied volatility, AVGO, CrowdStrike, Marvell, Nike, Oracle, PANW, and Snow.
Okay.
When does AVGO have earnings?
Earnings date 6/3. So 6/3 coming up, Crowd coming up, Snow. Got a Marvell's. Is that tomorrow?
Today. Marvell's today.
Let's look. Frank sent this off of the chat. If SPX goes down, how to manage those short-term jade lizards?
Max loss is rather steep. I agree with you.
It is.
Max loss is very steep.
And like today, SPUs are down 18 now. If you're doing it so close and at the money, you'd be tested. Now I know there's a viewer who's emailed me who he will, if SPX goes down and it's in the middle of his put spread, he'll roll it to the next day or the next day. If it's trading in the middle of your spread, you can roll it for even. And I've talked to a viewer who does roll out.
Yeah, for sure.
Yeah. What is Mikey sending? Liz, I got you.
Oh, it's been very, very good to me. It's SNL. Thank you. Mikey's the best.
Oh, Mikey. Sorry. It's the disappointed guy.
Because she's selling the boat today.
I always told Mikey he'd come with me. But here we have Bob's earnings.
But Marvell is not on Bob's earnings. Oh, yeah.
Yeah.
First one.
Marvell, Salesforce, Snow, all today.
So I know that's what these are a lot. Let's take a look at Salesforce because that's a hot topic. And I want to look at Marvell. Marvell's one of my biggest positions. Frank the Great knows that. I'm protected to the downside.
Yeah.
As much as I can be.
Yeah. Okay, Salesforce, it has not been pretty for Salesforce. We've gone from 300 down to 180. What can we do here? There's a $14 expected move to the down. If I go the expected move, you're getting $250 using 2,200. That's not bad.
That's not bad at all.
No, maybe we do that. Maybe we just jump in with a put.
That's not bad because Salesforce can go down all the way down to our strike price and then some.
It's more affordable today to trade now. At 180, it's more affordable than it was at 300.
Yeah, I know people that work for Salesforce. They love it.
They love it. All right. Well, what do you think?
Sure. I mean, honestly, I don't know if that. I don't care if they love it or don't love it. This is a high probability trade, not using that much capital.
I moved it to the 165, getting 185.
Great.
Because Salesforce has really, it's taken a huge hit. And could it continue to fall? Sure. That's why I don't want to do a diagonal here where we're paying so much. 165 put in the 2-day for $1.88.
You're out of the way of the expected move. It's not bad at all.
Okay, $2,000 selling this put. We'll see. Salesforce. We're filled.
You got your sound on.
Marvell. Let's go to Marvell. MRVL. It has been crazy, crazy tear, up and up and up and up and up.
It has been a crazy tear. It came down. It fell today, but it's back to where it was 2 days ago.
I know. So it's been on a crazy run. As a new trader with no position, I think it's tough to jump in.
I don't. Come on in. The water's fine.
Well, you've been in it for a long time. So for us, it's a $200 product. I just would say pass.
It's a lot of capital, by the way.
It's a lot
so
of
if you look at the
capital.
diagonal, it's going to be about $1,200.
It's expensive.
You look at capital, but CRM was $180.
But CRM was $2,000 to sell a put at the expected move. You go to Marvell and sell a put at the expected move. It's going to be, it's only $1,700.
Yeah, it's less.
It's not that much buying power.
Mm-hmm.
No. No, it's not that much buying power. But I'm a little bit nervous about Marvell.
Well, and I know you like to sell things that are at the bottom of their range.
Yeah, not at the top.
Yep.
Okay. HPQ, that's probably an easy one to take a look at. Snow. Let's see what Snow is doing. 177.
We have about 3 minutes left.
3 minutes?
Yeah.
Okay, usually puts in Snow give you quite a bit of premiums. $23 expected move, go down to the 150, $26 down for $2 using 1,500.
I mean, what price is that? What strike are you at?
150.
I mean, I would, in my opinion, I would rather Marvell, but you can do this. Both of these are high probability trades.
Yeah.
They're all high probability trades. Where's Snow been? Snow's also not participated in the rally. I mean, it's up a little bit, but it hasn't participated in the rally of all rallies.
So here's what I'll say: naked puts. They have risk. They have their naked options. They have risk, and we've said before we don't want it to get taken out on an earnings trade.
Correct. And so the interesting thing is you just have to be able to hold it if things go awry. So if Snow goes down, I mean, I don't know how far away you are. What strike were you at?
So 150.
150. So you're $25 down. And the expected move for Snow for the cycle is
$23. $23.
So if it moves down to the downside, you might have to hold it for a little bit. And that's fine.
And
just
so you're
know
in
that
at
you need to have that
150.
capital.
And so Marvell, same thing.
No. I don't think we should touch
$25 move, 70 put. It's very similar.
They're very similar.
It's almost like the same trade.
And once
right?
again, like I said, here's what I want people to understand. Don't trade my emotions. Trade, because you look at these, and I've always said this, I would love to have done a segment with you where you wouldn't tell me it was Marvell. Because if you showed me Marvell or CRM or Snow, I'd probably pick CRM.
And that's what we did.
Right? Do you see what I'm saying? Like if you covered it up, and I don't know what it is. I'm looking at the implied volatility. I'm looking at what put you're selling and all this stuff. It's hard to remove the emotion, but that's what you got to do. You got to act like a bot. My son's got a thing going on.
It's hard only because these are higher priced products.
Do you see what I'm saying? Like if you covered it up, but I have an emotional attachment to Marvell.
So let's say
an inappropriate emotional attachment.
It's because it's your biggest winner. It's like your baby. It's like your GDX. 1 year GDX was her baby.
Was the bell of my ball? That was Marvell.
And this year Marvell is your biggest winner. Thank God. My concern is if I sell a put in Marvell and sell a put in CRM and sell a put in Snow, and if two of those go double the expected move, I don't want to take that hit.
I don't want to do that either. So I think we have it in CRM. We're done.
Yeah, that might be it. That might be our risk tolerance for the day. Other than we have some babies here.
No. If Abercrombie and Finch went up, did Kohl's get a boost from it? KSS?
No, but did American Eagle? A little bit.
Not really, though.
HPQ, $24. That's an easier. HPQ at $24 is an easy, in my mind, probably a cheap and easy diagonal. You buy the 24.5. You sell the 27. You've got $1. You're paying $1 for a diagonal. That's something that's a number I can live with. So I'm doing a diagonal in HPQ. So the earnings trades we did were HPQ diagonal for $1 and the CRM put for $2.
Yeah, for sure.
I just don't think we can take the risk of naked put in $200 products.
No, I don't think so. And that was kind of my point. Like remove emotion from it. I don't know that we would have done all three.
No.
Pick one for $2,000.
And again, we can't say,
we're not picking a winner. We're just saying, but looking at those. If you're looking at it from a strictly quantitative perspective, you're looking at one that is lower priced already, it's already been beaten down, and you're looking at it from you're out of the money, you're a lot farther away. It's okay. Like you picked.
And rank comes into play. So I know we're out of time, but if you're looking at rank, CRM had an 88 rank.
Yeah.
it probably had the highest rank.
I know. I'm still rooting for Marvell to go up.
Oh, I'm rooting for Marvell to go up for you. I am. I got tapped out of Marvell a long time ago.
Yeah.
That happens sometimes. And then I always wait for a pullback to come back in, get back in. There hasn't been a pullback.
This pullback is like a day. It's a pullback of one day.
Yeah, there hasn't been a pullback. Okay, good luck with everyone's earnings trades. Liz, good luck. Well, you're already out of your 0-day Jade Lizard.
I'm already out.
You're already out. Everybody have a wonderful, wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow. Everybody. Bright and early tomorrow. We're on the morning show.
Oh, we're on the morning show. There's no Liz and Jenny show because we will be on at 7 a.m. on the morning show. We'll see you tomorrow morning.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
First thing about tastytrade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade. We built tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. tastytrade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Eso no es nada, tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada, tú y yo vamos a quiquear. Pégate, motívate, prepárate, que lo vamos a hacer hoy. Llégale, no lo pienses, ya lo decidí. comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear.
What's up, JC Nation? Welcome back to the show. My name is Mike. I'm here with Jamal and, of course, Glenn Freiberger. It is Glenn's day on this edition of Options Trading Concepts Live. Hopefully, everyone's having a fantastic morning so far on this non-event market, at least in the equity space. But
I got some events for you.
Oh, I know.
Yeah. No,
I know. How you guys doing?
Wow.
One thing about me
that
is
sounds a little suggestive, Glenn.
I'm going to have some events.
Sounds a
If
little
you ever
I
catch
got some
me
events for you.
Eventless, check in on me.
Yeah,
how
I
we
guess
doing?
that is.
You didn't
I mean,
get
you're a young go hard. You can't lack events. You
No.
can't just be like doing nothing all the time. You got to be bouncing around, doing whatever.
Yeah, and I was just in New York.
Yeah, I bet you were.
And
nice.
They don't stop there. Holy smokes.
No.
I tried to sit on the couch for 15 minutes. Friends like, what are we doing? Like, we're wasting
Why are you
the day.
here?
And meanwhile,
You
they're
don't
like,
go to New York to sit on a couch.
I know, but give me a break. Just give me a little breather. But somehow I get conned into, you're wasting the day. Like, we got to get out there. The city's waiting. Meanwhile, it's 60 degrees and raining. It's like, what? This is what we had to get out in?
I was gonna say, if the sun's shining, like they're right.
No,
but
not
it
even.
wasn't. It
No,
was raining.
it wasn't. But I'll give it to them. It doesn't matter. Rain, snow, sun, shine. People are out and about.
Walking regardless, doing whatever. Wow, that's great to hear we have better weather than they do right now.
I know.
I mean, I can't believe the weather we got here, and we got several days ahead of it. So much so that, as Mike knows, I have a Bronco, as affectionately known as Bronco Chandler. The top is off. The top has been off multiple days in a row. And it is staying off. It's staying off.
Yeah. Are you getting it washed at the SIBO tomorrow?
No, and you know why? Because I'm keeping the top off.
Fair. Okay.
That's the only reason I'm not getting it washed, because I'm keeping the top off. That's it. Yeah.
Do you have you house it in a garage?
Oh yeah.
Yeah.
Okay.
So what
nice.
Mike is alluding to, my guy Dave in the garage, in the cellar of the garage, has a car wash operation, and
might be a front. Might not be.
But either way, they'll take cash.
Yeah.
$20 for a car wash is pretty good. And as Mike well knows, he said he's had one of these businesses before. Dude literally just uses like a bucket of water and some Dawn and washes the car.
There you go. It's a hand wash. So even with the top down, it's not like he's.
Yeah. There is that risk.
I know.
But
That's what I'm saying. I'm not even going to bother. It's fine. I don't really need one. I'll wait till the nice weather is over to put the top back on and get a wash. The hell with that.
Fair enough. Well, I'm glad that you at home can house it inside, because I there's no greater pain than having to put it on and off every time you use it.
You understand. You get it.
especially in the city or like near the city.
You know, it does
Or be
bear
gone.
worth mentioning. What's going on here? Because I know Glenn's is definitely purple. Mike's can't be the same purple as Glenn, because, God, nobody else would wear that purple unless you went to Northwestern. So I'm just curious, how is it that you guys look so similar?
This is actually one of the rare pieces of merch that is not Northwestern purple. Your eyes aren't deceiving you, Jamal. This is a blue. This is a navy.
Yeah,
navy, darker navy.
sense.
It's the red background. That's what's going on.
So
You guys look great. I mean, got to tell you.
I saw Northwestern is building the biggest football stadium in Illinois.
How about that?
How about that?
Yeah,
Pretty sick.
it'd be legendary.
Was it 35,000 people, something like that?
Yeah, and they aim to be a full suite concert venue. They're letting some high schools play this year.
I mean, it took a lot to get that thing done, because there was a lot of people who didn't want it done.
Yeah, I'm
lot
not
of
going to
people
say
that didn't want it
older crowd, but the population of Evanston that is not associated with the university, rightly so. I mean, that construction's been loud and proud for a year plus now, but
yeah,
their stadium was worth doing over, and there wasn't any. It's not like they were going to a new spot or anything. They were just building bigger and better. So glad they were able to get it done. It should be eventful. Hopefully we'll see some talent attracted to the university as a result. That hasn't been the case so far. You know, this whole NIL era, you'd think Northwestern, you know, a lot of money, great facilities, even with the old stadium, the indoor facility, field house, fantastic. Not enough to attract a good football team. So hopefully the tides
what
will
I've
turn.
noticed sometimes, like I noticed this a little bit at Wisconsin, because there is a lot of money. There's a lot of people with a lot of money. I mean, way more. I'm not talking about myself. I'm talking about like serious money, like billionaires. But they're the ones that give money for like other buildings. They don't necessarily want to give for like NIL collectives. And I feel like that's the same situation in Northwestern.
You're absolutely
They'll give
right.
it for research, but not for sports. Like sports, ill.
Yeah, that's fair enough. Yeah, we probably have top of the line laboratories.
Yeah, you gotta get rid of like the hospital and stuff. It's got to be all about sports.
No, I mean, but it's funny you say that, because that's actually a huge new sponsor for the field and other activities is Northwestern Medicine, which I can't even begin to get in whether that's private or where that exists in the healthcare ecosystem, but I think they make a lot of money. So they're sponsoring a lot.
Yeah, I think it's private. I assume. I think it is. Yeah.
Last I checked, if you can bill an insurance company, you're gonna make a lot of money. So
yeah.
How do we do that?
You ain't lying about that.
Yeah. How about these markets? Snooze fest. E-minis down 11. Nasdaq down 100. Dow up a little bit. Russell flat. Bitcoin flat. ETH flat. Oil down $3.
Yeah, you say snooze fest. Would you have expected this at 8:28 this morning?
Not really. I mean, we looked at it yesterday. SPX expected move for yesterday was 50 points, and for the rest of the week it was 100 points. So the market's pricing in not much happening the rest of this week, unless you get some big earnings moves in some of these stocks like Salesforce, Costco. Those should be some interesting ones, but
U-Haul.
I didn't even know that was a publicly traded
U-Haul.
company.
I believe U-Haul.
Yeah, I did. Yeah.
It actually is.
Yeah.
Who would have thought?
Me.
Yeah.
I had some friends
It's
that went
funny.
to U-Haul when they were younger.
You sound like I sounded when I first realized it was a public company some years back, and I was like, "This is a public company." Yeah. It is.
With disdain and judgment.
Yeah, a little bit.
Yeah, we can judge them. They don't have weekly options expiration, so we can judge them.
Yeah, Glenn.
Okay, fair enough.
Glenn.
Hey, I have some, love for them because they'll let me rent something when all the other big institutions won't let me rent a car yet.
Speaking of colleges, I rented a U-Haul and I driving in the alleys in Chicago, they've got those wooden electricity posts.
Oh, geez.
Cranked one of them with the corner piece on the U-Haul, and it just like popped off. So I tried to return it, saying, "Oh yeah, everything's fine," and then they like ran out after me. And,
Really?
Yeah.
Yeah, I definitely shaved the top off a U-Haul, and they didn't notice. So I was
perfect.
I mean, you guys are probably still square in the middle of like moving friends, like lifetime. Like, I mean, friends ask you to move. How often do friends ask you to move?
They ask all the time, but I'm always sick.
I try to
Very
get
odd.
out of town. Yeah. That is. I deem myself a fairly good friend to others. That's a big ask because it's.
I'd rather give my friend $500 so I can not go.
Yeah.
This is exactly
Like,
what
go-
I'm getting at.
go hire
I
a mover.
agree. Exactly. That changed my life. Like when I first got my first real job, I didn't expect them to move me, and they moved me, and I was like, "Wait, what? This happens?" And ever since then, I was like on the downslope of like moving people, and yeah, nobody asked me. Thank God, because I'm at that age where I think that I don't get asked, but I'm okay with it. And if somebody asks me, I'm not moving you. I will give you some money, depending, how good of friends we are. It's a sliding scale, of course.
But you know the new strategy now.
What?
If you're ever tight on cash, just ask Jamal. Just be like, "Hey, I'm moving this weekend. Yeah, can you help me out?"
Would you like to help me? My Venmo is
Well,
G.
I've only known Glenn a couple of years, so it's like I said, it's a sliding scale.
Fair, yeah. But yeah, I've got one roommate.
I love Glenn.
Thank you. I've got one roommate moving out and a new one moving in. It's hard to imagine I don't get involved in any of that. But
you just got to book a trip.
You don't if you're out of town.
I know.
Yeah.
Yep.
I know.
There's always ways out of these things.
Yeah. All right. I'll craft my list of
There you go.
responses.
Oh man. Well, the equity markets aren't moving too much. I haven't done anything in this portfolio today. There's really not much to do. Everything that I'm in is kind of just chopping around sideways. P&L day isn't really moving all too much. Silver's selling off a little bit. Microsoft's selling off a little bit, but everything else is just chopping around. Have you guys done anything today?
I did a couple of things. I think I just picked the top because I adjusted my year-long strangle. And as you can see, I was a little indecisive. So immediately this morning, I get up and I see we're at 30,000, like 250, which basically was where mine was. And I was like, I was literally thinking yesterday, do I need to move this? Like, nah, I'll wait. And again, the idea here is always to be long delta. So initially I just said, oh, cool, I'll just move it up. And I shifted it up. And then I was like, wait a minute, why am I forgot that I was in June. I'm in July and just about everything else. I really wasn't even paying attention to the expiration. Finally, I decided to just roll it further out to July. And so that's kind of what I did. And I shifted it all up. So that's what I did there. NVIDIA, I bought a bunch of calendars. Look, this thing's been getting rocked over the last several days. Decided to go in some calendars, August versus July. Again, August probably won't capture earnings. It's probably August 20-something, just like it was just May 20-something. But just decided to go further out in that. And Tesla, I've had calendar calls littered. So I had like the 425 at one point in time, got rid of those. I still had the 450, got rid of those. I still have a 475, a 500, and a 525, and they're all June 18 versus June 5 expiration. And then MCL is one of the many strangles that I've had on. I have one in Qualcomm. Thank God that's pulling back today. But MCL, Intel, a couple of others. I've had this strangle on for a while. I had the 81, 123, rolled the calls down to just get the 110. So
nice.
I have the 81, 110 strangle now.
Nice.
I'm surprised it doesn't have the. I closed one and sold another. I just realized it doesn't have the whole.
Oh yeah, sometimes it does that.
Yeah. So I bought back the 123 and sold the 110 now.
Cool. And then the NVIDIA calendars, I was scanning through these very quickly, but the 230, 240, 250, all long August, short July. It's like, yeah.
Yeah, and since it's, July versus August, I decided to go a little further upside for that reason. That's why I'm not doing like a, 225 because I could easily get to there. And we talk about sort of the strategy behind like calendar calls that could easily get to those levels within the next few weeks. So because I went to August, I decided to go further upside, closer to that expected move.
I like it. I actually did place this Salesforce trade for earnings. I was just filled on it, but I'll post it to the Tasty follow page. Just one of the small calendar spreads here. Bought the 170 put, placing this to the downside. We'll see if they rally, but I mean, I don't think they will. But either way, $1.20 debit and just selling the 2-day, buying the 9-day. You can see here, if I kick the expiration to Friday and then crush this implied volatility, 30%, still going to be a profitable trade if we get any kind of downside move here. So yeah, we'll see what happens.
I like it. That's cheap too, $1.20.
Yeah,
cheap.
Real cheap.
That's how you do it.
Looking
at Marvell, like if you look at Marvell earnings and you look at like calendars in there, not cheap. 2-day versus 9-day.
Yeah. Big implied volatility here. 26-point implied move on a $200 stock. That's kind of crazy. Kind of crazy. What else did I do? I feel like I did something else. Activity? No. I also moved my MES position from the 7,600 June to the 7,800 July yesterday. So yeah, just picking up tons of premium there. It's going to be a great trade. And we're only halfway through the year.
Yeah.
At a certain point, when you pick up so much premium, like the market has to move 40% for you to be outside your break evens. So I'm jinxing myself as I keep talking.
I was going to say, I'm getting nervous. But no, everything you're saying is making sense.
Yeah. Costco earnings too. Got in early yesterday. Costco reports tomorrow. 10:50 calendar. Long June, short the 2-day. Up a little bit right now, but yeah. I think Costco rallies. I think Salesforce sells off. And we'll see if I'm wrong.
When you're doing those, kind of Costco and the CRM, are you, when you think of one as bullish and one as bearish, are you trying to pin around the expected move or just make sure the expected move to break even are within the zone of where you expect the crush?
Yeah. Yeah, I usually place it, I normally place it like at the expected move.
Gotcha.
Like 165, but this one, because it's so cheap, I place it just inside down just because the inexpensive nature of the strategy allows you to have a big range to be successful here. So like just going back to the CRM one, which is inside the expected move, this is a 9-day, 2-day. So like this range, if I just look at Friday and then got a crush IV in the 9-day a lot. But even with a 30% crush, bringing it down to 50%, you still have a range, break-even range between 160 and 180. So we'll see what happens. But yeah, the 165 was the expected move to the downside, and then 180 is basically the expected move to the upside. That's a lie. 190 is the expected move to the upside. So
expected move.
Anything that's chop or down will be okay. And then Costco, I went a little bit further out in time, went to June, just because I want that premium in June. Even if it chops around or sells off, I can just roll the 2-day into like the 9-day or the 16-day, reduce basis that way. But yeah, this was another one that is more expensive, but similar feel, where if you get the Friday move and then you crush IV in June, like 7-8%, bring this down to 20%, which I think is really conservative in terms of where IV could go. I don't think it goes below 20%, but you can still see I've got a range, basically a 100-point range between 1,000 and 1090 where this can work out. So yeah, see.
Yeah, I'm going with that in CRM. I kind of need that because I still have this super bull trade on that's obviously not super bulling. So
yeah, Salesforce is down pretty bad here. 3-year lows, pretty sure. Yeah, 2023. Last time we saw these levels, and it's just been sell.
No love.
As you can see, I've got my ribbons, my Ryan ribbons here. The 3 exponential moving averages and then some Bollinger Bands. So we're at the bottom of the Bollinger Band range for the monthly, and we are in bearish territory for the exponential moving averages, and we have been this whole year. So we'll see. We'll see.
Do you call them your Ryan ribbons?
The Ryan ribbons. They are technically, these are the Slim's ribbons from many moons ago.
Oh, it's Slim.
Yeah. But yeah, it's just an 8-day, 13-day, and 21-day exponential moving average just layered on top of each other. So like the light to dark shade is the near term versus the long term. So the purple one's the long term. The white-ish one is the near term. So they've been crossed over.
Oh, shoot.
For a
Death
long time.
crosses.
Yeah. Can't have those. So yeah, pretty bearish territory here for Salesforce. We'll see if it continues. And then Costco's the opposite story, bullish territory. And we're looking for a pop. So we'll see. But enough about these regular markets. How about these Forex markets? What's going on?
I got some slides for you if you want to get into the story of the week so far on this otherwise lighter start to the week from a U.S. macroeconomic standpoint. We've got some overnight action from these Antipodean currencies. Volatility spiking in both the New Zealand dollar and the Australian dollar, both in different directions off two different central bank storylines. If we want to get into the first slide here, what moved overnight? We've got a huge bid for the New Zealand dollar, a hawkish central bank meeting from the Reserve Bank of New Zealand, basically hold for now, but a split vote and pricing in multiple hikes this year for the Reserve Bank of New Zealand as soon as July on the table. And so that was enough to lift this New Zealand dollar up more than 1% pre-market here against this US dollar. And now a bit of consolidation rejected from that 59 cent level, but still a positive construction breaking out to the upside against its range of the past really almost 2 weeks now. And this New Zealand dollar been a laggard for some time on just speculation from what their growth has been, more of an import kind of country. And you hadn't seen really any signal from their central bank that things were strong enough to hike into. They're coming off of some cuts. And so now the first kind of positive fundamental piece for them here, and markets respecting that. And so you can see from this New Zealand dollar, US dollar chart, really still some room for the upside if you want to get long this New Zealand dollar from a historical standpoint. Of course, past performance not indicative of future returns, but if you look at where we were within May, we're still only halfway up to its highs for the month so far. And even looking back year to date, we had this currency ripping all the way above 60 cents, all the way almost up to 61 cents in January. If things are starting to be more positive for New Zealand on the domestic front, compiled with some positive macroeconomic or geopolitical drivers in the form of resolutions. Of course, this currency or New Zealand as a whole, probably more susceptible to the ongoing inflation risks of what comes out of the Strait of Hormuz debacle and its long-term effects than the U.S. But still, if they're able to hike into this, it could be a positive thing just for foreign investment into this currency. Speaking of inflation, on the next slide, we've got the other headline or major currency out of this part of the world. Australian dollar had some CPI data coming in softer than expected, which you don't see very often in this kind of March, April, May. You don't see as much surprise to the downside, but headline inflation cooling to 4.2%. And this has a completely different backdrop. The RBA, Reserve Bank of Australia, from the New Zealand central bank, whereas this Australian bank has been hiking for all of 2026. Their currency supported off of those hikes and factoring in multiple more hikes this year. All of a sudden, now markets starting to pump the brakes on, whoa, 2 more hikes this year? We had that on the radar for inflation north of 5%. But if this is cooling already, will we have to keep hiking? And will the yield on this Australian dollar be as high? Maybe not so much. And so that really turned around. If we're looking at this chart here, we had hit 3-year highs earlier this month, above 72 cents, multiple times, not really breaking out from those highs. But after getting shaken out off of a stronger US dollar that we've seen mid-month, it looked like the trend might be resuming. We're looking at daily candles. So if you look at the past 2 days, in terms of when this news came out, still our time was, what is today, Wednesday? Was Tuesday. So that turnaround coming in the form of both of those candles. So if you take those 2 away, we're looking like strong momentum back in this Australian dollar. Now we get much more of a two-sided picture as we look to perhaps test that 71 cent level, the recent low of the range, but definitely not expecting to test 72 cents and beyond to the upside for this week unless something drastic happens. And this sets up a more interesting trade than our major pairs here, Australian dollar, US dollar, and the New Zealand counterpart. You can actually trade this dynamic exclusively or more directly by looking at, on the next slide, we can look at this Australian dollar, New Zealand dollar cross-currency pair. On the next slide, please. Yeah, here we're looking at what was a 13-year high, now a super strong reversal. We are down over 1.5% on the day in this pair. And this was a pair that was really getting pretty out of hand to the upside. Like I commented before, New Zealand dollar not having a lot of hype domestically, Australian dollar having a lot more foreign investment on the heels of hiking into economic strength on their side. And now this starts to be what could be the start of a much more two-way trade if the dynamic is shifting. Of course, you could have speculation that, maybe it was one CPI miss for Australia. I think their central bank will still be able to hike into this. 4% not sustainable. They'll keep the hikes on the table. Then you're getting, a discount on this Australian dollar as a direct, as it relates directly to its neighboring New Zealand dollar, or this could be the first sign of reassurance in reversal for this pair. So you've got US PCE this week, which could have, we're now seeing a slightly stronger dollar through the US session. So if you wanted to get on board the New Zealand dollar, but you saw that we got a little bit rejected this morning on some US dollar strength, there's that event risk later this week for possibly more US dollar strength. This cross-currency, Mike, a fan of all US dollar strength wherever he can get it, but if you want to take away some of that event risk, you can trade these cross-currency pairs directly and get a shot at what could be, from a risk-reward perspective, a lot more favorable to get short this market, just looking at historical pricing. A lot more room to the downside since February compared to uncharted territory on the upside. Regardless, you've got more volatility, more expanded range here, and more two-sided action in these Australasian pairs. So just wrap it up on the last slide. Exactly what I was saying. We had the surprise from New Zealand. That wasn't on my bingo card for multiple hikes this year. And you've got that dichotomy of softer Australian inflation. Both of these U.S. dollar pairs, highly liquid, trading around the clock. And we've started to see a lot more liquidity or volatility overnight as those Asian sessions take over. But the cleaner trade so far has been New Zealand dollar over Australian dollar, just as a result of how much weight can we put on one CPI release, right? We don't know yet if their central bank will say this is a blip on the radar or this is a meaningful print, and we are recalculating our forecasts as a result. But regardless, you've got multiple ways to play this storyline, this divergence in neighboring currencies, and a lot to look for as we head into June.
Love to see it. Just love to see it. Thank you for that analysis.
Sure.
So I was already short the Aussie dollar, and I don't want to tell you where it was, but it was like down here, because I was like, yeah, see this green bar? Let's short this thing, and then just got destroyed. But the good news is it was only a 5 microlot position, so I just added another 5 microlots up here. Dollar cost average to 69.4, which is much higher than my 67.5, which is where I was before.
Back in the range.
Back in the range, much more feasible. And then I also got short the Aussie dollar, New Zealand dollar, Australasian dollar. I actually said it right. That's crazy.
There you
go. So yeah, just getting more exposure here, and we'll see what happens. But again, all these are 5 microlot positions on my initial entry. That allows me to layer in if it rebounds, and then I can just dollar cost average. See.
The antipodean currencies. I actually just heard that word recently on this documentary I was watching. That's what's so funny about that.
Did you watch
it's also
the same
funny
documentary?
Was it the Kylie Minogue?
No. Was that any
did
good?
he and I? No, I know there was no way, because I'm sure he has no idea who the person is at the documentary that I watched. It's a little before your time, Glenn.
Who, Kylie?
Yeah.
I was just listening
You know who she
to
is?
Yeah.
You do?
Yeah. Yeah.
Were you watching that documentary? Is that
No.
what you watched?
What was it? Are you pro or anti?
Kylie Minogue?
The documentary.
I don't have any. Oh, yeah. No, it was good. It was good.
Very
really
divisive.
Good. It was really good. Yeah.
Kylie?
It was really good.
We can't be friends anymore.
Yeah, it's kind of funny to see those two moving in opposite directions. I mean, obviously it's news related, but I mean, they always seem to be really rolling together. So it's kind of fascinating to see such divergence with those two.
I agree. Yeah. And it's been, when you look at those, the cross, it's been really one way for all of 2026. So as Mike knows now, you can definitely see some trending currency markets for months on end, but
yes,
when they reverse, historically, have been a lot of major currencies have been mean reverting over the long term. So it's really, if you're looking at this, it could be just one blip on the larger continuation, or an early sign of a reversal for the relationship between those two currencies.
Yeah. And I think, like, really it just emphasizes the importance, if you can do it, being on the right side of the yield. Because like this dollar franc position, we always jest about it, but it's a 20 microlot position now after I've layered into multiple tranches here. But this is a net profitable position. Like I'm down $276, but I've collected over $300 in yield since November. So I still won't close this until this is green, but this account is still up 30% with all these losses on the table. Just from same thing with like the options trading way. Like you're gonna close your winners, and then you're just gonna harvest your losers until they're winners, or you exit. But I refuse to exit any of these positions. They're too small.
There, at least you're forced to roll or get out.
Yeah.
Here you can just.
At least you catch the yield. The yield, that's your premium. And you hope to just close all green winners over time. Lovely.
That's the goal.
But yeah, got short the Aussie dollar, New Zealand dollar pair, and then I got short another 5 microlots in the Aussie dollar just right now. Beautiful.
Dope.
Are you sticking around? You gotta catch a little lunch action. What are you doing?
Yeah, no, I have a 11:30 meeting with.
Yeah, of course. Yeah. I know.
Yeah, I have a prior engagement. I got
our VP, PETA.
Yes. Well, thank
Was
you,
that
Glenn.
you practicing what you're going to say when you not going to be able to move somebody?
Yeah.
Yep. Sorry, I've got a. I need to practice more.
Just say it.
I got to
Yeah.
drop a couple kids off at the pool.
What kids?
Who's kids?
What kids? Yeah.
Don't ask.
Gross.
On that note, thank you, Glenn. Appreciate
Thank
it.
you guys. Always a pleasure.
Of course. We'll see you on the other side. See you on the other
side of these CRM earnings.
That's right. Are you joining us to the downside?
I might. Got to do my own analysis.
Yeah. That's fair. You should always do your own analysis because historical results are not whatever that phrase is. Historical
whatever
blah
that
blah
phrase is.
future.
I've never
blah,
learned
blah.
it neither.
I say it in my sleep now. Yeah.
I saw it on the side too.
Past performance is not indicative of future results.
There it is.
Go.
Ding,
or
ding,
returns. Some people say returns.
Yeah.
Just depends. Yeah. No, I'll pull it up on my platform. Try and do what you do with the crushes. Inevitably fail, and everything looks all green. I'm like, man, this guy Mike's on to something.
There's no loss here.
And then go over on Friday and be like, man, what happened?
Yeah. How did I lose all this money?
I thought, when you said it, it looked like we would be good at this price. You're like, no, you should have rolled it in and out. That's what we all did.
That's what we all did, but clearly you didn't. Oh man, what a time!
Thank you guys.
Thank you.
Peace.
Later, Glenn.
E-minis and Nasdaq catching a little bit here. E-minis only down 3, reversing the crash of being down 17. Nasdaq still down 50. Bitcoin's selling off a little bit more, down 1,000. But I think the story of today is certainly CRM earnings, and then Costco. There's another one that's tomorrow.
I think Snow has earnings, Marvell and Snow actually are the other two probably somewhat interesting ones.
Yeah.
Again, Snow, I would play the downside as well. I just, these software names, I mean, hell, I'm still long some of them, but they just haven't really risen to the challenge.
How about Dell?
Yeah, that's tomorrow after the close? Yeah.
Yes, yeah.
We just, Chris and I, we do signal versus noise for those who have noticed in content. We do a lot of those, and we just did one on Dell a little bit ago.
What are you thinking? What's the thesis?
Well, the signal versus noise was about a trade that went on the upside. You guys could check that video out. What am I thinking? I mean, I'm not touching this thing. Actually, I haven't looked. I mean, I haven't looked. I haven't probably, you know me. It's if it's anything, it's a calendar call and a $300 name with vol. But I haven't even looked at it or priced it out. I was looking at Marvell earlier. Well, hold on. Since we're here on Dell, I don't know what the hell is up. 335 2-day versus 9-day.
Yeah, I mean, to your point, it's got to be an upside play because you're collecting almost 3 times as much on the upside call premium versus the downside. So if there's any move to the upside, or even if it's flat, it creates a much more probable situation for you to make money on this thing. Like just looking at this here, the 270, 330, about 30 points out of the money. I guess we could go 275, 335, just to be fair. You're paying double on the upside for the 9-day. But when you look at the downside, you're collecting $3 on the downside and you're collecting $7 on the upside. So when it comes down to like cost basis reduction, you've got 50% on the downside just about, but over 50% on the upside. And again, your 9-day premium is going to hold on to a lot more value, especially if you get a rally. And we can show this here if we look at Friday, which assumes we get all this 2-day premium. And then again, we got to crush this IV down to like, I don't know, 30 percentage points, bring it down to 77. You can see you can make way more money on the upside just because your long call appreciates way more than your long put would to the downside. So you're looking at almost a double in terms of max profit potential with these same strategies that cost, a similar amount.
The expected move calendars are not that cheap though. I mean, they're like $3. It looks like if you go like to the 330 or 335, and it's kind of the same thing in Marvell. Similar deal. Like the calendar calls at the expected move are over $3. I mean,
yeah,
it's like those are kind of high. Usually we'd like to do like a couple of these, right? And do like say 330 or 335, 340. You can get them all for like $1 and change, and you're paying at max $4 total, $400 total for like some exposure there. I mean, to do it for one, that's a lot.
That is true. You could look at something like what I did in NVIDIA, where these markets are not great in June. I was just going to say, like, you could sell an iron condor wrapped around your or outside of where your calendar is, and then just like reduce basis that way. Collect some premium in June, buy the calendar in the weekly, and then if you get the move, you just close the whole thing. But yeah, definitely tricky in Dell given the massive move we've seen and not too great of markets here. I'm going to pop over to the YouTube chat now, see what the people have for us over the next 13-ish minutes here. If you want to join us on the YouTube channel, we're streaming live there. Just go to Tasty Live. You'll see this video, and you can throw in your trade ideas along the right-hand side chat. What do we got? Lots of chatter today. Love to see it. I have a broken wing butterfly on now. With 22 days left, I'm already up 100% P&L. Any ideas? Yeah, close it.
Yeah, really.
Service
I love these
now.
questions.
92, 105, 110. There's nothing you can really do with these because you're right there. 92, 105, 110. Love to see it. Just perfectly pinned. And you've got a much wider long call spread relative to your short call spread. So there's nothing to really do here in terms of management. The one thing you could consider doing is like getting out of the long spread and leaving the short, but then you just like, if it keeps rallying, then you just have losses. So yeah, I think you just get out.
I mean, you did it. You won. Yeah, you got a W. Just, move on this one.
Yeah. And another interesting thing is like you have $500 left of extrinsic value to decay on this thing, but there's a $12 implied move. So like that $500 doesn't really help you if now drops $6,
Which is very possible considering you have two service names having earnings in the next 24 hours.
Yeah, that is correct. I would book it.
Sorry.
I might book it and then see what happens. You could redeploy in July, something very similar in July. Looks like you have a 13 by 5 setup. So like you could do a 15 by 5 here in July for $5, something like that. If you're playing for a continued upside move, but yeah, I think closing is what we would say.
The great thing about positions like those is that they are relatively low risk. The thing about it is putting on further out is that if it gets to basically where you are right now, which is the sweet spot of your trade, you basically just have to close it. I mean, you're not going to wait 20 days. There's so many different things that could happen. And you can just redeploy, like Mike said, get a new one.
Indeed. Spicy crab call trade in Circle. August, June, 120, 140, 160. Let's check it out.
I forget about that name sometimes.
I think we did this already, didn't we? Yeah, we did a 120, 135, 145. That was a really nice win. That was an earnings trade. But yeah, these have been working out for us. These crab trades or butterflies. It's basically exclusively what we've done in this product. But yeah, let's take a look. 120, 140, 160, August, June. Okay. 140, 160. Only problem with this setup is like you're not really reducing basis that much at all. You've got the 120, the 140, 160 is only giving you like $200 in premium against your 120 call that you're buying. So I would rather set this up a little closer, like a 140 or a 105, 125, 145. That way you're reducing your cost basis by $500 against your $1,700 debit here, and you don't need it to move as much. You basically just need it to move to where the previous long option was. Yeah, I don't mind the setup. It's a little expensive. What say you?
Yeah, what's so funny is we were sitting here, I was thinking about this name and I'm like, I completely forget about this name and I don't trade it as much. And we saw this and you talked about crabs. I'm like, yeah, this is, a good trade, kind of interesting, kind of chunky. I was looking at CBRS and it's similar deal, like 25. I was looking at a $25 wide crab, but just the crabs in general, I feel like, and in this case, I was looking at the 300. So the one thing I'll say about the circle is that at least you're able to do basically an at the money call and get the trade you want on. I think that's a little bit better. The one that I was looking in CBRS was like starting with the 300 call while stock is 250. I would be probably more against that versus the circle one. I think the circle one is better, but just, these are similar type names, the way that they trade, the things that are kind of, the way the vol is structured and the way I think the pricing is. This one actually is better, I would say.
Yeah. You can get this under $1,000 if you go to June instead of July, July instead of August. Still plenty of time in July. And this thing moves. Like if you get a move to the upside, you'll be fine here. Like if we just kick this to like middle of June, don't change implied volatility at all. Like this is a really nice setup. You could double your money on an upside move to 125. But yeah, I think all things considered, I'd like to keep my risk a little bit smaller here. And this is that was a 20 point wide spread for $8, which tells you that if you get a sell off, you could close the crab component in June and you can move this 125 component down to 115, pick up a lot more premium, just go to like a standard diagonal spread, long July, short June, if you needed to hedge.
It's not that long ago. I mean, it was only like 2 weeks ago that it was at 125. So
yeah, I think I'm gonna do the June, July.
Long that July, right? Yeah, that looks good. $800. Yeah.
Yeah. Let's see if I can get 800 flat. We're gonna let the market work this thing a little bit. 800 flat for the 105, 125, 145, long July, short June. If it sells off, I'll close the crab component in June, move it to 115, and just create a diagonal spread with no risk to the upside. We'll see what we can get.
Like that?
I like it. Yeah, it's not the biggest stadium in Illinois. It would be the biggest new stadium, but I think it would be the biggest college stadium in Illinois, if I'm not mistaken. Maybe I am.
Yeah, I don't know how big Memorial Stadium, right? Yeah. I don't know how big that is. But it is pretty old. I would imagine if you're making a new stadium, you know how to make it a little bit bigger than Illinois' old-ass stadium.
Yeah. Definitely.
But then again, you also don't have as much room to work with there in Evanston.
Correct. Are you trading Marvel?
Nah.
Yeah, it's pretty expensive.
You know what? Illinois is bigger. It's 60,670. Yeah, somebody fed you up.
I saw it on TV. That's the problem.
Well, it's got to be real.
Yeah.
No, I want to do calendars. I should have did it earlier. I was thinking about doing it early when the stock was down to like 196. I mean, that's always a good time to get an entry if the stock fades right before earnings and you want to play bullish, but I don't need it, Mike. You know what I mean? Like, I got so many different things. I support anybody who's doing calendar calls in here, or any kind of calendars, really, but I don't need it. I got so many things.
Yeah. I'm just going to lean short with this CRM calendar and see what happens. And then we'll see if we can get into the circle trade here. All right, we've got a spicy trade adjustment here.
Okay.
I heard of a new trick. Buying a double calendar and then rolling both short legs to an iron condor if nothing happens. Have you ever done that? Iron condor can be risk-free. I have done something like this, but I don't prefer to do it because, like, if you have a calendar spread, you want the stock to move towards your strike. If you have an iron condor, you don't want the stock to move towards your strike. And even though, like, let's say you spend $200 on the double calendar and then you roll it into an iron condor and you collect $210 for a small net credit, you still have risk on both of those spreads. Like, you're just holding risk for no profit potential. So I would rather just leave it as a calendar, see if you get the move, and then you can actually make a profit versus holding risk and buying power for no profit potential. But yes, you can do stuff like that to remove your debit risk, but you still hold credit risk if that is the case.
Yeah, I prefer to treat earnings trades like earnings trades, and once that earnings play happens, it's just time to move on.
Yeah. Couldn't agree more. What do we think of a wide QQQ 21-day put ratio spread for as little credit as possible as a hedge? Yeah. I like it. That's the right mentality for sure. If you're trying to create a downside hedge, like 725, and then you can probably go down to like, 705 for small credit. This is a downside hedge for sure. And then you have the ability to just take shares or just convert this to a covered call in the queues if you get down to 705, right? Because you could sell out of your 725, 705 long put spread, take that credit, and then just roll your 705 put. You can convert it to a straddle, you can convert it to a strangle, like you can do a lot of things. But yeah, I think if you're giving up all your credit, that is the recipe for a downside hedge. If this was more bullish, which would mean you have more of a narrow put ratio spread, like this is not a downside hedge. This is just a short put. So yeah, giving up the credit, still routing it for a small credit so you have no upside risk. Definitely an effective little hedge here, but it is costly. You're still putting up 12 grand in buying power.
Yeah.
So I might consider just flying it off, like a 725, 705, 685. Pay a small debit. Now you really have a downside hedge. Or you could do something like this, like a no downside risk type of asymmetric butterfly. Like this is what I've legged into in SPX. Putting up $400, but you've got $600 of max profit to the downside if it's fully in the money. Something like that.
Something like that.
Something like that. Last question here. Any Carvana trades?
I don't think I've traded that all year long.
Yeah. Same. It's been chopping around between 60 and 80 for quite a bit. So that could be interesting. But yeah, I don't feel the need to get involved here. And if I did, it would be defined risk for sure. Just because like this is really whippy.
Roller coaster.
But yeah, I think I'll pass on this one. But markets aren't too bad if you wanted to trade it. I would just keep an eye on the open interest here. 4,000 strike, 7,000, 9,000. Like you can see that there's much more tradability in these strikes. It's possible that they opened up these strikes, like the 72.5, 73 recently relative to the 72, 74, 76, which is odd that they're even numbered strikes. But either way, just focus on the liquidity and structure the trade around that if you're going to do it. I think that's it. We're out of time. Thanks for tuning in. If you've got any further questions, you can find us on Twitter I'm at Trader Mikey B. Jamal is at Jamal Chandler. Glenn is at Glenn Freibarger. And give TastyFX a follow as well. Yeah, we're all involved in the US dollar, Aussie dollar, New Zealand dollar now. We'll post these trades to the Taste Trade follow page, the Circle Trade. Got to see if we get filled there. But yeah, have a great rest of your trading day. And we'll see you same time, same place, 11 a.m. Central tomorrow from the SIBO floor. Peace.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We get caught up, we lose the time. We
What is going on, everybody, and welcome back to Risk and Reward. Today, we got a little bit of a special guest, my boy Sahil. There we go. Oh, there we go. It's coming.
Oh, there we go. They got the right music.
Yeah. I was waiting for it.
Yeah, absolutely.
We got Baby Shark today.
No, it's not Baby Shark. That makes me sound like I'm...
No, what's going on, guys? Welcome back to Risk and Reward. Today is Wednesday. Had a little bit of a sell-off in the market today, May 27th. But no, nice to finally be on here with you today, brother. How we doing?
Either sideways or up. A little bit of a sell-off today, but it'll come back up.
Yeah, hopefully. What goes up must come down. What goes down sometimes goes up. But nonetheless, bro, how are we doing today? It's nice to have you on here. I was glad we got to come on here, chop it up a little bit about the markets.
Nice sunny day in Chicago.
Yeah, can't beat that. Summer weather. We grabbed some Chinese food yesterday. That was pretty good.
Yeah, we did.
Yeah, good stuff.
I learned that Errol can eat spicy food.
Oh, yeah.
A little Jamaican heritage over there.
Born and raised. Yeah.
Whenever I go out with Gad or somebody else, they're like, spicy? Absolutely not.
Yeah.
You were beating me yesterday.
I'm not going to lie. I didn't even really recognize the spice until you guys kept bringing it up.
I went for 2 cups of water yesterday.
I know. That's funny. No, I mean, with that being said, there's a couple of things we're going to touch on today. First, we're going to talk a little bit about efficient market hypothesis. We've kind of gone back and forth on this topic a few months ago, and I always think it's an interesting conversation. So we want to get your thoughts on that, and then we'll also touch on auction market theory a little bit. But just because I think just the foundation in which you understand the market, I think is really important for any type of beginner trader. And I see the efficient market hypothesis being thrown around a little bit more commonly on social media by the young folks, by the young people, our generation, the Gen Zs.
By the scalpers.
No, I mean, any market participant for that matter. But we can go ahead and just jump into the first slide. Would love to get your guys' thoughts on efficient market hypothesis.
And look at that. Errol made slides today.
We got some beautiful slides right here. Yeah. What does efficiency actually mean in modern markets? And when you first got into the market, Sahil, was efficient market hypothesis one of the first ideas presented to you? Or how did that go?
I agree with you. It's like how somebody thinks about the market, their general framework.
Yeah.
It's a super interesting way to understand how they kind of trade, because the way you trade, the way you have your risk profile,
yeah,
it's kind of based off of that,
Yeah.
So when I entered the market, I entered around 4 years ago or so.
Yeah. Time's flown, huh?
Yeah, it has flown,
crazy.
Right? Yeah. I mean, my trading network was a lot more like technical. I like to analyze a bunch of stuff. I like to understand a company super deep, super well before actually trading it.
Mm-hmm.
I don't usually fall into the whole YOLO or zero DTs or short-term trading for that. But the first time I heard about the efficient market hypothesis was actually over here at Tasty Trade. Just on the way, Tasty bases a lot of their studies and stuff. We like to say that a lot of stuff is priced in. If we're saying, does earnings affect anything?
Yeah.
Our conclusion on the research team is always not really. Does binary events affect anything? Other binary events like FOMC stuff or whatever? Not really. So we always like to err on the side of the efficient market hypothesis, I say, and say everything's kind of already priced in. You just got to find the small little anomalies that are there.
No, I like that. We can go and get into the first definition of efficient market hypothesis, which you already broke it down pretty well right there, but we can jump into the first slide here. But just for a quick refresher, efficient market hypothesis is the idea that financial markets rapidly incorporate available information into asset prices, making it extremely difficult to consistently outperform the market through prediction or analysis, keyword alone. So you kind of touched on that in other words for the most part, but this is what the broad definition of efficient market hypothesis will sound like.
Is this the Errol definition?
This is I know. Is this the Errol coded definition or is this the definition?
I like this definition.
Yeah. I mean, it sums up efficient market hypothesis pretty well. But I got to ask, you made a comment when you were first getting into the market. Because we're pretty close in age, I might have you just by a little bit, maybe a few months. No, but I'm curious, what made you not gravitate towards a lot of like the Reddit degenerate kind of, those are fun too. Don't get me wrong, the excitement from that.
I wouldn't necessarily call them.
Yeah. But
degenerate, I just would call them not my style.
Okay, not your style. What not makes it your style?
I've just seen so many people my age lose money based off of that. Now they don't lose a whole lot of money, because another thing the young traders don't have is money. They have a lot of time, which is why they're able to do all this stuff. They don't have a lot of money. It kind of switches when you're older,
Yeah.
So, and I never really played, just my whole, life outlook on a lot of things is like not making the most risky plays, kind of playing it a little bit safe. And that translates into the market a little bit, because a lot of people, I don't know, they gamble, they like going to Vegas, like doing stuff, then they see if they can do that in the market too.
Yeah.
And that's just not really my vibe. So it never has been. It's really as simple as that.
Yeah,
I'm not
No, I hear you.
knocking
You're
anybody.
not knocking it. You're not bashing it. Yeah, different strokes.
Likes doing that stuff. And I always think you should have a little bit of play money. Always, just a little bit of your account
having fun with this, because having fun in the market is important too to keep you engaged. So
100%. Jared said Sahil doesn't YOLO. This show's for degenerates. It feels like a sell-off at this point.
Errol and Gus's vibe is a little different from market measures. Okay.
I know, just a little bit. No, it's always good to get some data in here. But no, with that being said, that's what we have for the efficient market hypothesis. And we can go ahead and jump to the next slide here, because I think this is really important and really interesting. And if you don't mind, we can actually jump to the next slide after that one. I think I might have got these ones backwards a little bit, but just to give us a little bit more context, I think the efficient market hypothesis is fascinating, extremely interesting. I agree with it wholeheartedly. One thing I have a difficult time wrapping my mind around is the context of the efficient market hypothesis. So, I mean, when I hear the broad definition, the thing that I think of is, okay, all available information is priced in almost instantaneously to fair value, or it's being priced fairly. But then a question pops in my mind, fair to who? What time frame market participant? Because wouldn't fair value or a fair price be different from a long-term investor, maybe a swing trader, maybe a shorter-term trader, whatever it might be? But that's one thing that pops into mind. And that's why I think I find auction market theory to be pretty attractive. Just the idea of the fact that the market is constantly seeking this level of fair value being a price level or a price range where buyers and sellers, quote unquote, agree on price or agree on that specific time frame. So with that being said, learning auction market theory, it's given me a difficult time to wrap my mind around. Well, I mean, we don't really speak about the context or time frames or time duration, relative to whatever, again, is priced fairly.
I think time frame is a
efficient market
really
hypothesis.
important thing that you just brought up, because in my opinion, that's kind of the whole framework for the efficient market hypothesis. Is what time are you talking about? Are you talking about a year out? Are you talking about a very small time frame or whatever? Because a lot of stuff in the research world, you kind of say that stuff normalizes over time. So there might be a bunch of discrepancies.
What do you mean by that, normalizes over time?
So what I mean by that is that basically stuff might appear random, stuff might appear random at the very beginning.
Yeah.
But then but you might just find that there's a certain edge that you have.
With a small amount of data.
With a small amount of data. But the more data points that you add over to it, it's kind of going back to stuff like the central limit theorem and everything.
Okay.
That you can kind of make inferences based off of a larger data set versus something that you cannot make up with a very short data set.
Right.
So why do I bring it up for the efficient market hypothesis specifically? Is that I think the efficient market hypothesis is true when you're talking about a super long time frame.
Okay.
When you're talking about such a short time frame, it might not necessarily be as true. There might be some discrepancies that people can take advantage of. Because a lot of the reasons why people go against the efficient market hypothesis is the fact that active portfolios versus passive portfolios. A lot of times people are doing their portfolios over and over again, and over the course of 10 years, they realize that they cannot even beat the returns of just buying and holding in the market, for example.
The annual 10%.
Yeah, the annual 10% or whatever, because doing that is super hard. Of course, some people do, and those people have edges and stuff that other people might not have, but a lot of people don't. But on a very small time frame, and if we're talking about 45 DTE trading, which is what we do here, or even 0 DTE trading, which I think is super something you could super take advantage of or whatever, there are definitely edges that you can, if you learn about a company specifically, if you learn about the edges, I definitely think that there's something there, because the market has not had time to normalize for everything to just kind of play out efficiently.
That's interesting. Yeah. I like how you ended it with efficiently, wrapping us all the way back to the efficient market hypothesis. No, I mean, beautifully explained, by the way. And the last thing I just wanted to add to that is the fact that the market is, for the most part, trading in between two states, the balanced market fair value or price discovery. The market is searching for that new level of fair value. So I've always just wondered how we can kind of incorporate efficient market hypothesis, get a more detailed understanding to what that really means, and kind of be able to formulate a little bit more of your own opinion.
So I have a question.
The market. Yeah.
You think there's some sort of delay? So when something happens in the market, like let's say a news event happens. This is a great question. Or Trump's tweet happens. How fast do you think that translates into the market? And do you think you can take some sort of, is that there an edge over there where you can act before the market, the total market acts?
I think as technology has gotten better, I think that delay from information hitting the public and seeing the reaction in the market or a reaction in the underlying, I think as technology has developed, that gap has grown smaller. So can you react quick enough for something like a Trump tweet? I don't think so. So I think maybe you need programs pre-programmed ahead of time to be able to react off of these type of news. But I would say no for the most part. you just can't predict you can't predict the uncertainty. So I would say no, you don't have the speed to do it, but I think you can find levels in the market that are attractive to you ahead of time before even knowing if some type of news might be coming.
Yeah.
But I think it's pretty much almost instantaneous.
People who say on the super short time frames is that there is some sort of an edge that they can take upon because the fact that rallies and crashes happen in the market, and it happens in the overall market, but it also happens with very specific stock symbols, that might be evidence to suggest that the market is not efficiently priced because, people react to FOMO, people react to the news headlines, people react to stuff. Efficient market hypothesis also, for some people, the argument against it is that it assumes that rational people are making decisions. This is a whole thing in economics. It's a whole thing in economics. Are rational people making decisions or not? Humans are not rational. So your model might not be entirely true based off of what
because EMH, or efficient market hypothesis, does assume that, the information is rational and efficient. But I think us as humans, we can be very emotional, and I think we can overreact a lot of the times. And I think that can be directly reflected into some of the inefficiencies that we can see in the market on a shorter time frame, kind of like how you mentioned. But anyways, that rational and emotional aspect really hit the nail on the head. But no, with that being said, we can go ahead, jump straight into the Tasty platform. Just wanted to get your thoughts on that. I know sometimes we go back and forth in conversation, and you have a lot of good perspective. Let's catch up on a couple of these comments. Oh snap! Just noticed SPX dove. It looks like the market might be selling off a little bit more here. Is this the blow off top? Seal, is this the blow off top, or are we still stalling? We got to wait and see.
I'm not entirely convinced that this is the time. These dips have happened many times over the past few weeks, and it just shoots right back up by the end of the day. So
yeah, now we'll see what we get over here.
It will happen eventually. Obviously, it has to happen eventually, but not anytime soon, in my opinion.
Yeah, 100%. Arjun says over here, ironically, all this passive investing, probably a part of this theory's origin, has created lots more badly priced things. Prices are not representative of values anymore. It's another good perspective. Yeah.
I'm basically saying things are like speculated right now. People are only really trading on the speculation rather than trading on the actual price data that's there.
We're trading on vibes.
Yeah, basically trading on vibes.
Is that what sentiment really means? Is just, what are the vibes? What are the current vibes?
Yeah, I'd get so.
Yeah.
You have your whole new industrial revolution, people like to call it, with the AI space. Very similar people are seeing to 1999 and 2000.
Yeah.
The computer race that has been happening.
Yeah. That's a good way to put it. If the whole concept of the efficient market hypothesis is the underlying logic of time in the market will outperform timing the market. That's what Jared had to say. Yeah, great points. Great points there.
I generally would say efficient market hypothesis plays out over a longer time frame, because when you're talking about such a long time frame, you just get more data points. Everything does start to normalize. I'll use that word again, as we like to say with all the research stuff. But that does not mean shorter time frame people can't take advantage of the stuff that is there.
Yeah, 100%. I think what's really nice about that question is it just brings a little bit more clarity, and I think that produces a lot more just understanding. And I think having that understanding piece, or not having the understanding piece, can kind of make ourselves be our own risk sometimes. So I think just getting a little bit more clarity on what efficient market hypothesis really means,
as we played out,
is important.
It goes up and down, and down, but eventually the ups beat the downs.
What does that mean? Law of large numbers? Is it something like that?
Yeah.
Law of large numbers? No, market selling off a little bit here now, Sahil. We got a couple positions on in the portfolio.
This is the problem with all the research theories and everything, all the names, law of large numbers, central limit theorem, everything that Jacob basically.
I know like 6 of them, and you know like 50.
No, but what I'm trying to say is like all these numbers at the end of the day kind of don't matter, because a lot of the times people who just know how to trade the product super well, like someone who is super familiar with their specific sector, their specific industry, their specific product, and they like don't even have any of the super technical knowledge or whatever, how they can beat the people who are talking about this stuff for a living sometimes, okay? Like us, and even like researchers or whatever, okay? I don't claim to be the best trader, obviously, because you really need to just know your industry, know your sector, find the discrepancies that are there on the shorter time frame, rather than, these super fun, theoretical, difficult math concepts are super fun to talk about sometimes.
They're entertaining.
But how really, and like they do make you sound smart, they do make you seem a little bit smart, but how do they actually translate to the individual traders' actual portfolio? How can it help them actually in their day-to-day life? That's the most important question, really, to answer. So.
Wise words from a wise man, I'm not going to lie.
All right. Settle down there, my guy.
Micron, $20 million put? Or 20 million put? We'll take a quick look at Micron here in a moment. I know we were touching on that less than 24 hours ago.
You love the memory race that's happening right now? RAM prices have been increasing.
Yeah, look, if I was...
Micron is up 150%, I think, over the past 2 months.
If I was building PCs for a living, I would probably be, furious if I was building PCs for a living, or if I was somebody just in that space trying to produce more, crypto mining, data centers, all those kind of things. You definitely see the impacts there. I almost forget that. Now that I'm not driving as much, I forget that gas prices have gone up so much, right? I'm not really into PCs too much right now. I keep forgetting that the prices of RAM and all these pieces of technology
according to the Uber CEO,
continue to go up.
According to the Uber CEO, you don't need to drive anymore. Because one thing he's been saying is that Uber has freed his son from being able to drive. His son does not need a driver's license anymore.
Okay,
but this is a larger trend with Gen Z, which is our generation,
which is
that they don't know how to drive and they don't want to drive anymore. See, I thought, for a lot of Americans, and this is separate for Europeans because a lot of them don't drive because they have good public transportation over there. But a lot of people, unless you live in New York City or Chicago or whatever, see driving as a rite of passage.
Right.
They want to learn how to drive just to gain that independence. That was certainly true for me.
It's that agency, right?
Yeah, just agency of agency. Even if we live in Chicago, we don't necessarily drive over here all the time. We can take the trains and the buses. It's just needing it, having it when you need it.
Yes, the convenience, absolutely. Yeah.
I just feel like, I don't know, he got a lot of, that CEO got a lot of flack for that stuff, saying that he's basically putting his son at a disadvantage just to say shit about his company or whatever. But
no, I would agree to that to an extent. I think the convenience of it is really nice, but at the same time, Ubers aren't, $1 a piece.
Although I will say Uber is very helpful, much more helpful than what the taxis are doing.
Oh, absolutely. Okay. Yeah. See,
running up the meters and stuff.
Well, that's the thing. I feel like Uber is a great combination of taxi and then new technology.
Yeah.
Like had a baby, and that's Uber. But anyways, we sold an out of the money put spread on Meta. We got 22 days left till expiration. We're up $15, so we can go anywhere in the city that you want to eat off the dollar menu. If a dollar menu is even a thing anymore.
No, it's not a thing.
I don't even think it's a thing anymore.
McDonald's has changed it to the under $3 menu.
The under $3 menu. So we can grab something.
This is inflation now.
Yeah, there we go.
If you go to a dollar store or Dollar General or whatever, they'll be seeing stuff for $1. I don't think so.
$1.29 or $1.49, something like that. But we got that Meta position on. It doesn't expire in a day, but tomorrow is going to be 21 days to expiration. So we need to figure out on if you want to manage that. Maybe I might take it off, redeploy the capital elsewhere. Meta hasn't really been moving much. We've kind of been consolidating.
A super strong position, like a super strong in terms of volatility, whatever. Yeah. It's just kind of a stock that kind of sits there and kind of goes up with the tech stocks. But there's a lot of more interesting tech stocks to trade. So in my opinion, I'd take it off and redeploy it.
I like that. And I like the perspective too because
you're already making off of it. You're making money off of it. So
you cover the commissions plus a couple of chicken sandwiches. Yeah, plus a little extra.
Get those $2 to the dollar store.
Yeah, I'll take it. It's something. Can't forget or lose the value of a dollar.
QQQ, I forgot you're a NASDAQ boy.
Yeah, go ahead and we'll just go ahead and disregard that one right there. But no, we sold an at the money call spread on QQQ. So we got a little bit
betting on the market going down.
We got a little bit of short delta. Well,
betting against America right here.
Hey, look, man, you're putting me in such a bad light. No. But I bought a put too last week Thursday, and then guess what happens over the weekend? We get a gap up into new all-time highs. So we had to have some other positions.
Do that right here. Do whatever the opposite of what Arrow's doing.
Pretty much.
It'll be good for life.
So I'll let you know whenever I take off this QQQ put, which it's going to be within the next 2 days, and then we might see the actual sell-off on the market.
If you keep putting these short call positions on, one day you'll be correct. Okay. You're going to be making bank on that day.
But then I'm going to be sad because it's going to be defined risk, and I capped off my earnings for that massive directional move we might get. But anyways, those are a couple of the positions that we have over here in the portfolio. We can take a quick look at Micron, and I don't know if anything else has been top of mind for you besides Micron. I know that's been on everybody's radar.
I don't know. I have a couple of things. One thing, so we can talk about Micron has been up because of the memory prices, 150%, which is just absurd in the last 2 months. I mean, you can't tell when this stuff is going to happen, obviously, but I saw a bunch of people on Wall Street Bets posting that they put $70K into buying calls in Micron, and now they're rich off of that. But whatever. If you already had $70K to put into calls, you were already rich in my book. But
that's a really great point.
We can talk about SpaceX probably. The U.S. military, the U.S. government and military is giving them a huge research project grant, $2.29 billion, a huge contract, and they're about to IPO in the next couple of months or whatever.
Probably going to be the biggest IPO of the year, right?
What are we thinking about that? Huge one that everybody was around was like Google, right? Like that was like
what I'm thinking is a lot of those junior bankers that just got out of school or that just got into that position, the fact that they get to get some experience, some of them probably a lot of more seniors, but some of those junior bankers probably get to get a little bit of experience handling such a large IPO like SpaceX. because I know they're going to go through a few different banks, but it's just crazy to think about how some opportunities that you get in life really depends on what external factors are happening. Like, what do you mean there's going to be some junior bankers that could have come out and say they have experience handling SpaceX's IPO, which is going to be the largest IPO of their first one, you know what I mean? So timing can just really line up.
Because if you work, they're working on the cutting edge technology of the new industry and stuff.
I think about that a lot.
They're going to be right there, when all this stuff is happening. I think that's a super interesting, unique opportunity. But what do you think about this whole Elon Musk government stuff, whatever? Government giving grants just before the IPO happens, maybe to just raise the IPO value or whatever.
I don't know.
You think there's any
funny business going on?
Or you think this is just standard procedure?
To be honest, I really don't know. But in terms of funny business going on, I don't think anything is very far-fetched. I think there's a lot of things that always happen behind the scenes that we're not very aware of, where people can publicly make something look a little bit differently than what it really is behind the scenes. So with that being said, maybe not. But at the same time, I think having the government support for whatever you're building is a huge edge for whatever it is that you're building.
Especially when America is finally getting back into the space race,
Exactly. Yeah. Kind of crazy that we are getting back into it. And
who's going to be the first one to reach Mars? The U.S. or China? Some other country that we haven't heard of yet.
I know. Yeah, maybe we go there and there's already a flag.
Yeah. Would you live on Mars?
I couldn't do it.
The opportunity to?
I couldn't do it. I don't think anything is...
You're more of a family man.
I am a family man. I don't know. That would definitely have to be like a niche that I'm super passionate about to even go in space and take that risk. I think we're all willing to take risks, but I think it has to be worth it to the individual. And I don't know if that risk is worth it for me and myself.
It's said that actually when the men were put on the moon, they had letters and written basically that were saying that if something happened to them on the moon and if NASA was unable to bring them back, or if they died on the moon or something happened, then they had messages written to be able to explain to the U.S. That they went on such a brave trip and they were unable to make it back or whatever. Luckily, stuff did not happen. But I feel like the people who are going to go, the first people to go to Mars, they're going to be super rich, super famous, whatever.
Oh, for sure.
Because you're going to need a bunch of money to do that. They're going to be super brave people.
Oh, 100%. 100%. And based off of social media today, everybody's going to know about it.
All right. On AI tokenization now, we can talk about Robinhood.
Okay.
Yeah.
Got some Robinhood.
So they're opening up their platform to AI agents for trading, basically. So now you can use AI to basically make trades for you on Robinhood.
That's interesting. Is it more so giving you some type of... is it giving you perspective in terms of what decision you might want to make, or like are these agents
going to be able to make the trades for you?
Okay, so
from what I'm understanding,
like almost like program trading, almost built into a retail app.
Because a lot of people with the chatbots, with ChatGPT, with Claude, with all this stuff, Perplexity, they're able to feed so much information into the AI to make it think exactly like them, and to be able to have a conversation exactly like them. That's how you get into the whole AI girlfriends and AI boyfriends territory as well. But that's a separate issue. But what we're learning is that the AI is able to think like you. So if the AI is able to think like you, you're able to feed all of your trading history, your trading stuff into all these different AI agents. Is the AI eventually going to be able to trade for you?
Yeah.
Would you even trust AI making trades for you? Because we all know AI can make mistakes. 90% of the time, ChatGPT will be correct. Then the other 10% of the time, it'll make something so wrong, so egregiously wrong that you will know no human would ever be able to say something like this. So this is your money we're talking about now on Robinhood, right? Yeah. Would you be able to trust AI to make some trades for you, or would you always want some sort of input on it?
Probably some sort of input. I mean, if I'm thinking right off the bat, and then what I'm thinking too is like, I wonder what the average portfolio size is for somebody like Robinhood, and I wonder if
it's probably lower than Tasty.
Well, yeah, probably. And then I wonder if, depending on the average size of the portfolio, depending on what firm, if those customers have more or are more inclined to use specific services like an agent. Like, is a smaller portfolio more inclined to test something like that? It might seem like there's a little bit less risk. So either way, I think that's pretty interesting. Oh, trading for you. I don't know if I could.
I know you like to be a little active in the market.
Yeah, but it's so funny. It's not. We make mistakes all the time. Managing risk. Oh, I shouldn't have added here. Maybe I should have de-risked a little bit.
AI will not have is the emotional aspect to it.
100%.
It's like all computers and the internet and everything. So
I don't know about that. What would you guys use something like that? I don't know. I know it's right around the corner.
It's a little scary to trust AI right now on a lot of stuff, just because of the amount of stuff that they do get wrong. And I think also on the wrong thing, you said humans get stuff wrong, but I feel like people are more okay blaming themselves with stuff, or like are okay if they made something wrong versus if somebody else did something wrong for them.
That's a good point.
It's kind of an interesting psychological thing.
Yeah.
I know I'm definitely that way. If I made a mistake, obviously I'm going to feel bad, but I know I made the mistake.
Yeah.
If somebody else made the mistake for me, even if AI made the mistake for me, I'm going to be a lot more
Be a little
upset,
more pissed.
'cause that's preventable, right? So whatever I do is not preventable necessarily. So
Yeah. I use Robinhood Digest cool AI feature. I got to check it out. Just keep up with what
this
other
is
people
obvious.
are
All this stuff
developing.
is in the very early stages.
Yeah.
And I also think some companies, Robinhood, other companies also, just throw the word AI out there just so their stock price rises a little bit.
Yeah.
Because that's just
for
vibe
sure.
trading that we're running on.
Oh, for sure.
So I don't know if anything is truly going to actually come from this or whatever, but
I don't think it's patched yet either. I don't think that strategy is patched. CEOs just throwing out AI. One more comment we got here. Lee said, regardless of platform, I would always want to have input as a human, as an engineer and an ex-fighter pilot. Yeah. No, AI should never always be autonomous.
Yep. I think
we would piggyback on. Yeah, we would piggyback. A lot of us would piggyback off that opinion too. Me too. Not trust him. I meant. Oh yeah, I hear you.
What is this? I have the Indian version of the Gus voice. I see. I don't know if that's a compliment or not.
Well, you and Gus are probably some of the two. I tell you guys all the time. You guys are some of the smartest young people I've ever met. Right? I say young people as if I'm barely older than you guys, but legitimately, like you guys are some of the sharpest minds. You know what I mean?
I try.
That I've interacted with. And I don't just glaze to glaze. I'm being pretty serious about that.
We come over here and we're surrounded by all older people who have been in the market a lot longer than us.
Yeah.
So it's nice to hear that sometimes.
Yeah. You guys
You've been trading since you were like 4 years old, you know?
Yeah, but I no, I mean like just like any topic. Like you guys just like that. Both of you guys.
You gotta grasp it, man.
Yeah.
Gotta read.
I hear
read
you.
a lot.
I hear you. Anyways, with that being said, Brother Sahil, thanks for taking the time to hop on with us here today.
Brother Errol. It's all good, my guy. Anytime you want me.
Cool. No, it was really fun. We got a lot of greetings.
I'll catch you on Monday as well, right?
Yeah. So we'll circle back around.
Coming back till Tuesday.
He's in Poland right now, so whenever he does get back, we got to get his.
Rocking the show alone.
I know. Hey, I got to get his take on how Poland was. Something I was bringing up the other day was the fact that there's a lot of places out here in Chicago that have Polish sausages like on the side of the building, and I'm like, is this like a Polish hub out here?
Try an actual Polish sausage.
Yeah. So I'm gonna have to ask Gus whenever he comes back around if he got to get into any of the food over there. But anyways,
good luck to Gus over there.
Cool. With that being said, brother Sahil, once again, thanks for taking the time to be with us here today.
Anytime, my guy.
Everybody else, Money Mike, Nice Boy, Ranch, Lee, everybody else, Jared, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. It's still Wednesday, May 27th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Thomas Westwater. Thomas, it's been some time.
Yeah, I took last week off, enjoyed some of the summer weather here, so it's good to be back, Didn't really trade too much, watched a couple of my positions, but getting back into it here.
Glad to have you back. What a day to come back and be on air, because we do have interesting market action, should we say. Gold's down a lot. Oil futures are down a lot. Stocks are not taking advantage of it. There's a gap in reversal here in the market. We weakened a touch from this morning when we were on air for the morning show. Basically, stocks were flat. And they're still relatively flat, but there is something that piqued my interest over the course of the day, which I came across, Thomas, which I want to highlight here for folks. Maybe one of the reasons why this market got a little weak today. There's been some charts being passed around amongst various analysts about GPU rental prices and the movement that they've made recently. In particular, a lot of folks are talking about what's been happening with that blue line. The blue line are average GPU rental prices from a group of what's known as the ORN Exchange. ORN Exchange has what they call the OCPI. It tracks live traded spot prices for GPU compute across major hardware types, H100, H200, B200, RTX 5090, and a few others. So that's one angle. The other one comes from our friendly folks with Silicon Data. Silicon Data is the group that is currently partnering with various financial institutions, and I believe the CME themselves, in order to help build compute futures. The white line there is rather stable, not freaking out today. But Orn Exchange is the one that folks have been talking about for several weeks. It's been one of the driving factors in the market rally that there's just a bottleneck in supply right now, Thomas, and there's not nearly enough supply going around. So demand is pushing prices higher and higher and higher. And what implications that has for HBM and, in NAND and GPUs and everything. Today, we're getting a little bit of a reality check.
Yeah, I mean, one of the big things, the bottlenecks going around right now is it's not technically a bottleneck yet, it's higher prices, but memory that feeds into a lot of the AI infrastructure build-outs. So tomorrow we get Dell. They'll probably have some commentary on memory prices as they usually have in the previous quarters. But maybe they'll, shed a little bit of light on some of the constraints in the AI build-out, but we'll see.
Yeah, Dell's probably the most interesting earnings report left on the board this week. I know there were a few things here today. Marvell, Salesforce. Okay, Marvell probably deserves some love too, but Dell is probably the most important name for AI infrastructure trade. Costco's a bigger company, marginally. Who cares? That has nothing to do with the major theme in the market right now. So I would encourage people to, if you're trading any of the chip names, if you're trading anything around the NASDAQ, keep an eye on what the rental prices are doing, because that seems to be a focal point of conversation, at least in the second half of today, among some folks that I follow and talk to, that there's been a major pullback. And it's coming in line with perhaps some news from various corporations, just anecdata, that companies that scaled up their AI usage hoping that it would lead to significant cost savings, they haven't seen the cost savings materialize at the scale they thought they would thus far. And so they're pulling back on the AI implementation. What that means for the broader market, Thomas, of course, if the AI trade is questioned, we may have a problem on our hands. But today, it's just a slight little oscillation deviation, 75.31 here on ES. It's 6 points lower from where we closed yesterday. It's barely nothing. I suppose that's 4 points weaker from when I was last on air at 11 a.m., Thomas, but it's really not anything of a day here right now. The gap in reversal is a little bit more apparent in the NASDAQ, where we had this run up higher. You saw it in semiconductors in particular. They traded off the highs, trading north of 30,300 at a point earlier today, only to now settle back in. Semiconductors themselves have made quite the reversal. They're off 1.7% here. So first blush, Thomas, it's a pullback in semis. Are you buying the dip?
I probably am. Here. In the grand scheme of things, it's a big pullback relative to what we've seen. We're used to going up almost every day. But has the story changed that much? Or is it going to change? I don't think so. So I think it's worth giving it a shot. Here, we'll go with the 51-day out contract. There's decent volatility there. Probably go around to the 30 delta, try to get something right there. We get these pullbacks every once in a while. It's easy to start to panic, but I think that speaks to, we're just so used to seeing this market have a lot of resiliency, a lot of strength. So it's nothing to freak out over one day, So I think it makes sense to get a little long here. And I'll probably sell the 560, buy the 550. It's 2-to-1, 60% POP, 61. So yeah, I'll put that order in.
I have a slightly different approach for this because I'm with you on semis. I'm at 51 days as well here. That most recent swing low on May 19th comes in at 527.87, and it's a bounce off of that 1 month moving average here. That leads me to believe that if this market structure is still intact and the rally is going to continue, then we should see that this uptrend, longer term trend level, we'll call it the medium term trend level instead, that should hold. So the low certainly from May 19th would be cleared out, 527.87, and we really shouldn't see the 1 month either. So thinking about those two levels, Thomas, that does give you 550 down to like 525 to work around. And that's risking 2.5 to make one at a 65% probability of profit, which I think is something that's reasonable here. to do. Just thinking about the semi strength and how it's been continuing, and those GPU prices, right? If you're looking at the Orn exchange, today's scaring you. If you're looking at Silicon Data, which uses tens of thousands of inputs, apparently, according to the folks who are running that particular price tracker, there has been no such volatility and oscillation. It's been a slow, steady grind to the upside, which for talking about the longevity of the AI trade, we have a great interview with Jim Bianco of Bianco Research coming out on our YouTube channel later today. So I'd encourage people to listen to that. We talk about inflation and whether or not AI still has legs, Thomas, here. But when we look at the market right now in the short term, I'm taking a look at this NASDAQ chart. If there's a place for it to hold up, this would kind of be it. Not for nothing, the inverse head and shoulders pattern that we were tracking last week into this week, it was completed earlier today when it crossed 30,225, 250 or so. So that's no longer the driving move. And now you're dealing with this bearish engulfing bar key reversal type of candlestick here on the 4-hour time frame. So this is the put up or shut up kind of spot. The uptrend off the lows mid-May, it's being challenged right now. We're going to hold it here and the uptrend continues, or maybe the market has other machinations that a very crowded bull trade may be forced to reckon with.
I mean, it's kind of like, the news flows have been getting better in terms of the geopolitics, things like that. And it's like, we've rallied through the phase of the market where the negotiations went from very obscure to now more confident. You can argue that it's not confident right now, but it's almost like a sell the news, on good news. But we could either get a retracement higher, or we could break these technical levels and possibly get more follow through. I think it's which direction you take. Here is this is more of a potentially defining moment, given if it does break the levels you laid out. So if we do get that, is it more profit taking? People just taking off trades? Do we reset into a range? Where's that range at? So I'm going to stay away from a directional play on the NASDAQ. I mean, getting in SMH, that's already highly correlated. So I'm not going to play it here. But staying in SMH, I got out of my S&P 500 trade this morning. So, I'm just trying to recalibrate.
If there's a place to look right now for the market, I'm looking at this NASDAQ here, Thomas. I would really like to see it move back above 30K today to feel confident about this. There's reason to think that some of those former highs that we had in May, we've cleared out a little bit here to the downside now. That's not usual. In the cadence of this rally so far, Thomas, we've seen this market set new highs and pull back and not really retest the breakout levels or fall below them in any sort of meaningful way. Push up to a new high, stabilize, and then push up to a new high, stabilize. This is somewhat of a change in the behavior right now. We are coming to the end of the month. That's not nothing. People could be rebalancing their books. You could be seeing some flow with some profit taking, because if you are a hedge fund that got in Micron at 300 and now it's up at $900 or $1,000 a share, really how much more blood are you trying to squeeze out of that stone? You probably want to book some of those profits at some point in time. But Thomas, the trade overall, right? Micron here, despite its weakness today, it did touch, was it almost $1,000, high of 956 earlier in today's session. Nothing has fundamentally changed about the story that wasn't true yesterday or the day before or a week ago or a month ago. These are momentum trades right now. At some point, if you're trading these to the upside, the trade is going to break. It's still up on the session by 0.9%. It's obviously not up the 5-6% it was earlier. But the way that we structure these trades is important. One of the reasons why I prefer to chase this, so to speak, through calls rather than selling puts is on days like today, when volatility is already very high, the market moves sharply against you and you're short puts, it could get painful very, very quickly. Whereas if I'm long a call or a call spread, the only cost is, the premium that I paid out of pocket to establish the position. If I go max loss, I don't really need to worry about the convexity working against me. So structure here matters. I'm with you though, SMH doing a little short put spread there. Given the volatility we've baked in the cake, Micron, give us a pullback to the 1 week moving average again. Maybe held even though the 1 month moving average again, given how it's behaved. And it may be a new opportunity to ride it up once more, if we get so lucky.
Yeah, I mean, Micron's really, for years and years, this has been a stock that there's been a lot of speculation. You see a lot of things on like Wall Street Bets and things like that, but it's been very cyclical in its business nature. So, that's why it's valued much lower. If you look at something like NVIDIA, whereas Micron, I mean, now the valuation is a little higher, but still, if you compare it to some of these other stocks, it's still pretty low. I mean, so, I'm not sure if this is going to be something like where it completely collapses again, and then for years and years it just stagnates, or if this is a more getting baked in the nature of we need this memory. There's constraints, and now memory, structurally can be priced higher, where you're going to get higher margins, and then that valuation is going to catch up. So, I'm interested to see if the move is going to completely collapse eventually in the short term, or if it's just going to pull back, consolidate. And I think if you get that consolidation, it's a good sign to get long again.
Yeah, you mentioned some of the valuation concerns. Look, in the short term, Micron's valuations have gotten a little stretched. Its PE ratio is 42.92, right? Compared to NVIDIA is sitting at 32.46. But then you go to the forward PE, and Micron's forward PE right now is still 8.96. Its price to earnings growth is 0.07, which is incredibly low. That's a sign of strong valuation longer term. NVIDIA's forward PE is 17.14. So what if we're seeing a convergence in the AI space with some of these forward PEs for the GPU makers, the memory makers in the mid to high teens, as opposed to being treated like cyclical products? This has been a considerable factor, perhaps, in the recalibration of the market's understanding around this particular sector. The NASDAQ trade is intact then. Today is just a little wee bit of weakness, although it does raise an eyebrow that you have oil down so much and stocks are not making hay of it like they typically have done in recent weeks. Again, little signs that make you wonder what's going on here in the second half of today's session.
Yeah, I mean, this pullback, it's essentially, it's nothing, right? Down 0.4%. Coming after all-time highs. I think this is, where if you've been waiting to get long, is this pullback enough? I mean, do you want to wait for a bigger pullback? I think it's if your story was I want to be bullish yesterday, I'm not sure much has changed here. The price is just a little lower, so I think that's a buying point.
One of the signs that it's funny how I'm talking in such cautious tones. I feel like I'm speaking in such cautious tones. The sentiment on Twitter today is terrible. And it's just because everyone's so levered long in the same trade.
Yeah.
One of those signs that happens near the top. Maybe we're near a top. Maybe we're not. I'm certainly not treating it like a top as a momentum guy, Thomas. I'm looking at the broad sweep here. The Russell barely oscillating. It did move up to a new high today. It's now back down a touch. In terms of broad, division here, RSP, which had moved up to a new all-time high yesterday, is barely down 0.03%. QQEW, it's a little bit weaker alongside broader tech, 1.45% lower, but it closed at an all-time high yesterday following a breakout. So a day of weakness. The sector rotation has been holding up still throughout the entirety of this move over the past year. Today's the second trading day of the week. Okay. Oil is still on the downside near the top end. XLY, consumer discretionary, 1.57% higher. When has that never been a bad sign right now? XRT, retail, consumer facing. Retail up still 1.29%. Telecom, part of the AI build-out story, will close at a new all-time high today if it were to close at these levels. So it feels like a lot of jostling right now. It feels like we're in the midst of, we just got summer started here, Thomas. It's already 1:50 p.m. Eastern. When the show was at its prior time slot, when it was 1 to 2, we would look to 1 million contracts traded by 1 p.m. Eastern as like a healthy threshold for trading volumes that day. We're at 932,000 contracts right now. We're in the summer session, Thomas. So unless there is a large uptick in volume alongside one of these sell-offs with a big catalyst, yeah, we have to just continue, plodding along with the same strategies and work ethic that's carried us to this point and led to the decision making that we've made.
Yeah, I think the XTL, the telecom story, that it gets more interesting the more I look at it, because there's so much more investment needed to really foster the bandwidth needed for all this AI, the energy needed. I mean, it looks like it's going to have to be, the investment, it would be weird if it just falls off in the space. The investment projections needed. I think it's more and more looking like, the market is catching up to where it's supposed to be. But, it's been extraordinarily strong. Even, the Iran war, it was quite insulated from that. You had to pull back, of course, but it's still just resilient.
No stopping this train, Thomas. And that's really the message that you're getting here. Yeah, telecom ETF, lots of names that we really don't talk about. Iridium, Extreme Networks, Sienna, Viavi, Viasat, Globalstar, Lumen Technologies. These are names that we never mention, ever. Just plugging ahead, which makes sense. We have transmission problems in the United States. We don't have the infrastructure for basically anything.
Right.
Right. It's all dilapidated what exists. Our bridges and tunnels are failing. We don't have enough power lines, transmission lines. We don't have enough energy generation for a strong enough base load. It's just a mess. But hey, at least the S&P 500 is up at 7,500, right, Thomas? At least we've got that going for us.
Yeah, and I mean, in the very, very long term, a society's constraint is usually almost energy, how much energy you can produce. That story is becoming more and more prevalent with AI. We're really, ramping that up to the extreme.
Yeah, I think that's really well said, Mr. Westwater. Really well said. With that, we will move on here into the world of oil, which is dumping on deal hopes again. It's been very nice that it's been a consistent rhythm, Thomas, of headlines that allow me to use the same title for the oil section here 5 days in a row, because it's been the same thing 5 days in a row. We've had headlines and hope of headlines that have been driving the market to the downside. Shorter term, Thomas, we may be looking at a little bit of sideways move that's transpired here. So to that point, we're probably closer to range lows than we are to anything else. We have that pivot low here from May 6th. That's coming into play near 85, 86 or so. But there is something to keep an eye on right now. It's something we discussed yesterday. While we did have that bounce off of that 50-day moving average again, like we did on April 17th, and here again in the early portion of May, this could be a bearish rising wedge, which I'm having a hard time using any technicals for oil, given how it's such a geopolitically driven market right now. But it does suggest that the worst is over in terms of the upside. If you were to follow this technical pattern, ultimately it would say that we're due to return to the base here, which I think in this case we could call it around $77.20, the low that we have from April 17th. But right now, if you're been someone who's been selling the calls because of all the calls to you in this market, and you're now watching oil vol IVR here at 37, when was the last time we had oil vol this low? Well, you have to go back several weeks. So something is changing. The technical structure is changing. The momentum profile is changing. The news flow is changing. I continue to look at Trump's rhetoric. Thomas, this has been the single best guidepost for giving confidence in selling the upside in oil. He continues to call strikes against Iran defensive or love taps, but just they're not aggressive terms that would not signal that he's trying to beat the drums of war to escalate the situation. So the market's convinced, I'm convinced that this is, unless we get something really bad that happens again, we've probably seen the highs in oil for the foreseeable future.
Yeah, I agree. I mean, the market is getting more positive about a ceasefire. Trump has been, you're right, pretty, his messaging hasn't been aggressive. I mean, he opines on the topic all the time because he gets asked about it several times a day. I mean, it looks like, right now the price is telling us that the worst is over. I do think there's a floor somewhere in here due to the supply that's been displaced that'll take time to get on. Around 77 to 80, yeah, I see it around there. And you're right, the volatility, it's been reduced. So as far as, tradability for me, I'm not trading it as actively as I was a couple weeks ago. I still have a short put spread in the CLN6 contract at 81. We got $8 about to go there. So, the trade would have been great to take off last week, but I'm still going to keep it on. I think 20 days staying above 80, not unreasonable. But as far as playing this directionally anymore, I think with the lower IVR, it just makes less and less sense to do that. So I'm going to be watching the headlines. Of course, anything can change. But
can you go into that for a second here? Right, when oil has a 70, 80, 90 IVR, when you're looking at the raw IVs that were sitting up at like 80, 80, 90, 100%. There's a lot of reason to go in there and look to sell puts. But if we're still going to be in a headline-driven market where the volatility isn't priced in and therefore you're not going to be compensated to the same degree, what's the appeal then of trading oil in review? You seem to think it's diminished.
Yeah, I mean, if you're going more, if you still think there's a direction you can play. I mean, right now the chart's pointing to the downside. I mean, maybe more of a long put spread, but I've traded this a lot, ever since the war started. Done well. I think just taking a step back here, because there is a floor. There has to be a floor, but where it's at is a little harder to decipher. And the headlines are driving the price right now. I think after this is fleshed out, more certainty, then the market's going to return more to the fundamental picture. But are you going to get higher volatility from that? I mean, I don't think so. I think volatility is going to stay low as long as there's not a wrench thrown into the negotiations here. So, no big surprises are going to come out of the oil market if the deal goes through or if a ceasefire goes through. It's going to come gradually. What's going to happen? How ultimately the supply disruptions are going to affect the market? How long is oil going to stay elevated to where it was? How long is it going to take us to come back to the 60s? Those questions, I don't think they're really going to drive volatility. There's not going to be something that, one EIA report that comes out that's just going to make the market uncertain about where oil is going to, what range it's going to land in.
We should do some cleaning up here, Thomas. We've had these positions on for some time, just by virtue of having operated in oil for the duration of the entire war. I think we could just, anything that's around 20 days, we can just start to kind of peel off here. It's going to be a hodgepodge of stuff. These are probably mismatched. But we're going to clear and clear and clear and just take profits on everything. Because at 20 days to expiration, we're on the other side of the decay curve, and the whole point of all these trades was to take advantage of the market when it ping-ponged. So we can do that now. Goodbye, goodbye, goodbye. The question is whether or not it's worth continuing along the current path. At 50 days to expiration, Thomas, I'm looking at some of the market down here, like 74, 72 we put on earlier today, still getting compensated better than 4-1 on that. I feel pretty good at saying within the next 50 days by July 16th, oil down at 74 by July 16th would be a miracle or a disaster. So I think we'd have it's like something would have had to have happened, right? The straits reopened, the wars are like legitimately, the war is over, straits fully reopened. I'm being hopeful in that scenario, or something terrible like the economy globally just grinds to a halt because we hit tank bottoms for jet fuel and various refined petroleum products. So just the economy can't run. Maybe that happens, but next 45 and 21 out cycle. I mean, is that really at the top of mind? No. Right? Because realistically, if we're going 50 days to expiration, if we're getting it at 21, this is now a 29-day trade. So by this time in June, what's the odds that we're going to see oil at 74? Think low.
Yeah, I think low. I think, around 80, it has to stay there. Because even if you solve the war, oil starts moving. But, even the negotiators sound like it's going to take, they're aware that it's going to take time. You just don't make a deal, snap your fingers, all of a sudden the ship traffic transits per day is back up to capacity. It takes times for these cargoes to move, for shippers to gain confidence. There are ships moving through, still reduced heavily, but I mean, it's just a very headline-driven market. The headlines, like you said, the U.S. trying hard not to beat the war drum again. So it looks like from both sides, and I'm hesitant to really, the mainstream media is really, there's been a lot of, I don't want to say falsehoods thrown into it, but a lot of misreporting, a lot of things that are pretty clearly, at least you can argue, have been, pushed to media with an agenda from someone in connection to the negotiations. So
you don't say.
yeah. I mean, so I don't want to get stuck on the bad side of a headline. I've done well in oil, so yeah, I think it's time for me to step back a little bit for a while and concentrate my capital elsewhere.
I hear you. I'm looking at CLZ6 here. It's having a rough day too. It is down not nearly as much as the front month though, and that has been a consistent theme. Back month oil has been staying relatively stable throughout all of this. Thomas, I'm still leaning long here vis-a-vis the short put spread, 69.71. If we were to put that on today, the yield would be basically a little worse than 1-to-1. In fact, it's closer to risking 3 to make 2, but it's a 60% probability of profit. And getting down to 70 in the CLZ6 contract would mean breaking through effectively the lows that we have at any point during the war. We get that initial spike higher through 70 by the end of that first week of the war, Thomas, and then pullbacks on the 23rd, low of 70.55, pullback here, low of 70.47 and 70.43, and another one here at 70.85. I feel like using 70 as an anchor point is a pretty decent place to operate around. And that, plus we've seen this trend, pullbacks into this 1 month 50 area. It's been an area of support. So oil for me is still worthwhile. A little different calculus for you. The change, though, may come into natural gas, where natural gas here has been trying to work out a little bit of a rounded bottom, Thomas. We had a trade on here last week, and then it fell apart. Now it looks like we're trying to get something else going here again. Maybe it's not an inverse head and shoulders pattern, but are you looking at natural gas the way I am with hope in your eyes? That's a nice little trifecta of candles down there, giving us a morning star cluster.
So I'm long nat gas via put spreads in both the N6 and the Q6 contract. In the N6, I'm at 285. At the Q6, I'm at 29. I put those trades on 2 weeks ago. I'm keeping them on for now. I'll get rid of the N6 very shortly here, but I'll stay in that Q6 contract. I might even get more concentrated in the Q6. The EI, the natural gas report this week, I think it comes out on Friday because Monday was a holiday. But last week we saw a build of 101 BCF. That was the fourth biggest build for that period in the past 5 years. So I mean, it wasn't a bullish report for the last one, but it's still the weather is now supportive. It looks like it weakened up a little bit over the weekend, and then kind of the past couple of days it strengthened again. But natty gas reacting today. So I mean, it's I don't love the technicals here, but I'm going to stay long via the short put spread. And if we break I don't know, 3.2, I might get more leverage in this trade.
Yeah, when we were looking at it last week in the M6 contract, it was for a breakthrough like 2.9, and this one it's closer to 3.15, 3.2, and we had that acceleration ever so briefly. Kind of reminds me of what happened here in early March, where we tried to poke above former swing levels and ultimately petered out for a bit. To get me back in, I want to see 3.2 again, like you. That gets us back above the 50. It gets us back above recent swing levels. Sure, we haven't cleared out the 1 year 3.30, 3.31, but it's still something to work with and build upon. So you and I find ourselves in the same camp there. It's an 11.4 IVR, and in a low volatility regime like that, it's probably efficacious to buy out of the money calls rather than sell puts. At 62 days to expiration, we'll go over to the Q6 contract and a quick little check there. Thomas, the line in the sand for this one is basically 3.2, 3.25, a little bit more. 50 days, 3.238 right here. So to that point, you get 3.238. We have a low here. Maybe this is a double bottom 1-2. Right? 1, 2. Maybe it's a bear flag, but you're talking about a move maybe up to 3.7 or so. What would that look like in terms of pricing? 3.6, 3.7. By the time we rally a little bit more, it might be in. It'd probably be closer to this kind of pricing, risking 1 to make 3. I could mess with that, given how cheap volatility is here. That would be fun to trade during the summer, Thomas. Natural gas. It would make sense. Power demand's up. Don't we have this AI infrastructure trade booming, and we're about to go into summer heat cooling season? So why not? Why not do it?
Yeah, if we get a massive heat wave, something like that, we can certainly rally hard. Looks like the East Coast looking at slightly above average temperatures 2 weeks out. So if we see that shift warmer, I expect natty gas to be supported a bit.
We move on here to the bond market, Mr. Westwater, which is following oil again. Oil down, so bonds have been able to rally a touch. Hasn't been that significant, though. We have come off the highs. We're trying to churn back through former swing lows here, former support, which has become resistance on our charts. The Fed looks like they're stuck. Mirren telling everyone on the way out, oh, yeah, by the way, the Fed chair is not in control like I thought he was. It's really a group decision. So Warsh probably not going to be able to get his cuts across the board anytime soon. And the market's pricing in greater than a 50% chance of hikes before the year is out. Nonetheless, Thomas, treasuries are following oil. Given oil's move lower today, does it surprise you that we're not seeing greater strength out of our long end of the curve?
A little bit. I mean, you expected some relief in the bond market, rates to come down a little bit as oil drops because that eases the inflation outlook. But oil's still down a bit today. And, I think this is, the oil shock, supply shock, it's driven up prices, and it will for at least a few months here. So I think, this is reflecting that there's already some damage done, and now the market needs more clarity on how this is all going to shake out. So, with oil down and bonds failing to really take advantage of it in a way we saw previously, I'm not looking at getting long here. Usually not trading bonds, but I don't know if there's a trade here for me. If I did anything, today based on the price action, it'd probably be selling a call spread.
I used the opportunity in this rally yesterday to buy an out of the money put spread here, the 108, 107, 58 days to expiration, Thomas. I'm thinking about the relationship that treasuries have had with oil, of course. And if I'm of the mindset that I'm concerned what would happen to my mostly long deltas in stocks should treasury yield spike or oil prices spike again, I would like to be somewhat hedged off against that. So 108, 107 makes sense to me in that regard. What's making it intriguing, though, is how we're not having that rally today. It's another move back into your 1 month average like we had here in early May. And thus far, the rally is getting pinned and stalling anew. So is there anything to change? I don't think there's anything to change here. Would I put that trade back on today? Yes, I would. Of course, it's serving a purpose in the broader scheme of things. It's not because I'm a treasury bear per se. It's just this is a downtrend and the market came back to resistance. So I'm selling at downtrend resistance. No reason to overthink it. Rally a little bit more, get to 110.5, and we could revisit the conversation.
So the war started in, what was it, February 28th, somewhere around there. You look at where bond prices were then, you look at where we are now, you know, it's pretty obvious that rates aren't going to drop that much anytime quick. Oil prices are higher, inflation expectations are higher, consumer sentiment is lower. The Fed rate cuts have swung quite a bit. So I think, you know, selling the rips here is probably what makes sense. I think it's going to take quite a while for the bond market to get back to the pre-war levels, even if oil gets down there faster. And I think oil will get to pre-war levels faster than bonds.
Oil pre-war faster level. Yeah, that makes sense to me, Thomas. You know, if oil can drop down to 50 or 60, but as long as these inflation concerns are sticking to the pipeline, which are bullwhip effect, it's not going to be resolved the second the Strait opens, then the treasury market is going to have to retain that inflation premium that it's held this entire time. Plain and simple. Thomas, metals here look absolutely horrific. This is just gross. Oil's off. Wouldn't that be good news for gold? Shouldn't it be good news for gold? No such thing, down 1.2%. What's there to like about this right now? Because I'm struggling to find a reason why gold would be enjoying the same benefits that it enjoyed at last year, which are mainly speaking the demand from sovereign central banks trying to build up their reserves. Right now, they need to think about refilling their SPR first. Where's the extra money to flow from sovereigns and central banks into gold?
Yeah, it's not there. You know, I like this move a lot. I put on 2 weeks ago a long put spread in gold at 4,500, 4,490. So that's now in the money, both legs of that. So I'm looking at taking it off. I have the order in there to buy back. And, you know, I'm not sure I'll stay, you know, short gold. If there's a bounce, maybe, you know, to the 5-day, I think that would be a place to do it. For right now, I'm going to get out instead of rolling, take the profit. You know, it's kind of gold has, you know, the correlations that it's swung through this year, they're just not, I'm not sure if they're making sense to me. You know, you get oil coming down in the war, oil goes up, gold is being pressured, inflation expectations go up, now oil is dropping, gold is dropping. I think you're right. There's going to be little demand from central banks. That was a big story last year that helped gold drive higher. So I'm not too confident in the short case as I was 2 weeks ago, but I'm not confident in getting long here either. So I'll watch for a little bit, reestablish the short trade on it. If we get back to the 5-day EMA, of course, anything can happen until it does that, but that's my game plan for now.
Game plan for now is still stay away from gold on the long side here. There's negative technical momentum. The slope of the 1 week moving average is getting more negative, as is the slope of the 21-day average, the 1 month. Same thing for the 50, Thomas, all things that we don't like to see. Silver's having a worse wipeout, double the loss of gold, looking like it's going to break its uptrend from the lows that we had here in March and again earlier this month in May. Although perhaps the right way to think about this is more like that, where we take the March, April, late April, early May swing lows, and you know, all of a sudden that looks a little bit worse. It just keeps getting worse, Thomas, no matter how many lines we add to the chart. And granted, all of it is subjective here, but I look at this trio of candlesticks and I see this breakdown outside of the uptrend, this attempt to rally back into the uptrend. You get pinned against your moving average envelope, and then you start to just bleed out and trade lower. You know who did that recently? Gold. here in April, here in May. When it breaks down, tries to rally back, and just the downside momentum pressure stays in place and keeps enough people interested at selling at these momentum levels to drive it to another leg lower. So silver and gold just don't look that healthy right now. Copper has been a little bit more immune to all these wiggles and waggles that gold and silver have been giving us, in part because it hasn't been treated like that speculative safe haven asset as it was, or as the metals were back in 2025. I'm still comfortable staying long here, leaning long here. If anything, another pullback, maybe it's an opportunity to sell a put spread as opposed to still looking just long calls. But as long as we're north of 6.2, I feel pretty good about copper, as it were.
Yeah, above 6.2, I think it's still long, right? It's a good technical level to trade off of. It's the swing high in April. We pulled back there earlier this month, caught some support there. Even if we dip below like the 21-day EMA, 6.2 looks like a level where traders are looking to defend. I was in the copper trade a couple weeks ago, up until, I think a few weeks ago, I was selling those put spreads. I think now might be a good time to get back in for me with the view that it respects 6.2 here. 62 days out, yeah, I don't rather have it trading a little sooner, but that's what you got. 6.2 is at the 38 delta. I'll see what I can do here. I think it's, copper is supported by the fundamentals in the market. A few of things like telecom, energy infrastructure projected to continue expanding. Copper is an input there.
It is certainly an input there, and there are certainly opportunities. Copper is a big contract here, though. If I wanted to sell the 5865, or estimate 586 short put spread here, it's going to run north of $2,200 in buying power. So trades like silver, trades like copper might be better suited for some of the ETFs, the higher liquid ETFs, Thomas. We keep going, though, here on Futures Power Hour. The dollar swings into favor. The dollar has had a nice little rebound the second half of the day, particularly against the Australian dollar, where I'm still leaning long deltas and nothing's broken down or gotten close to testing any levels that would cause me to panic or pull out. But the fact that you have weaker inflation in Australia, interesting. That's a country that's at the tip of the global supply chain. So maybe oil evening out is not having the big effect that everyone feared it would. I don't know if we're going to make that bet right now. Do you have any strong feelings on the currency market here? There's a good deal of vol. IVRs are well cleared north of the mid 40s, as it were, Thomas.
Yeah, I mean, I'm still long the pound. Short put spread at 1.33. That's 36 days out. The trade, it's pretty much practically done nothing at this point. I don't know if I want to get somewhere else. I do like the Australian dollar longer term. They're a big commodity exporter. But other than that, I haven't been really doing too much. I'm trying to catch up this week from being off last week. I'll probably, the IV rank in the Aussie is really nice. In the currency futures, you usually don't see an IVR up in the 70s.
No.
And, it's a good time to trade it. Looking right now.
The Aussie 77.6, it has been a stalwart so far this year, really for the past, 6-7 months, Thomas. It's just been having a nice little run. So I prefer to stay directionally long, look to find opportunities, maybe selling a put spread here. And we have somewhat of a pullback under 70 would be the way to do it. I already have another one, 68.5, 69 here. This is a small trade. Let's just... no volume there, so we might just run this one off the board. It's one of the faulty parts of the currency futures there, Thomas. We sometimes have to fish. But similar idea, 69, 68.5. You have to go 69.5, 70 to get a 4-to-1, which effectively means that you're not going to clear out the lows that we've seen since mid-April. If we start to break and lose our 50-day, we're going to get plenty of time ahead of us to make any decisions about adjusting a kind of position like that. So I'm with you, Thomas. The dollar here to me looks like it could be on the cusp of a breakout. It's not there yet. And this is one of the reasons why I myself am not jumping in with anything new on the currency side. If Dixie breaks through 99.40, 99.50, all of a sudden you're probably looking at a more extended dollar run here. And it's fascinating that, again, on a day where treasury yields are down and oil is down, the dollar is actually up. There's these little clues. Something is interesting is happening. Maybe this is one of the tells. I would really I look at the British pound here with this 53 IVR. I look at the 136, 137 area where we try to trade into in April and couldn't clear. We're back below 134.5. We're finding weakness against the 50-day and the 1 month. Okay. We go out to 36 days to expiration, risking 4 to make 1 at 69% probability of profit, the 136, 137 short call spread. I'm absolutely game with that. I don't think the pound's going to rally if oil prices spike again, right? If anything, this is going to get moved further in our direction if those current relationships hold. I'm going to go in here. 136, 137, Thomas, 36 days to expiration.
Yeah, it's not bad. I actually saw I am long the Aussie dollar, long a call spread. So, long the pound, long the Aussie. I might hold it off there for currencies.
Thomas, before we head out the door here, because we do have a few minutes left, do you mind just giving us a brief overview of what's going on with the grains here? A few weeks ago, we put on the long 650, 680 call spread in wheat as the war broke out, and we were able to capitalize on that prior to this recent pullback got out of the market. But we're now back down to 622. Surely something has to be going on in the world after Trump's meeting in Beijing or trade wars or some. Thomas, what's going on in this space? There's still pretty high vol. I see a 58.8 IVR in the beans, 58.7 in corn. Wheat's on its own planet.
Yeah, I mean, corn and the wheat, I'm long all three of these and came back, from being off and saw that they were down quite a bit. A lot of the weakness in corn, in soybeans, is because oil has sold off aggressively, because there's a big demand component to both soybeans for biodiesel and corn for ethanol. Whereas if oil prices rise higher and higher, you're more incentivized to produce more biodiesel, more ethanol. But that's broken. So that's kind of controlling the price action in corn and in soybeans. The China headlines, from what I saw, the deals, what the White House put out is they kind of almost repackaged commitments that were already made from last year as being new, when that's not exactly what happened. So, the farmers, the grains didn't get this huge gift out of Beijing. There was speculation that they were going to commit to an extra, 8 million metric tons more of grain purchases. That didn't come through. So they kind of rehashed what was already in the works. So it wasn't this really big bullish breakthrough from Beijing for that. At the same time, you got oil coming down. So the market had high hopes and simply became disappointed.
Thomas, what's next on the calendar for tomorrow? It's a busier day, particularly here out of the U.S. Durable goods orders in the morning are the one to watch. Those are items with lifespans of 3 years or longer. Your appliances, automobiles, airplane parts, things that require significant capital outlays for consumers or businesses alike. How many Americans have $2,000 sitting around at home to buy a new washer and dryer, Thomas? Not many. We've seen the stats. So you do this when you feel confident in the future direction of the economy, typically, because you can afford to pay down those bills. Durable goods are then followed on same time by GDP estimates for The second estimate that we have here for the first quarter, looking for a bounce, an improvement from 0.5 to 2%. And then we're talking about core PCE and personal income. Those are also doing. So there's a healthy amount of information due out tomorrow morning. New home sales, and then the end of the day, they didn't make the cut here, but we will have more energy inventory figures. Thomas, I'm taking a brief break. I'll be back in an hour with Jamal for last call. We started the day, we're going to end the day, and then, of course, overtime with Ilya. So see everyone at 3:30 Eastern, 2:30 Central. Until then, stick around. There's more Tasty Live programming coming at you. Dr. Jim Schultz coming up next. And Dr. J, this isn't the intro I promised you, but it's coming.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the post-vacation edition of what it is that we are trying to do. I have no idea where I am right now. It could be a Monday. It could be a Thursday. It could be a Saturday. For the last week and a half, it's all basically been a blur. But, man, I am glad that I am back with you all. And you guys did it, man. Like, you had one job and one job only to do, and you did it. You had to keep the market above zero, and you went above and beyond the call of duty. Right? A, B, C, D, you guys did it. NASDAQ 30,000. So pat yourselves on the back. The next three ticks are 30,150, 30,300, and then 22,850. So welcome to the show. I'm glad that you guys are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you are a bull. If you're wearing your NASDAQ 30,000 hat, you can commiserate if you are the last bear on earth. But I can assure you, it will be a good time had by most. And of course, don't forget, whatever questions you have for me, drop them in the chat box, man. I'll take whatever you got. Questions, comments, stories, and jokes. I want to hear. The algo is dying to hear. Put it in the chat box. I'll try to get to as many as I can right around the halfway mark of the show. We are certainly going to be very, very rusty today. So who knows when the halfway mark of the show might come. It could be in 4 minutes. It could be in 34 minutes. You just have to tune in to find out. But drop it in the chat box. I'll try to get to as many as I can, and we'll see where the wind blows us. So, Paul, bring us into the market. Man, what is going on out there? Look at this, man. You guys did it, man. You legitimately did it. EMI S&P's up 4. Risk-free instrument, also known as the NASDAQ futures, which is an extraordinarily high-risk product, although you would never think so. Why would you think it's high risk? Like, why would you think there's an extraordinary amount of risk in this product when every day it's just up another 1%? I know it's down right now, but I'm pretty confident if we get enough computer restarts, that guy is going to turn green. So NASDAQ at 30,052. You got the boomers doing boomer things, up 171 on the day, up to almost 51,000. And then you've got the Russell 3,000, almost all the way up to 3,000, only up a couple points today at 29.27. You got bonds up a couple of ticks. You got notes up a couple of ticks. You got oil getting absolutely shellacked, down $5.21. And again, I can't keep track, man. I don't even know what day of the week it is. So where are we? Are we blockade still? Like, I have no idea. I'm completely unplugged from what may or may not be happening in the geopolitical landscape. So you guys have to fill me in. Please do it in the chat because, again, the algo is really, really dying to know. UB40 up a little bit. Then you got the shifties. They're getting smacked around a little bit today, down 50 on the day for gold. Then you got the Hunt Brothers. They've seen better days as well, down to $1.65, silver under 75. And so you've got metals weak, the market kind of strong, just kind of hanging around, not doing too much. Got the British pound is down, you got the euro is down. Volatility, I think, is pretty much unchanged today. Volatility futures down 30 cents, and then you've got spot volatility. The old VIX down to 1657. Man, wow, that's tough stuff, man. That is some tough stuff. Down 44 cents, down to 1657. But don't forget, guys, it could be worse, man. And again, I don't want to look at it today because we've looked at this a lot the last couple of months. I don't remember much, but I do remember we have looked at the VIX chart going all the way back to 2017 at least 3 times over the course of the last, 6 to 8 weeks. So we don't have to do that again here today. But go back on your own time. 2017, the VIX printed down to 8. That's 8. That's 1, 2, 3, 4, 5, 6, 7, 8. So if you think 16.5 is bad, man, it can get 100% worse, or maybe 50% worse. It can get a whole lot worse, all the way down to 8. And so let's just take what we've got and not make too much of a ruckus about it. And so there's your market commentary. It's pretty much on par with what you would have gotten before I was on vacation. Very similar, very B- to maybe C+ quality there on the market commentary. So now we only have our 5 positions on. It's the same 5 positions we had on when we left. So nothing changed. Like, nothing changed in terms of, went on vacation. These were the 5 positions we had on, and we came back, and these are the 5 positions that we still have on. So we're still short MES. We're still short MNQ. It's remarkable that the account's even above zero. We're long Netflix. We're long Starbucks, and we're long Snapchat. So we'll talk about all those guys, and then we'll see where the wind blows us here today. I see you guys in the chat, man. Look at you guys putting in some work. And when C is here, Wolf is here, man. Sam L in the house. Catterday Night is here. Griffin Jones is here. Jared Kramer is here. Look at RZX in the house. Man, I appreciate you so very much. Look at Invierte Hoy. What's up there, Invierte Hoy? There's a little surprise and delight before the even surprise and delight section of the show. So that is a preemptive surprise and delight for Invierte Hoy. What is going on there, Invierte Hoy? And so, but I see Emedia's in the house. Mikos is here. Ordenu is here. Brian Racketon is here. Man, I appreciate you guys so very much. All right, let's talk about what's going on. And then do we have any earnings today? I don't even know. I mean, again, I have no idea. Oh, what happened with NVIDIA earnings? I mean, I watched it when it happened, but then I kind of forgot because I was doing other things. But 213. So hold on, let me go back here. Earnings were, well, they were the day after because my birthday was last Tuesday, so that was fun. You know what I did for my birthday? Went to the aquarium. Went to the Tampa Bay Aquarium for 4 hours for my birthday. Do you think that was my decision? Absolutely not. Do you think that on my birthday, I got to call the shots? Absolutely not. We spent 4 hours at the Tampa Bay Aquarium. Now, my kids bought me a rather stale and crusty soft-baked pretzel that was quite hard, actually, with my own money. So that was kind of nice. That was probably the highlight of the aquarium trip. But yeah, went to the aquarium for my birthday, and that was pretty fun. But then the next day, no, we actually had a really good time. But the next day was NVIDIA earnings, right? It was May 20th. Yeah, hold on. Let's take a look at this. Let me get let me just do a daily chart. It doesn't matter. It's all made up. Let's do, let's see. So yeah, it's not even, you can't even tell. Like, this is how you know it's a non-event. Like, normally, when you have an earnings event, like, here, let me try to find one. Let me look at, like, let's go back to Oracle. They're still doing it? Oh, yeah, they're out there. Oracle, ORCL. So if you look at, like, an Oracle chart, right? Oracle is maybe not the best example because this is not exactly doing what I was hoping it would do. But if you look at, like, an Oracle chart or just whatever, you can normally see, like, fairly sizable gaps from earnings. Like, that was probably an earnings call. It's probably the one that we were long on. And then you've got, like, that may have been an earnings call. Maybe. That's kind of a tiny gap. Probably not. But this first one was an earnings call, right? So normally, when earnings hit, it's a pretty big gap on the chart. Like, normally you get an explosive move, like it sticks out like a sore thumb. Like, okay, that was earnings, like, and it's really, really easy to see. When we look at the NVIDIA chart, I don't see anything. Like, nothing looks out of the ordinary at all. It all just kind of blends in like normal. I mean, there's like a tiny little gap right here, but I don't even think that's it. Is that it? That's not even it, is it? No, that was before my birthday, before NVIDIA earnings. And so, no, NVIDIA earnings were like around here. So it was very much a non-event and really nothing going on for NVIDIA earnings. But of course, I tweeted about my play. And so my play, of course, was if you can't beat them, you got to join them. Like, if you're not playing NVIDIA to the upside, like, I cannot help you. I really can't help you at all. And so I'm pretty sure you would have lost money from just the premium decay. But, yeah, there's nothing really to write home about for NVIDIA. But let's look at our positions here. This shouldn't take too long because they only have 5, so that's kind of nice. And then we'll see. So who has earnings tonight? Let me see. I mean, should we really do an earnings trade tonight? Oh, wait, no. I know what we're doing today. Oh, man, I'm ready. I'm 100% ready. So if you guys follow me on Twitter, I'm at JSchultzF3 if you want to check me out on the old Twitter feed. Guys, I'm rested. I'm ready to go. I don't know that there's an easier trade on the board. I don't know what more I can do for you guys. Because you got all these cats out there talking about selling options for income. Nah, man, that's 2000 and late. We're going to short Micron for income. Right? We're going to get short Micron for a little paycheck here on the show today. So stay tuned because we're going to do that right here together. And you guys can probably see the stack of cash get set ablaze on air in real time as we do that. And so, but who has earnings tonight? Oh yeah, I don't care about that. I want to do the Micron thing. So, but let's talk about our positions. Let me see if I can open them all up. Yeah, I can. I can fit them all on the screen. Yeah, we're a little bit off the rails, but it's okay. And so, all right, let's see here. So let's go kind of top down. So MES. So we have on our short call at the 6,800 strike, and it's amazing. We still have this on. Like, I mean, you can even say, look at the P&L open, bros, man. Is that even right? That can't even be right. Let's do some quick. Yeah, I guess that's right. Yeah, let me think. Yeah, that's got to be right. I mean, we're down about 500 points on the trade. It's $5 a point as your multiplier on MES. And so, yeah, that's about $2,500 on the position. Now, again, P&L open doesn't really matter. And you might be asking, well, Jim, how is that even possible? How can it not matter? Oh, I mean, I guess it does matter from the standpoint of losing $2,500. But for, which you might be naturally asking a very, very realistic and logical follow-up question. Jim, does anything else matter? Like, how can that not be the most important thing? My point is, when you manage winners, when you sell premium or not selling, whatever you want to do, if you're managing winners, when something is green to any, appreciable amount, any amount of economic significance, then you're going to take it off, right? You're going to take off. So it's not even going to show up. You have no opportunity essentially to build up any type of P&L open reserves to battle against the trades that don't work. So if you're in a framework, some type of environment where you're managing winners but giving the losers duration, naturally, you're going to have P&L opens that look similar to mine. Now, they might not be as impressive as mine, but that sounds like that might be your own problem that you need to work out on your end. But when it comes to red, you're probably thinking, nah, Jim, I'm good, man. I'm actually set. But when it comes to red P&L opens, it makes sense. It makes sense that we would have some red on the P&L open. Maybe not this red. That might be a little bit better if it was not quite this hex code of red. But to be red makes sense. But again, I mean, you got to know what you sign up for, man. I mean, I said this before vacation. I was like, hey, I'm going into vacation, short the market. I'm going into vacation. We're going to short SP 500. We're going to short NASDAQ. Now, the NASDAQ situation is a little bit different because we had the ratio spread on. We still have it on. We might be able to take it off now for a pretty decent profit, I think. In fact, we can actually. We can get a couple hundred points off of it almost, which is really, really nice. But, that's what you're signing up for. Like, if you're going to go in with a pretty deep in the money call in either, and we had a pretty deep in the money call in both, you're pretty static short the market. And if you're wrong and the market rips, like, you're going to get your face tore off. Like, that's just kind of the way that it goes. Now, thankfully, here, we're pretty small with our position sizing. Again, position sizing is paramount. Like, size is absolutely king when it comes to this. Are you small enough to take these directional shots and then stew in the filth if you want to stew in the filth? And again, you can cut your losers early. You can, have some kind of area where you want to get out. You can do it however you best see fit, however you want to do it. But when it comes to taking a directional shot, it's very binary in nature from the standpoint of, yes, there's a little bit of extrinsic to kind of soften the edges. There's a little bit of this, that, the other thing. But if I'm taking a shot directionally and I'm wrong, there's only so much you can do to kind of wriggle your way out of that guy. So anyway, for MES, we're getting crushed, as you can see right there. And so we minimize that guy. For MNQ, it's a little bit of a different discussion because we are still getting crushed. But but there is an element to this that's actually working. And so I think this may have been, was this a Danish Dynamite trade, I think? Man, I think I remember that, man. I'm telling you guys, man, I've been hammering my blueberries. Hammering the blueberries. I mean, I'm getting them from the store. I'm getting them from the farm. I got the frozen. I got the fresh. I mean, we're doing it all across the board. And so this was a Danish Dynamite trade, if I'm not mistaken. We do this ratio spread in MNQ. And you can see we put it on for 200 points. And right now it's only marking at 30 points. And I'm glad I kept this on because I remember before we left, I think it was marking at like 150 or something. And I was like, well, let's just take it off. But I'm like, no, let's leave it on to maybe, offer up a little bit of a, strategic hedge against all the short delta that we do have from MES and MNQ. And it worked out pretty well. I think we were able to kind of squeeze another 100 points out of it, which just kind of helps to soften the blow on the MNQ situation. So we're going to close out of the ratio spread portion of this, and then I'm going to leave on my two short calls. And I mean, what could possibly go wrong? Like, what could possibly go wrong? We left for a week and a half, and we're still standing. I mean, we're only on one leg at this point, and we've lost a couple of toes in the process, but we're still here. And so, yeah, we'll just leave these guys on for a couple extra days and just kind of see what's what. So let's go into the ratio spread, though. And it looks like, and the markets are a little bit wide in here, but hopefully they're not too bad. I don't love MNQ. I've talked about this many times before on the show, but it's very difficult to find a more craptacular product to trade when it comes to liquidity and it comes to wanting to get good fills and wanting to get in and out easily and quickly and those kinds of things. MNQ options are just not, that's just not it, man. That is just not it. And so we'll see if we can get filled around the mid price here, but I don't know, man. 30, yeah, no takers at 30.75. Let's try. I'm not even gonna nickel and dime it. I'm gonna quarter this guy. Let's go 32. Let's go 32 and a quarter. They got to give it to me. You would think, right? We got filled. How about that? Okay, so we're out of the ratio spread in MNQ. That's over and done with. We still have on the short call in MES. We still have on the short call in MNQ. And so stay tuned to see how those turn out. And look at, see, this actually makes my point perfectly. So, okay, so let's hang on this for just an extra second. So look at what just happened to the P&L Open, right? It just went from minus 700 something to minus 1100. Now, did I just lose another $400 in the last 18 seconds? I actually did not. Now, I have before, and it will happen again. But in these particular 18 seconds, I did not lose $400. But the P&L Open, if you were looking at that, it would make it seem like, wow, Jim, that was pretty quick. Like I blinked and that stack of cash was gone. Like gone. Well, in this case, it's really just kind of how the number is presented. And this kind of makes my point in that it's not really a great storyteller when it comes to what you're trying to do overall, what you're even doing in that specific position, because now it's just kind of pointing towards whatever's left. Like with whatever's left, I'm down $1,100, whatever. That's fine. That's 100% fine. But again, that's not even the whole trade package. That doesn't even account for the ratio spread that we just took off. That basically made us what? Almost $400, like 360 or 370 or something like that. So again, for the P&L Open bros out there, just have a little grace on your boy. Because it's not exactly a full picture of what's going on. But anyway, I digress. So that's MNQ, that's MES. So for Netflix, we have on an in the money put. So for Netflix, we sold this put when it was slightly in the money. It is still slightly in the money with Netflix now at 87.5. And so you can see we're actually up a little bit on the trade. Which this, again, is just the power of premium, man. Like, I'm not going to take it off now. We'll be at 21 days tomorrow because Juneteenth, I think, is the expiration day in June. And so we have that Friday holiday. So the expiration day is going to get moved up to that Thursday. So that's going to feel a little bit weird, of course. But I think that's the reason why tomorrow will be 21 days. In fact, I'm pretty sure that is the reason why, since I did check that about 10 minutes before the show began. But if we look at the P&L on this position, we are up on the trade. Which, again, the power of premium, because we sold an in-the-money option in Netflix. We've been wrong directionally on this trade the entire time. Now, thankfully, we haven't been that wrong. It hasn't been like an MES type of wrong or like an MNQ type of wrong. We've only been like a little bit type of wrong. And we've allowed time to just tick by and the premium to come off the trade and extrinsic value to bleed and all the things that we try to do as premium sellers. And that's all worked to our advantage. So now, if we get even the tiniest little uptick in Netflix, we should really be in a decent spot. Like, we should really be in an okay position to maybe peel this guy off for maybe $1.25, like whatever. Again, we'll be at 21 days tomorrow, so we'll go ahead and revisit this at that time. But for now, we do nothing. Starbucks, man, look at Starbucks. It's too funny, man. Look at Starbucks down to 101. Now, when we rolled this call up from the 100 to the 105, it was around 105. And we had a big, long discussion about, should we stay at the 100 strike or should we roll it up to the 105? Now, I'm glad we rolled it up to the 105 for teaching purposes and understanding purposes. And I'm not saying if I wasn't teaching or wasn't going for understanding, I wouldn't have done the exact same thing, because I very well likely would have done the exact same thing. But when it came to doing something different that we haven't really had a chance to do over the life of this project, that was good, because really most of our time in Starbucks has been selling premium, and then it just kind of withers away. It just kind of goes off into nothingness, and then we buy it back for pennies on the dollar. And then it's like, wow, that's amazing. It helps out the basis, whatever. And that's a whole nother side to these investment style covered calls. That's obviously incredibly important, because if you are selling calls against longer term holdings, that's sort of what you want. I mean, obviously, if the stock goes up, that's good too. But if the stock just kind of, meanders around, which is what Starbucks has largely done for the last year to year and a half, all those calls just end up expiring worthless. And it's amazing to help to boost your overall returns on the trade. We've done all that. We've been there many, many times before. But the cool thing here was we had Starbucks rally, so we had different decisions to make. If I bring up, let me bring up the Allison chains. We haven't tuned into a little rooster. It's been a while. All right, kind of toss on a little man in the box. When did we make this roll for Starbucks? It was a few weeks ago, I think, right? Yeah. So we did it on May 4th. And again, hindsight's 20/20, right? Obviously, looking through the rearview mirror is doing quite well for itself. I wish we would have just stayed at the 100 strike because I paid $1.80. I mean, look, you can see it there in the chains. I paid $1.80 for this roll. And right now, I'd be much better off if I just had the 100 strike. Because if I would have rolled out at the 100 strike, I wouldn't have paid anything. I would have picked up a premium for doing that. And I would have basically been holding an at the money covered call, which is a better scenario than having paid for the roll up of the strike from 100 to 105. And now I have an out of the money call. Which again, this is not like the end of the world. This is not like the worst scenario, of course, because if the call does expire worthless or close to worthless and we buy it back and whatever, and then we just kind of repeat the process and do this guy kind of, just over and over and over again. But we did this guy on May 4th. So if you are brand new to the show, welcome aboard. I'm glad that you're here. I hope that you stick around, whether it's my show or the other shows on the network. Like there's so much amazing programming to choose from. If you're an active trader or you want to be an active trader, man, you are in the right spot. If you are a passive investor and you're kind of wanting to kind of feel it out with like the option space, maybe the future space, whatever, you're like, hey, maybe sell some premium against my shares, what have you, then this project that we've had on for Starbucks for the last year and a half, we started this in December of 2024. This is a really good little case study in kind of selling premium against a longer term holding and all the different things that you're going to have to deal with over the life of that position. And so, I think it's been a worthwhile endeavor. So May 4th was the last one that we did. May the 4th be with you again, just in case I didn't mention that the first time, although I'm quite certain I did. And so Starbucks is over and done with in terms of the commentary. And then Snapchat, of course. I mean, this is it, man. This is our future, right? And I don't mean like our future, like just my future. Like this is all of our future. Right? Like once the robots take over, all that's going to be left is Snapchat. That's it. Facebook will be gone, right? Instagram will be gone. Twitter will be gone. I mean, Twitter's already gone, right? I mean, YouTube will probably be gone. It'll just all be flowing through Snapchat. It's very similar to Demolition Man when everything ends up being Taco Bell, right? You've got Sylvester Stallone and Wesley Snipes, and you can only eat at Taco Bell. That's it. Like they had the fast food wars, and Burger King went goodbye. McDonald's went bye-bye. And all you've got left is Taco Bell. Same thing here. We're putting all our chips in the middle on Snapchat, surviving the AI apocalypse and everything flowing through Snapchat. And so, but right now it's down about 20 cents. So from where we bought it. And so we'll have to sit tight and see what's going on. All right, let's do it. I'm ready. Let's go to Micron. MU. Man, they're out there still doing it. Up another 20 points today. All right, let's go. And I see you guys, man. I see you guys in the chat putting in work. Sergio is here. Ash Finn is here. Man, Daniel Perkins, Flub 21. Man, I appreciate you guys. Man, look at Shawshank is here. It's awesome stuff. All right, Micron. Okay, guys, listen. You can do that. Look, you got to blaze your own trail, man. You got to blaze your own trail. But me, when I'm looking at Micron, and I'm looking at Micron from a short standpoint, and I'm thinking about trying to make money, this is very similar to walking over into the corner and picking up a pile of cash. Like getting short Micron here is very similar to, wow, is that $100 on the ground? I think I'll pick it up. And so when I look at this scenario, I'm about 28 to 29% sure that being short Micron is the play. So let's go in here. Earnings on June 24th. Oh, that's going to be fun. Let's go ahead and I wouldn't normally, in fact, you know what? Here's what we're going to do because I don't want to mess with earnings. I mean, I don't have I've got a little bit of like a one death wish, but I don't have like a double death wish. And so we're going to go into the 22-day cycle. Oh, they've only got $10 wide strikes. They're making your boy get after it. On the first day back, I can't even do that, man. Let me minimize this up. So all of a sudden, the knickers got a little twisted up there when it came time to actually put the trade on. Because everybody's a hero on the ground, right? But when that roller coaster starts ticking up, now we see what's what. So let's go into the... July, $10 wide. Yeah, I can't mess with that. I mean, I could, but it doesn't seem smart. 9 days. Here we go. Okay, here's what we're going to do. We're going to have a little fun, right? So I would almost never do this. Almost never do this. And by almost never, I mean, I'll probably do it again by the end of the week. But Mike wanted at 9:15. Here's what we're going to do. 9-day cycle. We're just going to take a little shot. Let's take a little shot to the downside. Nothing crazy. Nothing crazy at all. But let's sell an out of the money call spread. Let's sell an at the money call spread. Right? This is the beauty of defined risk, right? You can do whatever you want. And no matter how wrong you might be, which I have a feeling we might be very wrong on this. you're only going to lose your maximum loss. As long as you don't go in and fiddle around with the strikes and start janking around with like the width and stuff like that, like whatever the maximum loss is, that's your worst case scenario. So if we sell this at the money call spread in Micron with 9 days to go, and the only reason I'm choosing 9 days is because they have earnings in a couple of weeks, and the other cycles all had $10 wide strikes. So I would not be able to, this is a super small position for my account. This is less than 1% of the account that's at risk. And so we can take a shot. We can have a little fun. I mean, the content's not going to write itself. The content's not going to create itself. And so this is going to give me at least a day and a half worth of commentary. And so when I look at the maximum loss here, I'm basically risking one to make one, risking a little bit more than one to make a little bit less than one. But my overall risk on the trade is under $300. And so it looks like I'm going to be able to sell this for about $2 or maybe $2.20 or so. And so my risk on the trade is going to be the width of the spread of $5 less whatever I sell it for. So if I sell it for $2.20, which is what it's marking for right now, then I'll have $2.80 of risk in the trade. And again, that's $2.80 per share. Every one lot is 100 shares. So you multiply it by 100 to get to the total loss potential or gain potential for the overall contract. So I'm kind of thinking we just sell this at the money call spread. And then, we just round up the boys and head to Bonefish tonight. I mean, that seems like the most logical outcome here, right? Again, you can use whatever analysis you want, technical, fundamental, quant stuff. You can read the tea leaves, whatever. I'm just looking at the corner and I see cash. And I got a hankering for some, petite fillets at Bonefish tonight. So I kind of think we go ahead and we do this. So let's go in here. And let's see, 230. Sure, let's give it a shot. All right, no takers at 230. Let's see if I can do. Looks like the mid price is 219. Should be fine. All right, we got filled at 219. So there you go. There you go. All right, so there is our short Micron trade. What could possibly go wrong? I mean, I can't think of anything. Maybe you can. We're already down $11 on the trade, so that's about right. But let's go ahead. Let me see. Man, let me see where you guys are at. Man, let's go, you guys. Man, I appreciate you guys so much. Let me see here. Where are we at? Let me see if I can surprise and delight somebody in the middle. I see Ryan LP at the end saying definitely free money. My man, that's what I'm saying. As long as we make sure that we define free correctly. Free in this context means it's going to be rather frightening. So this trade, even given its defined risk nature, good thing we're stacked up on ghosts because the sleep could be, kind of slim pickings here in the future. But thank you there, Ryan LP. I appreciate you. And let's see. Who else is out there? Let me see if I can find somebody else. Oh, here we go. Flub21. What's going on there, Flub21? What's going on? So Flub21 says, hey, Dr. Jim, I have a question for you. What is up? If a strangle is closer to 21 days to go, but the price is still between the strikes, but the position is in the red, do you wait or roll to the next cycle? That's very interesting. So I'm going to say this is a very good question. Thank you, Flub, for being a part of the show. I mean, you're here pretty much on a regular basis. You might be here every day. I'm not sure. But I know that you've been in the chat a few times, so thank you so much there, my friend. Couple of things. So number one, if you put a trade on around 45 and it's still between your strikes and you get to 21, there's going to be very, very, very few situations like that one where you are still red on the trade. I mean, you'd have to be like really close to one of your strikes, or volatility would have had to have done something really crazy for that to be the case. But you can, of course, be in a lot of situations where you put the trade on at like 30 or 33, you get to 21 and you're still red. Like you get to 21 or whatever and you're not green yet. So that can certainly happen. So I would surmise that that's the situation that you're in right now in terms of how you find yourself in this situation. So what do you do? In this situation, I actually think it's more or less a slam dunk. And by slam dunk, I mean like 8 to 10 foot jump shot. I think you roll out and you don't think about it. I think you roll to the next cycle. You don't need to change your strikes because you're already between your strikes. You don't really need to rebalance or recenter. You can if you want to. I personally don't like to because I kind of like to play the natural back and forth of the market. Like when the market rises, I like the fact that it's making me short because I want to take the contrarian side of that. I want to play for the back and forth and kind of for this kind of, this ebb and flow, this natural ebb and flow of the marketplace. That's just how I see it. You may see it differently. Many other people definitely see it differently. but I like kind of leaning into the directional bias that the market just kind of gives me. And so I typically don't like to recenter my strikes, but you certainly can if you want to be more directionally neutral and lean more on non-directional elements like extrinsic value. But I would definitely roll out. There's no reason to stay in the trade any longer. Now, truth be told, is there a big difference between 21 days and 18 days? I don't think so. Is there a big difference between 21 and 16? I don't think so. Not me personally. Is there a big difference between 21 and 14? Not really. Not in my opinion. So anyway, anything between 14 and 21, I think is fine. So if you want to take a little bit of a shot, hang out for a few extra days, I think you're fine personally. But there is something to be said for being consistent and kind of, continuing with, 21 days, and just kind of getting in that kind of routine. I think it's worth something for sure. And so, hopefully that helps you there, Flub. I appreciate you. Shawshank. Dell has earnings tomorrow? No, we're not touching that. What is Dell doing these days? 309. Wowzers, man. Look at this thing. Wow. Look at that thing. Where did we get out? Hold on. Where's my activity page for Dell? When did we get out? It was April 13th. Look at that, man. Look at that. Man, I had the P&L Open Bros. They were sending me emails. They were sending me DMs. A couple of them stopped by the house. And they're nice guys. They're all big and tough on the internet, but they're nice guys, actually, when you get to know them. But man, Dell, that's some crazy, crazy stuff. And so we bought it back for $40, April 13th. So hold on. Let's go to the chart here. Let's see if we can't figure out where April 13th is. Yeah, look at that. Wow, man, look at that. So this is crazy. So hold on. So we got out right there. Right? So by the way, this is why. Being short calls, naked calls. I'm not talking about call spread and Micron, whatever. Being short naked calls, individual stocks. Man, you better have some ghost on hand. You're going to need all of it. You're going to need the ghost. You're going to need the LMNT. You're going to need the cold brew. You're going to need some ashwagandha. You need all of it. On stock, in stock, even, at the ready. Because you're going to call on every last piece of that, I can assure you. But if you look at this chart, what's interesting about this is, so April 13th, what I like to do from time to time, when I don't have anything better to do, is sometimes I'll just scroll back. So hang on, let me do a 2-year chart. I'll show you what I mean here. So April 13th. So that means when we got out of the trade, this is what we saw. That's what we saw. Is that that's April? That's basically what we saw, right? So this is what we saw. Obviously, lots of pain for the shorts. I mean, we endured it. You guys just saw it on the activity page. It was brutal. Didn't really feel like it was going to get any worse, right? Obviously, didn't really feel like it was going to get any worse at all. But with individual stocks, the likelihood that it is going to get worse is much higher than if you do have a short call in the indexes. And again, we've taken a ton of pain in MES and MNQ. You guys are seeing it happen in real time, but still notice it's very manageable, right? We are able to manage it. We are able to sell premium against it. Now, I'm not really doing that with MES because I want it to be more static short. But look at what we did with MNQ. We did the ratio spread. What did that do? It gave us a bit more breathing room. It gave us a couple hundred more points to play with, which allows us to extend the duration of the trade if we want to. And you don't have to, of course. It's up to you what you do. You have to blaze your own trail and make your decisions, right? But when it comes to indexes, the reality is a move in Dell from what is this? 60 from April of 25 up to 200 April of 26. And then boom, look what happened after that. That's crazy stuff, man. Up to 309 by now we're May of 26. I mean, that's a pretty wild move. The indexes are just not going to do that. Not in a 6-week span. I mean, it's going to take the index, 6 years to double or whatever. Now, obviously not in the current market because this time is different, blah, 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 blah. I'll see you guys at NASDAQ 20,000. But yeah. So Dell, I'm not going to touch that, man. Definitely not going to touch that. But let me see where you guys are at. I appreciate you guys. All right, so we have surprised and delighted a couple folks, which is cool. And we're almost done with the show, so let's get back to the first comment, which is about right, I guess. That's about right. So I guess we're not as rusty as I thought. The humor, extremely below average, but we keep hitting you with it. We're obviously running the Walmart business model. It's not quality, it's volume, right? So we're certainly doing that. And yeah, let's go back to the beginning here. Where are we at? So Sam L's in the house. What's going on there, Sam L, my man? Welcome back, Doc. Hope the vacation was great and the family survived the full-time dad portfolio management with 3 kids. Now back to the charts, the bloops. The bloops, yes. No bloop analysis today, but maybe tomorrow. Ghost drinks and explaining why it's all made up. I can't explain why it's all made up, but it is 100% all made up. And so thank you there, Sam L. I appreciate you, man. It feels good to be back. Orgdenu. Hello, Dr. Jim. Welcome back. Nothing says the doc is back like a good earnings trade. That's true. And by good, I hope you mean bad. CRM has earnings tonight. Do you have any thoughts? I'm going to pass just because we did the Micron thing, and I want to get to a few more questions and comments. Just kind of getting my feet back wet. But thank you there, Orgdenu. I'm going to pass on Salesforce.com. I mean, obviously, if I had to play it, I'd be bearish. But that's just common sense. And so N1C is in the house. What's going on there, N1C? Wolf is here. Doc, welcome back. Are we really selling MU calls? We had to. We had to do it. Now, again, couldn't do it naked. I'd love to do it naked. But, I mean, the buying power there, that's a little more than I can do, right? Oh, wait, that's shares. Oh, wait. I was like, 60 grand. I was like, I expected it to be a lot, but not that much. If I sold a call in the July cycle, I mean, it's going to be 20 grand, I would imagine. If I sold the at-the-money call in the July cycle, it's probably going to be about 20 grand. 60 grand. Wow, it's the same? What? That doesn't even make any sense. I mean, I don't have a problem with the buying power being ratcheted up or what have you. But that's pretty crazy. I need to think about that. So a $900 stock. So if I buy, yeah, that's really, really crazy. I don't understand that. If I short just straight shares, it's actually less expensive than selling a call. That's crazy. That kind of doesn't make any sense to me because there's obviously more risk in selling shares than selling a call. Now, I mean, I guess, well, maybe actually, I take that back because I'm thinking back to like GameStop of 2021. In a world where volatility stays kind of under a lid, that's true. But in a world where volatility is not staying under a lid, which I mean, Micron very much might be fitting that bill right now. You know, if you sell a call naked and the stock starts running and it doubles in a week or whatever, and volatility runs with it, you could be in a scenario where you're actually losing a lot more than you would have lost if you just sold the shares. And so now it kind of makes sense to me that the buying power would be so much greater because Micron is in play right now. And so, but yeah, couldn't sell a naked call. That's some crazy stuff out there. But I know some of you guys are out there doing it, and man, my thoughts go out to you guys. You guys are really getting after it. And so E-Media is in the house. What's going on? The algo missed you. I'm not sure the algo knew I was gone, but I appreciate you there, E-Media. Thank you very much. Miko's in the house, says he loves Vecchio. I do too. His Knicks are going to probably get swept though. And so I'm really sorry in a not really kind of way that's going to happen. But yeah, again, I don't make the rules. That's just the way it has to be. N1C, the chat bots are loaded and in. I appreciate you. Samuel, the algo just cross-checked with iPod Touch. He's cornered the banana natty market while you're busy shorting Micron. Yeah, you got to do something, man. He's got to do something to kind of get by here. I mean, iPod Touch, he's waiting in the wings, man. He is Bette Midler, just kind of hanging out there. And oh wait, no, she's the wind beneath our wings. She's not waiting in the wings. And so yeah, the analogies are not very good, but they're even worse when I mix them up, and they don't make any sense. And so Mikos is in the house. Time to get long Walmart. We're buying Walmart now. Man, I don't know about all that. They got earnings tomorrow. Oh, that's SMT. Hold on. Hold on. What's going on here? There we go. Walmart. They got earnings tomorrow? They might. No, they don't. Okay. Walmart at 118 though? Yeah, I mean, I'm going to pass now just so I can get to a few more comments. But, I mean, if you're asking me between Walmart and Target, yeah, I mean, that's a pretty easy choice. You got to be long Target, short Walmart. But just again, from a common sense standpoint. But good luck to you there, Mikos. N1C, welcome back, Doctor. Appreciate you. Or Daniel, yay, Doc, we did it. Celebrating NASDAQ 30,000 with you. Banana Natties all the way, 100%, my friend. 100% Banana Natties for all. NASDAQ 30,000. We need the hats. We need the shirts. We need the bumper stickers. We need the keychains. Got to have the keychains. And we did it, man. Jared Kramer is here. The good Doc is finally back for the algo. Man, look at you. I appreciate you. Bulls are making it rain banana natties today. That's pretty funny. Which if you have a banana natty on hand, it's probably best you just make it rain rather than consume the product. I think that would likely be best for everybody. But let's see. Sergio's in the house. What's up there, Sergio? Brian Racketin, what is up? Welcome back, Dr. Jim. Heading to Great Wolf Lodge in June. You are. Look at you, man. I mean, I think we're gonna try to go. It'll be like in the fall, though. I think like maybe August or September. It's not gonna be anytime soon. But I think we're gonna try to make our triumphant return there in a few months. But let's see. E-Media says, "Hey, Dr. J, Marvell, HPQ, Snow, CRM, BRZE, man, BBY. Is that Best Buy? That's Best Buy, right? Yeah. Wow. Best Buy is tomorrow. Best Buy owes me a lot of money, like an enormous amount of money. They're tomorrow morning. Man, I'll do a little something. Just real quick, though. We'll do a 2-day cycle real fast. Keep it really simple. I'm going to buy a 62.66 long call spread. Because, again, how can you not be bullish on Best Buy? The Geek Squad? Great idea. Amazing idea. I mean, I'm not sure that they're still doing it. But in the event that they might be, Geek Squad, great idea. So let's go ahead and let's buy a little call spread for Best Buy for tomorrow. So we're long Best Buy, we're short Micron. I mean, is there a cleaner Paris trade on the board? I can't find one. But let's see here. Can't get filled. $1.94? All right, we got filled. $1.94. There you go. Okay, so we're in Best Buy. And man, I see you guys. Branch is in the house. Brian Rackerton, Bogus Family's here. Daniel Perkins is here. We're just up there, Daniel Perkins. I appreciate you, my friend. You guys always have me cracking up on Twitter, man. I love the exchanges. Emmett Morrison is here, man. Look at Emmett Morrison. I'm just scanning now because I got to run here in about 30 seconds. But Dr. J, long time no see. Been a minute since I've been able to catch the show, man. Thank you for being here, my friend. I appreciate you so very much. Daniel Perkins told me you were short at Micron too. And so now I'm in the bathtub of filth with you. So make some room, my friend, because we're going to be in there for a while together, I think. So Saturday Night is here. N1C is here. RZX is laughing at the risk-free nature. But again, just look at the tape, man. I know it's down today, but it's early. Enough computer restarts. We'll finish screen. Don't worry about it. And so, but I see you guys here, and I appreciate you guys. And man, I got to go. It feels good to be back, though. And we'll be back tomorrow. So definitely come back to the show tomorrow. But guys, don't forget, if I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Hello everyone, happy Wednesday, Tim Knight here. Well, for once we've got a little bit of red on the NASDAQ. It's usually lifetime highs every day, and we did get lifetime highs an hour before the open, but it slumped somewhat. I mean, let's not get excited about this. It's down 0.1%, but it's not blasting higher across the board. At the moment, the ES and the YM are both a little green, and the NQ and the RTY are both a little bit red. The only decent dipper is Bitcoin, which continues to be my biggest short. So that's doing all right. It's a quiet week. We are well past earnings season, and there's hardly any economic data. Tomorrow morning is the only tidbit of economic data. The core PCE is coming out, which is, as they always say, the Fed's favorite inflation indicator, and the preliminary quarterly GDP is going to come out too. So those will both be out an hour before the open, and maybe those will wiggle things around some. But generally speaking, the geopolitical mayhem from 2 months ago is way in the rearview mirror, and it's just all about AI. So like I keep saying, chips and ships, that's the big push. And in 16 days, if all goes according to plan, SpaceX will come public as the largest IPO in history, and everyone will be talking about it, everyone will be watching it. That'll be a very huge event. Let's jump into the charts and see what's going on this relatively mellow day of ours. We start with the IWM, the small caps, which is down a tiny bit, and it is at, on an intraday basis, lifetime highs, but it's just kind of hanging out there. We have had 2 challenges to this gap, each of which was successfully tested. The gap was respected. And since the last test, it's been pretty much pushing the lifetime highs on a daily basis. We are way above the medium-term trend line, pretty lofty, but fundamentals don't seem to be holding people back. Like the SpaceX IPO is slated to come out with something like a 100 times sales ratio, which is like 4 or 5 times bigger than NVIDIA. So yeah, fundamentals for the moment really don't matter. It's just feeding on itself. The EFA, which is my only meaningful equity ETF position, is actually managing to be down about 1/3%. It sealed up its gap yesterday, and we've got a little red bar yesterday, a little red bar today, just kind of easing back away from that lifetime high, which was actually set way back here on Feb 27, just before the war started. And incredibly, that high is held intact. We got close to it yesterday, but that high has managed to stick around, unlike all the US indexes, which have basically been making record highs constantly. The cubes, as I indicated, are down just a touch. They're still complying with this very sharp trend line, this very sharply ascending trend line, which has been going ever since March 31. March 31 is the anchor point. That was the bottom. Basically opened weak that day, and it has never looked back. So it's zipping higher. We got a little teeny tiny bit of weakness about a week ago, but it didn't really change anything. It just we had this incredible fake out here. I've been trading for almost half a century, and I can't remember any instance that looks like this before. It was a breakdown and clean as can be, and then explosive move higher. AI, and semiconductors galore. I mean, you may have seen that the newest entrant into the $1 trillion club is a company I've never heard of in my life. I think it's called SK Hynix or something like that. It's a South Korean semiconductor firm. But there we have it. It wasn't that many years ago. There's no such thing as a $1 trillion company. And now they're companies that, again, I do this for a living. I've never heard of these people in my life. They are now in the $1 trillion club because semiconductors have gone up hundreds of percent in a matter of weeks. It is a white hot sector now. Speaking of, here's SOXS, which is the leveraged bearish ETF against semiconductors. You can see the pretty clear path on this one. The last just morsel of strength was early last week, but by and large, this thing does nothing but go down. It opened at a lifetime low today and has been pushing back, and amazingly, it's actually up right now, which is very rare, almost 5%, because semiconductors are finally seeing a bit of selling. It's no big deal, so instead of being up 700%, they're up 690%. It's not any sea change. But, for example, we look at AMD. This is down about 1.5%, lifetime high at the open today. And it could fall, I would say, as low as the price gap there. That would be pretty extraordinary. I mean, that would be considered a crash these days, just to ease back to where it was a few weeks ago. But that's the gap that would be beckoning it in case, for whatever reason, things really sell off. The really interesting one I find is the king of the kings here, NVIDIA. It's very odd to me because until this morning, semiconductors had not a downtick in sight, but NVIDIA stinks. And even though it's the biggest company on the planet, the biggest component of SMH, its demise seems to be shrugged off because the strength elsewhere is so tremendous. There was the lifetime high there, but weirdly, ever since their earnings came out, which were sensational, people have been doing nothing but sell it. In fact, today it was selling off so hard it actually got back into that pattern that had been trapped inside for almost a year. Pretty poor performance for such a hot sector. We'll see if we can find support there or not, but basically, virtually every day, a little bit lower low, a little bit lower high, just kind of just eroding, unlike, say, Micron and stuff like that. There's AXTI, also down about 6.5%. Here again, we're only talking about shaving a little sliver off the soap bar because this has been just blasting hundreds and hundreds and hundreds of percent higher for eons. This is not the first time we've had a little bit of selling. There will come a day that it's not the pause that refreshes, but it's actually like the top is in. Lord only knows when that's going to be, because it's been, just like the dozenth time that we've had one of these little curls lower, which did not mean a thing except a little bit of a cheaper price for the moment. CIEN, Sienna, also down at 2.25%. Same idea, not quite as dramatic, but it too has gone up, literally about 1,000% since last April. Showing a little bit of weariness here. The fact that it's not lurching to a lifetime high is unusual. But just across the board, the whole semiconductor sector is at a minimum taking a little bit of a breather. As I said yesterday, one thing that's going to hold up the market tremendously are these mega IPOs, OpenAI, Anthropic, SpaceX. You're going to hear those three again and again and again. Once they're out of the way, that's going to change the atmosphere. And though I do not think this is going to happen, if SpaceX comes out and is in some form or fashion kind of a dud, people are going to freak out because every expectation is this thing's just going to be a monster that's going to just print money. We'll see. I'll be watching with tremendous interest a few Fridays from now, although I dare say that when the 12th comes around, it will probably be hours before the first trade hits. We may not get a first trade until an hour before the close on that day. So that'll be a cool one to watch. Speaking of Micron, here it is. This one's actually green today. And this is the kind of thing which has been keeping SMH propped up even with NVIDIA so weak. But Micron's up 3.2%, lifetime high. And it's got its own price gap there, which is the first level of support should anybody decide to take profits at some point in human history. CoreWeave, haven't talked about that in a while, but it's kind of an interesting critter because this is one of the big hyperscaling infrastructure stocks. It's had a topping pattern here, which led to some selling, another one here that led to some selling. We've got another one here. And more interesting than that to me is that these patterns have broadly been lower each time. So this is lower than this, and this is lower than this. So this is just slow degrade going on amongst with CoreWeave. But all of this will stay relatively propped up until the circumstance arrives, if it should ever arrive, that the AI mania breaks. So I keep talking about chips and ships. Let's talk about ships for a little bit. That is rocket ships, anything that smells anything like SpaceX. UFO is an ETF dedicated to this space. UFO was junk for a while. Look at this, 2021, 2022, 2023, it just failed completely. But then 2024, that was the bottom. And it kind of got its sea legs back, and it has been lurching with more and more gusto higher and higher. You can see if you can kind of see the angle of ascent, it's rather mild here, and sharper and sharper and sharper, and now it's like nearly vertical, like so, such that it's pretty much doubled in just the past month, all in anticipation of SpaceX. Obviously, this doesn't include SpaceX. This is all the other much smaller companies, like, for example, RKLB, Rocket Lab, up again, almost 4%. Lifetime high. By and large, these things are lifetime highs. Firefly Aerospace, FLY, which is down a little, but has a nice little pattern there coming off that base. But here again, you can see until SpaceX really got everyone's attention, rocket stocks were crummy. Here we see Fly just plunging from its IPO down from the 70s down to the teens, and it's just about recovered those losses. LUNR, which is Intuitive Machines, lifetime high yesterday. It actually lost a contract with NASA yesterday, which caused this reversal, but it seems to have almost shaken those NASA blues off completely as it's recaptured some of those losses. It's up almost 15% today. That's LUNR. And one I don't think I've mentioned before, Redwire, RDW. This one hammered out a nice base like so, and it's up today too, over 7%, and almost at a lifetime high. So yeah, that whole zone. A couple more. There's so many of these. Here's ASTS, which is AST Space Mobile, lifetime high on this one, up over 8%. And then there's Planet Labs PL, up almost 4%. I've got to tell you, I think they're starting to run out of ideas. They're scraping the bottom of the barrel because I was surprised to see Momentous, MNTS, as one of the top gainer yesterday, percentage-wise, about 106% gain just yesterday. It's up again today, about 20%. I'm not going to show you the whole chart, but this has been public for years. And if you look at this level here, we're bottoming out around $3 and change. Compared to its high, that wasn't half the high, it wasn't a quarter of the high, it wasn't a tenth of the high. It was, if I got my math right here, 1/100,000th of the price at its peak some years ago. In other words, you invest 100,000, you hang on, and then you have $1. And they reverse split it so many times. If you look at the whole chart, it was up at like $370,000, then went to $3. But people are so desperate for anything with a rocket attached to it that they've landed on this one now. And so it's exploded higher here. It's gone from 3 to like 21. It's up 7-fold in the past few weeks, just because it smells a little bit like SpaceX, and everything else is sort of overowned, I guess, but weird. Crude oil is down hard. We're into the 80s now. All this talk about $250 oil is gone. And it certainly seems the whole Iran thing is just in the history books at this point, based on how oil's behaving. And gold, as I've speculated, continues to stink. It's down over $50, and I imagine it will continue to burn off its price until at least, I'd say 4,000 is probably a pretty decent place where it starts to stabilize. As I've indicated, Bitcoin is moving the right direction as far as I'm concerned. It's broken below this level, which I pointed out yesterday. So far, so good. I'm just hanging on to it. This is my biggest short, and it's behaving itself. So yay. Strategy, MSTR, is likewise down, and not surprisingly, very similar shape to the other chart because it is basically a Bitcoin holding company, but it's down over 3.5%, whereas Bitcoin's down only about 1.25%. There are some earnings tonight. I don't have positions in any of these, but just to bang through them here, there's Synopsys, SNPS. There is Salesforce, CRM, and there's Marvell, MRVL, which is having a pretty monstrous reversal today. You can see lifetime high at the open, but a bearish engulfing pattern for today's trading. As far as bonds go, they're up a tiny bit. The ZB is up 0.17%, but it's still got a massive amount of overhead supply that I think should hold things back. As I've said, my biggest options position is TLT. I added to that yesterday and today. It held beautifully at the gap, very terrifying here, but it got right up to the gap and is weakening away from that. So hopefully that gap will stay put. And then I'm also long TBT, which likewise has respected its gap. So we shall see. And of course, tomorrow morning's economic news should help inform that. Okay, so I hope you're doing well. Thanks for coming by. I'll see you here tomorrow. Good night.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
First thing about tastytrade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
When you trade options at tastytrade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Jamal, we're back. We've come full circle. We started the day. We're here to end it. You're watching Last Call. This is Tasty Live. I'm your host, Chris Vecchio in New York. He's your co-host, Jamal Chandler in Chicago. He's back. Back and better than ever, Jamal. Just like the stock market here this afternoon, because did you survive the great semiconductor sell-off of 2026? Jamal,
it was scary.
It was very scary. It was very scary. You know, when we left each other at 11 a.m. Eastern 4.5 hours ago, the market was down 2 points. The S&P is up a whole 3.5. Whew. Barn burner.
I'm here for it. I mean, I think this is actually a good thing for the market. But you know what else changed big time? Remember we were talking about the Mag 7 earlier this morning? And we were talking about just kind of giving the lay of the land on all of them. And I'm pretty sure at the end I said, yeah, Meta just looks like nobody's interested in it at all. Well, I don't know what the hell happened, but like 2 hours ago, the stock completely took off.
Yes, it did. We can go to that hourly time frame here, Jamal, real quick, and then we'll go into around the horn here for the broader markets. But Meta did get that little bump here about 2 hours ago.
Crazy.
It loved these back-to-back headlines, or the three headlines that I saw that crossed the wires here. Meta launches Instagram, Facebook, and WhatsApp subscriptions with more to come, including AI plans, helping open new revenue.
No thanks.
Also, they laid off 1,400 Washington employees, and Meta CEO Mark Zuckerberg arrived in Seattle today for those layoffs on his $300 million yacht.
For real? Wow. Jeez. Can't make this stuff up.
Yeah, no, that probably. But, we have a market that's turned around here a little bit. The S&P 500's up by 2.25 points, 0.04%. The NASDAQ is still down on the day, down by 0.1%. The Dow Jones is still through 50K, up by 0.4%. And your Russell 2000 is off by not even a full point, so 0.03%. The meaningful move today comes in oil, Jamal, down nearly 5%, 89.35 right now as we continue to press towards a peace agreement with Iran. Seems like one may be coming into focus sooner or later. Hasn't translated into good news for gold or silver, which are both down by more than 1%. Silver actually down by more than 2% right now in today's session. Bonds have enjoyed a bit of the move higher, but it's flatlined here as the session has gone on. The daily candles aren't looking too hot. Lots of gains given up in both ZN and ZB. And your dollar is modestly stronger here. But it's the semiconductors that have turned the corner, which is where I think everyone's attention is these days. This morning, SMH at a high of 612. It fell down to a low of 584. It's now back to 594.71 here, Jamal. That is a nice little bounce off that 1 week moving average and the former all-time high we had here. You and I were looking to buy the dip thanks to some of those market measures, or rather, what's your assumption today in NVIDIA, in some of these semiconductor names? How are you feeling about buying this dip?
In NVIDIA, I mean, I feel pretty good about it, honestly. I ended up doing some calendar call spreads and is what I decided to go with. I went with long August versus short July, and I did 230, 240, and 250, so just $10 wide on each one of those. I mean, I feel decent about that. It's definitely been weaker when you look at some of the other names, and I'm not exactly sure what the catalyst is to make this thing go. Because again, I mean, they're all in the same space that most of these have been moving. You can argue the various nuances, but whatever. I'm a trader, man. I see something like this that is not participating, particularly right after earnings that were good, and I find a cheapish way, if you will, to try to get some exposure on. And again, going further out, I'm long August versus short the July. So we'll see how it plays out.
I mean, if you went into earnings with the expectation that it was going to be an inside move or lower, you're talking about what, 7% expected move on either side of the NVIDIA earnings when it first popped up around 220. I mean, we're still there. We still really haven't made that move outside of that expected range. Today, there's actually decent NVIDIA call volume here, or at least options volume here. 2.5 million NVIDIA calls with 932,000 puts traded thus far. Although our man behind the screen, Frank, notes that the calls were mostly sold. That's not what we've seen in the options flow today across the board for Meta, on the other hand, which has had this really nice afternoon. It has that big candle about, again, 2 hours ago here with whatever headline, Zuckerberg arriving in Seattle, doesn't matter. 875,000 calls traded today versus 246,000 puts. It looks like most of the calls have been purchases. People have been buying this market and pushing it higher. So among the Mag 7 stocks right now, you see 53.2 IVR here in Meta. You're looking at what, a 34.2 in Apple. We could go over to, does Netflix still count? 32.8. Is that still part of the Mag 7 these days? I don't know.
I don't even know.
It doesn't matter.
It should be retooled. I mean, you're talking about the bigger names in it. I mean, AVGO is one of the bigger names in the S&P 500, but it's not considered part of the Mag 7, considered part of the Mag 10, right? So it's kind of, I don't know. It's probably something that needs to be retooled. I'm glad it's something that we don't always just talk about. I mean, you remember a couple of years ago, all people could talk about was how much the Mag 7 dominated, and it's too much. And they sounded just like that when they said it. I'm just tired of hearing it.
Yeah, I could tell.
Because these things are just written so that these things are made up so they can get a million articles out of it. I mean, come on.
Say, you need another vacation already, Jamal. Outside of Netflix is not part of the Mag 7, obviously. You say Mag 10. I don't think that's a name that a lot of people have heard a lot here. The Mag 10 ETF is now here on the platform. And so that's sitting right near all-time highs. We can pull that up here too. So MAGS is for the Mag 7. MGTN is for the Mag 10. What's in the Mag 10? NVIDIA, Microsoft, Apple, Google, Amazon, Meta, Tesla, And then the 3 additions, so Mag 7 plus 3, AMD, Broadcom, and Palantir. And so clearly today, it's not Palantir helping drive this thing higher. Palantir is just really, really sluggish, as it were. But it's your names like your Broadcoms, your Meta, your NVIDIA that have been, they're stabilizing now. And I think you have to give credit to the fact that you have these, mega cap tech indexes that have surged without NVIDIA over the past week and a half.
No, it's true. Well, you're telling me something new. I didn't realize we finally got this on the platform. And again, this is a index product, right? Pretty sure. So again, cash settled. But yeah, NVIDIA just really hasn't gotten the love. You've seen some of the other names. Meta obviously hasn't until today. I think people were looking for any reason to try and get long it. It seems to be the case with most of these Mag 10, Mag 7 names. People are always looking for a reason to get long, and I think that's why they're always interesting. I mean, it doesn't take much news to get them to run.
Yeah, so from SIBO, these are cash settled, as you point out, because it's an index. The position settled directly at cash to cash at expiration without the need to deliver or receive unwanted shares. It's considered a European exercise. Options can only be exercised at expiration, which eliminates some of that early assignment risk. So Jamal, we have this market that's bouncing around, holding up. I think the broader takeaway, though, is that the volumes here today, absolutely pitiful. We just crossed 1 million contracts traded for the entire session. We are now post-Memorial Day here. Do we need to accept, and I think one of the more difficult things to accept and adjust is that we should not confuse the summer trading conditions with the market that lacks participation.
Exactly. And these are the days that you really need if you want the market to continue higher. You want a volume a couple of days in a row, particularly if you're looking at this pattern, which to me kind of looks like somewhat of a beginning of a cup with handle. I mean, you want something like this to happen. You want the volume to be drying up today, and probably was the day before too. You would hope for that, because that actually means that things are starting to quiet down some. Maybe we get a chance for possible few places where vol is really high, which really is a lot of those sort of ancillary tech names, if you will, the Irons of the world, the Rocket Labs, all those type of things. Vol probably calms down a little bit in some of those names as we get the market generally consolidating near highs. This is what you want. Otherwise, they jam the market higher, another 50, 100 plus points, 200 points in a 4 to 5 day period, and then everybody's talking about too far, too fast. So I would rather have days like this. I know they're not necessarily fun, but these are the days that these are the reasons why you have a few vol sales in your portfolio, a few names that you're selling vol in for days like this.
Yeah, you mentioned these two names. Rocket Lab had a really nice turnaround over the course of today's session, now up 4.32%. Iron is up 13.3% today.
I just took a position off in there.
They're a really interesting company, not just computing hardware, but also electrical infrastructure and data centers, mostly in the Commonwealth area, right? Australia, Canada, as it were. So, you have some of these meme kind of names, meme stock kind of names that are performing well. Iron kind of looks like Jamal, this is big rally, rounding bottom, maybe like a little bit of a cup and handle kind of situation going on here.
I know. I agree with you. I just felt I was trying to be prudent. I had this crab trade on. I was long. It was actually a trade we did with our chat one day on Options Trading Concepts Live. I was long the July 60 call versus being short 2 of the 80 calls in June, and one of the 100. So basically $20 wide butterfly. Just the upper part of the butterfly was in the near term, and it's working out well. It probably goes on to go higher, probably even eclipses all-time highs. I just don't feel the need to participate when I made 40% on it already. I'm good.
Did you happen to read Citadel's May 2026 research note that came out today?
No.
Okay. This is really interesting. Citadel points out that its gross retail cash volumes ranked in the 96th percentile in April versus all months since 2019, while May was tracking to become the most active month ever for retail participation, roughly 12% above January 2021 levels. They've also noted that the options activity was tracking towards a new high, with average daily contracts pacing about 60% above the historical monthly average. So on one hand, obviously, Jamal, we like retail activity. That's kind of what we do around here. On the other hand, there is something that raises an eyebrow when you have levels of retail activity, particularly tethered to the options market, that are exceeding what we refer to as the meme stock craze. How do you square those things away here if you want to stay a bull in this market, as you're getting some of those you're getting those signs out there? You don't know how this is going to end, but if you paid attention, you know how this all ends.
No, it's a good question, and we sort of addressed this on the morning show as well. I mean, we're talking about a lot of the tech names and the highs that they're at and the way that they're moving and the microns of the world, and how do you continue to chase things like this? And if people are using options, I hope they're being smart and using risk-defined plays to sort of try and chase these to highs, if you will. I mean, I'm sure that hearing a note like that makes it sound like everybody's buying calls and tech names, and maybe some people are, but
they are.
I think I'm sure they are. You and I both know that, but I just think hopefully people are being a little bit smarter about it, because again, these vols are high. Just use the implied vols as your guide. I mean, these vols are high, and so when they do fade, because again, it is a when, it's not an if. When they do fade, I mean, that upside is going to get absolutely smoked at some point in time, because the upside is jacked. We talked about skew a lot. Skew is definitely to the upside in a lot of these tech names, and so. But you know how it is, Chris. When you have environments like this and the market is moving and things are happening, people want to be on that trade, and I mean, nothing's going to change that until the market fades. That's the only thing that will.
You were mentioning something from the morning show today. I think people would appreciate if they went back and watched this morning's options jive about how we sort through a checklist and work through building up towards a trade, the various things that we do along the way, and looking for volatility is obviously a big component of that right now. I do see here that we're at the halfway mark here for last call, which is a good time as ever to bring up the commission rebate. We've got this nice little special going on right now. Yes, Jamal, I know it is true, despite what people are saying. Right now, new customers and existing customers who have never funded an account, they are eligible. We have double commission rebates for those who open and fund a Tasty Trade account. The refund is tied to how much you actually trade, so not how much you deposit. The more active you are, the more that you get back. If you've been thinking about making the switch, now's a great time to do so. There's no minimum deposit. Open an account, fund it however makes sense for you, and start trading. The rebate takes care of itself thereafter. Jamal, it's a pretty good deal. Unfortunately, doesn't work for folks like you and me. We've checked. We're not going to be eligible.
No, we're not. But that is a pretty good deal. Dos Toros.
There hasn't been a single one of these promotions that you or I have been eligible for. But hey, if you're a new customer, it's great for you.
It's true.
It's true. Move on. S&P 500 still up a healthy 2.5 points here, Jamal. We're kind of petering out into the close. Talk to me a little bit about the shape of the volatility curve here, because that is, of course, the North Star for us. I'm looking at a VIX that's sliding below 17 and now 16.43 here on the screen. And that is just a quick squint. That's going to be a low close for the VIX since the Iran war started, for what it's worth. Taking a look at the structure of the vol curve right now, Jamal, it looks healthy. SIBO has, the June 18th expiration trading at 1591. They have the March 19th, 2027 expiration at 2318. 6, 7, 8 points in contango. What's to be worried about?
Not a whole lot, it would seem. When I see the June contract versus July, I see basically it's $2 difference as we're sitting here right now. I mean, 1850 versus 2050, like I don't know the last time we've seen $2 difference in contango, that is. It's been a while that we've seen that going on with the VIX. So, there really isn't anything to worry about. I mean, this is telling you that all the major risks in the market are a non-factor. There's no, reason to fear about the war. Inflation is not really a problem. But we're seeing kind of otherwise, right? Like we've seen otherwise in some situations. I will say, as of last week, and I did kind of notice this because I had alerts out where I wanted to know what the 10-year yield was, whether it was 4.6 or below 4.5. And you've seen meaningful pullback in that 10-year yield recently. So all of a sudden, it's not as worried about inflation because mostly of the pullback in oil more recently. So I don't know, Chris. I mean, if oil is going to pull back and we're not going to have an inflation problem, then there really is no risks. The only real risk is when there's a pullback, if you will, and how strong the pullback is in the tech names. And if you're going to have healthy days like this, then I don't think you really even have to worry about that too much. So short answer is, now that oil's pulling back, there's really not much to worry about.
You don't think that's a sign of complacency? Do you look at the cheap volatility on a relative basis and the steepness of that curve to maybe think about putting on some hedges or putting on some trades at some defensive names that would benefit should volatility rise?
I like the latter. The idea of putting trades on defensive names. That's why I like having the Walmart. I ended up actually adding a Costco trade too. I guess it was more earnings. It's not even major, but yeah, I mean, you sold the put spread today. I'm short that 115 put. I like that versus putting on hedges. I've just that's probably been a philosophy that has changed for me in the last 5 years or so. I used to love the idea of putting on some puts or something like getting long some puts or put spreads when we're at all-time highs and volatility is low, because surely, Chris, at some point something's going to turn around, and it just doesn't happen enough, and it ends up being kind of a way to just watch money melt away. So if I'm going to participate in downside moves, it's going to be in a market where things are already ugly, and I think that's really a take-home message. I mean, we have definitely been through those situations a lot where we're trying to catch the falling knife, and honestly, it's better to just try and play downside in those moments, really. So I don't really do it up here as much anymore. I just rather put on a trade in Walmart, put on a trade in Costco, maybe look at things like that in case there is a rotation. This is exactly where people are going to go into getting long the consumer staple type names.
Someone tweeted at me earlier, why not, I saw your segment on the show. Aren't you treating this as a double top? Well, technically it's not a double top until you get we'll call it a neckline for lack of a better phrase, until that support breaks. And Jamal, the way I'm thinking about this, if we have that low from late January, like 115.48, given the fact that trading is a function of both price and time, and we could see that we have the uptrend from April 25, November 25, it's coming into place somewhere around here around 115 and 120. And we have that swing low from March. So if this is going to hold, right, you would expect it to hold here. And so that's why I'm with you right now on a short put spread, thinking that this market's not going to fall. But if it does start to fall, and it's only 35.2 IVR, you start to get a little bit of a vol spike and the market slips, all of a sudden this double top, if that's the way that people would be treating it, it becomes valid closer down towards 101, 102. And that likewise neatly lines up with some prior pivot levels, the June 25 high, and then these lows that we had carved out in October and November of last year. So this is a turning point. When you're at support, the first thing you do is you don't sell because you're selling into support. The risk reward's not great. If the range holds, then you're caught flat-footed. You were too early. So I'm sticking with you right now, looking at those August expirations in Walmart. But XLP, you frequently cite the XLP XLY ratio or XLP to SPY ratio as a sign when it goes too far, as it were. It's a good time to add exposure and something defensive just to balance out your overall beta weighted delta. So I'm with you there.
Yeah, I think that's more of the way to go because, again, this rally's largely been led by tech, and we've seen the days, like it's not happening as much today, but we've seen the days where Walmart and Costco or consumer staples are laid to the wayside in the wake of tech being moving higher. So I just think if there's one way to play a reversal at some point, this is more of the play that I like, as opposed to trying to get on some puts or put spreads, because we've just seen the market turn around. I've seen too many times where the market was down 50 to 100 points in a bull market and it just completely turns around. And it's just hard to make money that way. It really is.
Yeah, it's difficult to do so. It's difficult to trade the market.
Unless it's the beginning of something bigger.
Which, listen, Goldman today upgraded their year-end S&P 500 price target to 8,000. The analyst expectations are getting upgraded. UBS just changed its Micron price target from like 800 to 1625, which is a big part of why there's been this repricing in the semiconductor space, if you will. So we'll see whether or not it continues. Jamal, I'm fascinated by the valuation argument throughout all this. It's it's that CFA charter holder hat that I'm putting on right now. But it's like, are we watching a regime shift in how the market values specific sectors fundamentally forever? Through software, through memory. What a fascinating turning point for it to have arrived right around the Iran war.
Well, are you fascinated by that whole idea of what's going on with the valuations, because you try to think about how things were in 2000 and if there were really signs, or what?
Yes. That's one of the fundamental differences when you look through a lot of these companies right now. And that's why I like using something like the PEG ratio, which is the price to earnings ratio divided by the expected growth rate for the stock. Back then you had these PEG ratios that were like 1.5, 2, 3, just outrageously overvalued. And now you're looking at, a company like Micron has a PEG ratio of 0.07, even with today's move. It's incredibly cheap by some of these metrics still. And if you're talking about sustainable demand into the future, then it's a different business model. It's not like what happened with a crypto in the 2010s when you had like the big crypto build out. And so there was all this demand for compute, and then Bitcoin crashed. And so then the demand for the compute went away, and all of a sudden you have this big like oversupply of chips for a world that never materialized. I suppose that could happen again, but my framing around this is crypto never reached national security level policy priority. And you clearly see that AI has. We could talk about like the Clarity Act and whatnot, but the government is clearly, it's talking about export controls with China for GPUs, not for ETH, as it were. So we have to recognize that there may have been a fundamental turning point in the thematic nature of the entire sector and how the market perceives the sector's value moving forward.
Yeah, I mean, it's fascinating, man. And, to watch the way that these names are running, I mean, you're right. Is there more room is the real question. I think everybody's wondering.
We have about 4 minutes left in the day. The NASDAQ really liked that 30,000 ring to it yesterday, Jamal, so much that it's deciding to recover a little bit more here today. And it looks like we are going to notch that close up here at these levels. Oil prices you mentioned earlier, those are coming back in. This looks different as well for oil as the day's gone on. We don't get that big bounce off the lows. I know we're at 89.40 or so, call it 70 cents higher than the open outcry close that's listed here on the screen on the daily chart. How are you playing this now? Do you feel like maybe the best way to, you talk about getting more defensive in nature, adding some of that exposure to portfolio. If you're a raging equity bull, why not just buy some out of the money oil calls just in case?
If you're a bull and if you're an equity bull, you're saying, I think I would rather, look, the idea of buying a call spread is not a bad idea. I think we've seen it bounce back at times. I even thought about it myself. I was like, if it goes below 90, but I'm really satisfied in the position I have. I've been short MCL, short a strangle, just mentioned how earlier today, adjusted that strangle, and now it's the 110 strangle. And, maybe oil does calm down at this point. Maybe it's, we haven't seen too many times in recent weeks where it's down 4 out of 5 days. I think that's meaningful. I still don't know if I think there's a chance. Again, I believe maybe oil goes back to 95 before it goes to 75. But sure. I don't blame anybody for buying a call spread or even selling puts here. That's what traders do. And these are opportunities. So this is another opportunity in oil.
Yeah, I used today to clean up my book. I have a lot of exposure around 20 days, 50 days, 82, 174. I want to shift the short volatility trades that oil's not going to go through 110 or drop below 70. Mm-hmm. I want to start to build that into this like 30, 50, 82-day cycle and shift off of 20. But Jamal, Ellie and I are going to talk a good deal about oil later. I want to get your attention here on two earnings that are coming up after the closing bell here. Marvell Technology, 61 cents consensus forecast. Shares are down 4.5% today. We also have Salesforce, CRM, which reversed course and fell from just above 180 now down to 177.84. Its consensus EPS is $2.30. There's also some names like Synopsys, S&PS is coming up. You have your Snow likewise here coming up. So a little bit of smattering for everyone. Some names that have really been beaten down. I'm thinking of Salesforce and Snowflake in particular, but really been beaten down as the AI trade has flourished. Do you have anything going on in either of these, or just what we put on this morning in Salesforce when we were talking on the morning show?
Yeah, and Salesforce ended up doing downside put spread in there. I did the calendar spread, the 170 and 165. I already have like this bullish spread in June, and that obviously has not been working for a while. I'm short a put spread to finance the call spread. This put spread is the 190, 180, just so you know. So yeah, I've been losing on that, and I just decided to play a little downside in both CRM and Snow using calendar puts. put spreads because those names have been weak in earnings. We'll see if that happens this time around. And it's not a whole lot of premium. I mean, both of them, I think I paid, under $2 for both, $1.50 on some. Versus, you mentioned Marvell. Normally, I would be all about playing that to the upside, but calendar calls 20% up are over $3, and that's just a little too expensive for me.
Yeah, as we're going out the closing bell here, it's pretty much a nothing day. I think who was Gabe over in Buffalo was talking about his 0DTE SPX short iron condor. He nailed it today. S&P 500 barely did anything, up 2.25 points. Maybe the market still has a constructive but tactical tone to it. We're going to need to decide on whether or not we can find a rally here later in the second half of the week. We'll watch for Marvell's earnings here after hours, Snowflake, a whole bunch of others, because overtime is coming up next. Jamal, it's good to see you, but I must go see my very bearish Russian friend at this point in time.
Likewise, my friend. Later.
See you on the other side of a quick break, folks.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
I got interested in trading when I was around 18 years old. There was a conference downtown and they just kind of described the very beginning of the market. It pretty much would say 99.9% of everything was stuff that wasn't covered in school, just how to leverage your investments, even with options, and that was just really attractive to me. I understand that no one can for sure predict if the market is going to go up or down, but with the research that Tasty does, we're able to find those optimal numbers to trade around to put ourselves in the best situations. One thing people can expect to see with my trades is just a very raw learning process, someone just really getting into the market, but really applying the correct principles and mechanics, a very non-emotional approach, just trading by the book, just to have an inside look on how it really is for someone getting into the market.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people wanna buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There's a phrase for this. When the time comes to buy, you won't want to.
The day that time stood still. It's Wednesday, May 27th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Ilya Spivak in San Francisco. We're here to take you through the next 27 minutes as we wind down a trading session. Ilya, the market put me through my motions today. I got on air at 8 a.m. Eastern after recording our morning daily video, and I got to sit and watch paint dry all day on camera because the S&P here is up by 0.05%. That is a whole healthy 3.5 points. The volatility in today's session, though, really focused around the semiconductor stocks and the NASDAQ, which NASDAQ did push to a new high, technically speaking, at 30,379. But we are about 1% off that high here. There were some concerns coming out of the world of exchange tracking on GPU rental prices, which we covered on Futures Power Hour earlier today. Look, there are two major trackers of this. There's the Orn Exchange, and then there's the folks who are working to build out the compute futures, Silicon Data. They have a different tracking methodology than the Orn Exchange. The Orn Exchange said that prices have basically collapsed 20% over the past 3 sessions. The Silicon Data folks are a little bit more stable. They look at 10,000 inputs. That doesn't matter, though. That report comes out, sparks a little bit of fear in the market. Fear is good, though, Ilya. We can't just go up in a straight line, I suppose. In terms of any significant reaction, though, we can't say the NASDAQ had a big fall. It's only down by 0.07%. Semiconductors themselves stabilize, and the semis are up still around 3% this week, despite today's 1.09% loss. I find it a little more remarkable about the reaction function or the lack of reaction function around oil today. Oil down over 4.5% here. You'd think that'd be good news for gold and silver? Absolutely not. You think that'd be good news for bonds? Not really. Can't say that had much of a lasting impact. What about on the US dollar? Surely oil being down would be bad news for the US dollar. No, not at all. So help us square the circle of this very frustrating market today in a lot of corners where the oil trade doesn't produce the tailwinds for other asset classes that it has historically, at least since the Iran war started. You also have the stock market kind of shrugging off everything else, whereas gold and the dollar are kind of giving you a warning sign.
Yeah, I mean, I think easily the most eye-catching bit is exactly what you just pointed out. What you have is a war trade without oil today. And that is a really interesting set of circumstances. Because really, since this war began, the story has been, okay, so we have a big oil disruption, oil goes up a lot, that's inflation. Inflation is something central banks are going to have to at least not cut and probably hike to deal with. Okay, so that's higher interest rates. So bonds go down, rates go up. Cool, got it. There's initially some risk aversion, and in any case, higher rates. So that's good for the dollar because it's a yield-bearing thing. Bad for gold, which isn't a yield-bearing thing. Okay.
We have Marvell. We have Marvell
so far,
earnings
so good
out here, by the way. Sorry to interrupt you. Marvell earnings are out. 80 cents versus 79 expected. The revenues, just a hair beat. 2.418 billion versus 2.41 billion expected. EPS up 29% year over year. Revs up 28% year over year. That's an EPS that's basically unchanged quarter over quarter, and revenues are only up 9% quarter over quarter here. I'm waiting to see what some of the guidance looks like right now, but the market is clearly digesting some stuff. We opened up prior to the earnings around 198. We dropped down to a low of 187.5. We're already back up to 206 here. So listen, it's a clean double beat this quarter on both the earnings and the revenues. You're not going to shake a stick at a 29% year-over-year earnings growth or 27.6% year-over-year revenue growth. We also had Salesforce out, Ilya, which I suppose is the next one that we should be watching. Salesforce has had an even, I would call wackier kind of session here, but Salesforce currently trading in at 178. They closed the session at 177.62. Salesforce earnings likewise. Revs came in at 11.13 billion versus 11.05 billion expected. Their adjusted EPS was 388 versus 313 expected. They're guiding on second quarter revenue. Not great, Bob. 11.27 to 11.35 billion when the street forecast ahead of time was for 11.36. And their consensus EPS coming in for the second quarter is 325. They're guiding at 325 to 327. So some nice numbers. Adjusted operating income was 387 billion versus 3.7 billion expected. But the guidance here is a little more cautious.
Yes.
Than what we've seen historically. So more or less a pinned market here in Salesforce. CRM trading at 178. That's effectively where it was prior to this. Okay, Elliot, you go back on before we pull up synopsis here, which I don't think many people have an interest in right now.
Well, I mean, I think that's really it. So you had this sort of repeat of the war trade as we've just described, from oil to inflation expectations to interest rates to the dollar to gold, kind of as a concurrent adjustment of the markets going inflation, so higher rates extrapolate. There goes Snowflake. That's a different kind of a bar.
That is a different kind of a bar because Snow here is up 25% after hours. Their EPS came in at 39 cents versus 32 cents expected. So that's a 22% beat. The revs also came in at 1.39 million versus 1.32 million expected. That gives you a tally of EPS up 63% year over year. Revs are up 33% year over year. EPS up 22% quarter over quarter, and revs up 18% quarter over quarter. What's to dislike here? Going to have to look for the guidance, but I imagine this is coming alongside a healthy set of guidance right now. But just like what we saw before with Marvell, this is a clean double beat, both on earnings and on revs.
Yeah, and I think this is the sort of essence of the question. We're not going to get bad results. We're just not going to see them in sort of the heart of the AI space. That isn't even the question.
Is Snow a company in the heart of the AI space?
It's certainly adjacent enough. And
cloud computing
to see downstream demand, to see supply chain demand pull, sure. And so I think when you look at the sort of overall picture here, I don't think really it's about the numbers, because first quarter GDP numbers would have told you that there is a real economic engine here. And yes, of course, you can talk about until the end of time that, okay, the hyperscalers invest money into the AI labs. The AI labs then go spend tons of that money with the hyperscalers, who also happen to be the data centers. Yeah, okay. It's a little circular. But there's an ecosystem. And in any case, the market hasn't been willing to punish it for circular numbers. And so as we look at all of this, then really the question is, what don't we know? Which thing about this isn't in the price? And does it make sense at some point to say, right, we've discounted that story. It's there. Got it. Okay. Now we can get past the he said, she said of, well, I'm skeptical about AI for this reason. Or I'm optimistic for that reason. Yeah. Cool. We've heard from everybody. We've baked in the baseline. Next, what have stocks been ignoring this whole time? An inflation story that apparently, getting back to what we were talking about earlier, doesn't need crude oil to go up, because that same inflation scare is all over markets today, the same way it was when it was a war trade, more specifically, only it happens without oil going up. You don't need guns to go off.
You have $10,000. It's May 27th, 2026. You're worried about inflation coming down the pipeline this year. You want to preserve your purchasing. You want to preserve your purchasing power over the next several months. Where are you putting your money right now?
Well, I think the first thing you have to think about is whether you want to put your money anywhere right now. Because if the first thing you need to do to preserve your purchasing power is not lose that money.
So if it's cash and we go to 5% inflation, you're losing 5%. That's your downside.
Much better than being on the wrong end of a stock market meltdown. And so I think the question becomes, again, at what point is the price already there? While the calculus you're describing still makes sense, it still makes sense. You look and you go, right, okay, if I'm not afraid that there's going to be a stock market meltdown, if I'm not looking at the kind of broad spectrum of risks and saying, well, there's a lot of risk, but I still think we're okay, so I can get a better return on my money as compensation for taking this risk, fine. But if the risk stops being manageable, again, unless you're an investor with a multi-year time horizon, those are different conversations. We're talking here as traders. As a trader, you look at this and you go, right. So I'm supposed to think that no matter how high interest rates go, and no matter how fraught the interest rate environment gets, and no matter how much the central bank is locked into place, and no matter how much more inflation is coming down the pipeline, because if they can't build data centers fast enough, guess what? Demand is outstripping supply. That means the price for AI is another source of inflation. In fact, we've just seen Microsoft throttle back a little bit on their AI use mandate because it was too expensive. So you look at this whole thing and you go, right, okay, at what point is the market not going to be so price insensitive? And you do get there at some point. At some point, things are discounted. And so when you look at this now and you say, right, how do you get the inflation story without oil? And in my mind, you get it because the inflation is already baked in. And if the inflation is already baked in, then the interest rates are already baked in. And if that's already baked in, well, then see your playbook from 2022 for a reference point for what happens to markets when they get rate hikes that they don't want.
Why is this 22 and not 21 still, where we're getting the inflation building up in the pipeline and the Fed has not committed to rate hikes yet? So stocks can just keep running as folks try to find some, they try to achieve the IRR that exceeds the projected move in inflation over the next few months. Isn't that?
I think it could be.
This seems like the fulcrum that it's resting on. Again, 2022, the market doesn't keel over immediately. NASDAQ peaks in November 21. The S&P peaks in January 22. But you get a few months there where even with the Russia-Ukraine war starting, it's not until the Fed actually hikes that the market goes from distributing to then falling over.
It's also a completely different. It's a completely different environment. At the time, you did not have concentration in a single tiny sector and 7 names. At the time, you had a much broader COVID rebound rally driven by actual demand, actually very, very strong, very fast growth, in large part because of a fiscal impetus that was very significant, and a monetary impetus that was very significant, and the Fed waited too long, we know that, and a general COVID reopening. Everybody suddenly wants to buy the services they haven't bought in years, like travel and events. And there is this incredible revenge spending demand wave all over the world. This is not that environment. That was an environment in which a rising tide lifted all the boats. It just lifted them so, shall we say, effectively, that it stoked more demand than could be had without inflation, at a time when supply chains were still broken. And so you had an inflationary episode. The Fed responded. The inflation vanished very quickly. I mean, we went from 9 to just above 2 in the realm of 3 at a very, very fast speed, sort of in the realm of monetary intervention history.
We have Synopsys earnings out here, 335 versus 316 estimate on the EPS. So that's a beat. Revs in at 228 versus 225 billion, 2.25 billion. So small improvement there, but not much. They're guiding higher on a few things right now. So you have revenues up 42% year over year, but their EPS is technically down 9% thanks to a bit of shareholder dilution. The stock price fell fairly dramatically earlier, down to 490. We're back up to 520 here. So, looking at what would be the scale of another 1% loss perhaps coming out of the gate tomorrow, but we have a long way to go before the market opens tomorrow. So long, Ilya, that all 4 indexes have now jumped into positive territory for the day here after hours. S&P is up 0.16%, 75.49. The NASDAQ is up 0.1% now, 30,111 here. There could be more headlines coming out, of course, but the earnings that we've seen consistently have been pretty good this afternoon thus far. I think I've seen enough here, quite frankly, where we had that pullback earlier today, and we now have a bit of a bull flag forming up here. All through today, I was layering on bullish exposure, thanks to some of the market measures. We were doing it in semis and Micron and Salesforce. I'm looking at ES here, Ilya. This looks like a bull flag up here above former highs. I think we're going to get a move by the end of the week through 7,600. I'm going to take that swing, 7,600, 7,625 here, call spread 2 DTE. I think we survived the great semiconductor sell-off of 2026 today.
I don't think we are even remotely close. And I think if you look at a daily chart, it looks ominous to say the least. You have two back-to-back aggressively obvious doji candles on ES. You have a trend-breaking sell-off in SMH. It's a completely... I mean, yeah, you could pretend this is a bull flag until it breaks, and maybe it even breaks that way. But I think the full picture gives you enough to say, I don't know if this is a bull flag or if this is a double top in ES. It could be either. But to have any confidence that it's a bull flag and not a double top is not where I would go.
That's where I've gone. We had the breakout in semiconductors in this bull flag that was forming. We had the breakout yesterday. Well, we gapped up and higher today. We had our pullback to the former high, 2-hour, 1-week moving average, and that's where we've started to bounce from. So Ilya, love to feed coins into machines so long as that they continue to yield prizes out of them. And right now they've been yielding prizes. This one may not yield a prize, though. I'm keeping an eye on CRM here after hours, in part because I do have some long deltas right now. I'm at 51 days to expiration. I'm looking the 160, 155 short put spread, in part because it's below these lows. And if this is a double bottom coming together, then over the next few weeks, 160 should hold. But I want to give myself enough time where if today's earnings had gone against me, which, we're down to 171 here after hours, so maybe a 3 or 4% loss, I have some time to weather the storm. And I would like to add in another leg as we get closer to support here. That's kind of adjacent to your software view, which I know that you are kind of a pro software person right now.
I'm still long because I think there's an opportunistic something there.
So I find myself in a similar boat with you, but I had this conversation with Jim Bianco today, which the video should be up on our YouTube channel shortly, if not right now, as I go double check. Not up yet, but yes. One of the things that he pointed out was you kind of have this barbelled world for software right now. If AI does what it is being promised to do, you don't need the software as a service layer. You can eliminate that completely. You're getting rid of Windows and Zoom and Outlook and every other little application that you have a computer. You have one, it's your AI. It's your LLM that can handle all of that stuff. At the other end, you have a world where AI is something that sits on top of the existing software infrastructure. And so it's not something that supersedes everything. It's something that amplifies 1 + 1 = 3 kind of math.
Mm-hmm.
But that's a very different valuation prospectus for software being a zero effectively versus AI being something that is just sitting on top of software. And there seems to be a consensus growing that maybe it's going to be more of AI sitting on top of software. And so software doesn't deserve to have, an implied volatility that would suggest the entire industry is going to be at a zero within the next 2 years.
I mean, I've certainly argued that exact thing, that it is much more realistic that these giant companies with incredible first mover advantage are going to leverage AI to their ends before somebody reinvents AI Salesforce, let's say, or AI Microsoft. So chances are you're going to see the same names as before, and the idea that these software companies aren't the best positioned to take advantage before anybody else seems kind of silly.
What do we make of this sweep here after hours, Ilya? Nice little market bounce. You don't seem to be surprised by the market's ability to react positively to these numbers, at least.
Sure.
It's in the data. It's in the GDP. We've seen all these other companies. If NVIDIA's making all this money, they're selling it to someone, and that person is doing something else and selling it to someone, and blah, 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 blah.
Sure.
What
I think the question again is not whether AI is a transformative technology and there is a ton of spending behind it that's going to need to get done. I just think that question has been answered. I think the larger question is, okay, the hype cycle is in the price, now what? And what that now is is more expensive risk capital, evaporating free cash flow, a need to borrow by the hyperscalers to sustain all of this. We've seen that in spades now. Even by Google, who shouldn't need any money at all, you would think. And tapping at markets outside the US, where ostensibly capital is more plentiful and cheaper. Because again, the cost of capital is now high and likely to stay high. And so the question for me is, we know about the great Skynet future. Godspeed. We're aware. Stocks aren't where they are because we don't know. The question is, how much of it is already there and how many of the risks got missed from people's vision as they were excited?
Ilya, if the Dario version of the world comes true, we get 10% GDP and 10% unemployment. Do we really need to worry about inflation?
No, but that is a ginormous if. That is the kind of if that says, well, if elephants had wings, they could fly and we wouldn't have to worry about transporting them.
You've never seen the movie Dumbo, I would contend.
Those are ears, not wings.
Be that as it may, beauty is in the eye of the beholder, and from a certain angle, you might consider them wings. I digress. This has been a long day, and I'm clearly saying nonsense. So overtime's out of time. We'll be back. Today's still Wednesday, so tomorrow, Thursday. All day Thursday. Well, not just all day. 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Thanks for tuning in today. Ilya's going to stick around, though. He's here with Macro Money coming up next after a brief break.
See you there, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Well, the stock market didn't know what to do with itself today. So how are we supposed to figure out what's next? That's the question we are going to be asking ourselves here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as ever, our focus falls first and foremost on the price action to see what these markets are trying to whisper in our ear with the way that they're behaving. And then we'll see what might be the little bit of event risk on the macro front that gives us a little bit more of a push in a direction. Because really, the stock market hasn't gone very far at the aggregate level for the better part of 2 weeks. Here is the S&P 500 here, and we can see really since that big sell-off that we had on the 15th of this month, that, of course, a recognition of the inflation fears that have been very much on display in other markets other than U.S. equities and equities more generally. We've been in a kind of sideways band. And we keep testing this high. And today we again get another inconclusive candle. We do set a higher high, but we can't sustain it now for a second consecutive day. We keep trying to break higher, and we keep failing. At the same time as we're setting these nominal higher highs without actually getting anywhere, we also see negative divergence in the relative strength index right here, as well as in the volumes, which in any case on the way up here were fading, but now look like they have a very clean downward slope at the same time as we're setting these higher highs, as if to say there is fading momentum and there is fading conviction behind this attempted push, at the same time that the trend has gone, let's say, from aggressive rally to consolidation, all of which seems to suggest, at the very least, momentum has fizzled, and now we're going to figure out what to do next. Now, the way that stocks look, of course, make them very different from almost every other major benchmark asset, and that is because those have been concerned with inflation as emanating from the war in the Middle East, and that was very much the story here today. As we take a look at the bonds here, very cleanly another kiss of former range support that's become resistance now on this stair step down for the bonds and up, of course, as a corollary for yields. We're holding this former level. And again, you see these candles with long upper wicks and tiny bodies that tell you that there was an attempt by this market, once again, for a second consecutive day, not unlike stocks, to try to break higher. And that attempt was roundly rebuffed. So with that in mind, what is it that we get here? Well, more war, apparently, filtering through into inflation, filtering through into higher rates. It's a similar story for gold, which doesn't quite secure a downside breakout through its lows of last week, but comes very close. And in any case, we continue to see a series of lower highs and lower lows here that are telling us, well, this is still a trend that's pointing down. And of course, the war trade right here told you what gold thought of the jump in oil and the parallel melt up in yields. Gold, of course, doesn't actually yield anything. And so as interest rates went higher, so too gold went lower. And what we see, of course, is late March, early April, there is a broad-based rebound in all of this narrative. Here it is here. The stocks have this bottom, so do bonds, so does gold. And since then, you get about a 50% pullback here, and the subsequent leak, despite the fact that it's almost flatlining, still does have bearish bias. And so while the trend here has become slow and shallow, it is nevertheless seemingly pointed lower. The US dollar very much in the same vein here. A rally with the war as interest rates went up, and certainly not suffering from a lack of liquidity demand amid the risk aversion that broke out with the war. But nevertheless, we still get that same reversal as we had in bottoming stocks, bottoming bonds, bottoming gold, about a 50% pullback, and the congestion thereafter gives us these clear barriers, which again, we're pressing toward the top of. So the bias here seems to be, again, for more war trade continuation. And perhaps the architecture of this is well understood at this point. We've got crude oil prices being a very clear bogey for inflation expectations as they appear in bond markets. These are break-even rates that you derive by taking the difference between nominal and real, that is inflation-adjusted interest rates in the U.S. This is the 5 and 10-year tenor. And when you take that difference, of course, you end up with the inflation adjustment coefficient to get from one to the other. So you are left here then with what is essentially the bond market's actual expectation for inflation as reflected by the price action itself. And we can see here, as crude oil starts to creep higher at the start of the year, even before the war, so too inflation expectations go up. And obviously with the war, this has been put on steroids. The response, not surprisingly, from monetary policy expectations is that this has been a bad enough and a sustainable enough inflationary shock that any kind of expectation of rate cuts goes out the window. You can see the Bank of England and the Fed, as of the start of the year, were on course to cut by 0.5%. The Bank of England is now on course to hike by as much, and the Fed is just about 65, 68% chance of a rate hike at this point. 17 basis points out of 25 for a single move already priced into the market. The ECB is north of 50 basis points and a little bit higher than 50-50 on the third cut after two. Bank of England, as we said, is in for 2 hikes. The RBA is in for 4, of which 3 have already been delivered. And overnight, we had some slightly weaker inflation data, so maybe they'll take their time with the 4th one. But pointedly, that has not come out of the outlook despite an inflation miss. And so we look at all of this. I mean, even the Bank of Canada is on the hook for likely 2 hikes. And so when all of this appears across markets as bonds that can't rally, gold that can't rally, the dollar that's seemingly chomping at the bit to break out higher, we get the sense of exactly what's going on. The remarkable thing about these markets today is that all of this occurred without crude oil having to rally at all. As a matter of fact, crude oil is down today. This has been the bogey for this entire story since the war broke out in late March. And yet today, we get a rally in all of the Iran war consequence trades without crude oil having to do any kind of signaling to trigger it. And what that perhaps suggests is we're getting to a place where, as the data has suggested, inflation from this crisis has become embedded well beyond an energy shock and now exists deep in the economy, in particular the service sector. We're going to get a test of exactly that idea as we get the economic data that's going to be crossing the wires here over the next 24 hours. We're going to get a second revision of U.S. first quarter GDP data. It's expected to confirm a pickup from 0.5% growth to 2% growth. Not surprising, of course, and wasn't surprising when the numbers came out, in the sense that we had a government shutdown in the fourth quarter. So, of course, there was going to be a pickup. It's only about halfway to where GDP growth was before that shutdown. The preceding quarters, the third and second quarter of last year, had a GDP growth in the realm of 4%. So in the first quarter, we only recovered about halfway to where we were before the government shutdown. Of course, the first quarter was an utter mess because of the rollout of the tariffs and all of the uncertainty having to do with that. But by the second and third, things came back to a reasonable pace. And then, of course, we had the 0.5% letdown that was the fourth quarter because of the shutdown. Now, the 2% number halfway back, essentially, to where we were before then. We're also going to get the April edition of the PCE inflation gauge. That's the Fed's favored measure of inflation. It is expected to tick up from 3.2 to 3.3% at the core, from 3.5 to 3.8% year on year at the headline. Both of those, of course, meaningful increases, but you really do have to wonder whether those numbers are any kind of controversial after what we've already seen from the CPI and the PPI numbers that have been out with us for a while. So here is the CPI report. As we can see, we beat handily 3.8% headline, 2.8% for core. Both of those numbers higher than expected. The big wedge here coming from energy in the yellow, not surprising, of course, because of the war. And when we look at the breakdown, we see there is indeed a big increase in the contribution of energy to the overall 3.8% headline figure. 1.14 percentage points of that is just energy. But perhaps the much more interesting thing here is that there was also a meaningful increase in the price for core services. Food was a little bit more expensive. Goods were relatively steady. The contribution from services increasing as it did, that's meaningful and noteworthy, because that would suggest that perhaps something is going on here whereby inflation is picking up outside of what might be an easier to dismiss oil shock. And indeed, if we look at the way that this has been breaking down, we can see the highest in 3 months. It was the month-on-month increase in service sector inflation. And indeed, since the beginning of the year, these service sector inflation numbers have looked much more like the middle of last year and before, prior to this disinflation that allowed the Fed to cut rates 3 times in the second half of 2025. But here, much more like where we were before that. Goods didn't get much of a lift, but nevertheless, the trend is flatlining and not declining, as the Fed wanted to think would happen as you rebased some of the tariff costs, and assuming they were one time. But for services inflation, now for a couple months, whatever decline you were seeing since the middle of last year, it seems to be turning the other way. And when you look at the internals, you can see, well, what lifted services inflation? This transportation services component, which posted inflation in excess of 4%. And that is telling us that the cost from oil becoming obviously a more expensive fuel is now going beyond the cost of the oil itself and into the cost of the related services. That these services are passing on these costs to consumers as opposed to eating them. As, by the way, happened to a large extent with the tariffs in the beginning. Wholesalers were eating the tariff costs because they did not want to destroy demand by raising prices. This is not seemingly the kind of tack that's being taken here. We see that these energy costs are feeding into services, and that's giving us a very different kind of an inflationary issue. When we look at PPI numbers, the wholesale inflation numbers, similarly, there's a big surge in month-on-month numbers. The year-on-year figures have climbed out of negative territory where they've languished for a while and are now in significantly elevated air. I mean, if we consider we're basically back to the beginning of 2023 here, and again, looking at the internals, sure, there is an energy shock. That's understandable. But on the services side, again, spillover. The transportation and warehousing component here is notable, as is the trade services component, which is a wholesaler's margins. Taking a look first at the transport and warehousing side, the cost of more expensive energy is very clearly on display here, be it for the postal service and courier services or airlines, and of course, where it hits consumers most directly, the cost of truck-borne freight. Because that, of course, impacts the price of everything on store shelves everywhere for everyone's consumption. Then we have what's going on in the trade services component, the margins component, and we can see the reason that's seeing a pickup is because of this aggressive increase in the margins for the sellers of anything having to do with petroleum, anything petroleum derived, needless to say, fuels and lubricants tell their own story when you consider what's happened with the price of oil. And so when you look at this, then the question becomes, all right, well, do we already have built-in inflation? Do we, in fact, already have the problem that the market ought to be concerned about, and certainly that Fed officials are concerned about, which is to say, we are already in the place where we have an oil shock, and that oil shock is already so far gone that we actually don't need oil to go up anymore on a given day to drive this narrative. Because at this point, the inflation is so entrenched that whether oil goes up on a given day or doesn't is besides the point. As for GDP, we get the other side of this equation, the other thing that the markets seem to be weighing in the other hand. If bonds and gold and the dollar are preoccupied with what's going on with this inflation narrative, and now seem to be increasingly running away with it, regardless of what oil is doing this day or that in response to this headline or the other one about the way that Washington either is or isn't reaching a deal with Tehran, is, of course, the AI story, and that'll be well on display in these GDP numbers. The initial set of figures, of course, remarkable in that it showed us that fixed non-residential investment, this part right here, added more to growth. It was a 2% growth number. It added 1.4 almost percentage points of that growth. And remarkably, that part of it added more than consumption, which only added about 1.1 percentage points. Now, the reason that is remarkable, of course, and a vast difference, by the way, is that consumption is 68% of overall GDP and business investment is only about 14%. So how much faster would that 14% have to grow to add more to GDP than does consumption, which is 5 times larger? Well, it would have to grow a lot faster, 10.4%, as a matter of fact, annualized. Whereas consumer spending only grew at a pace of 1.6% annualized, slower than GDP itself. And this, of course, is a story about the AI build out and all of the money being splashed around for the building of data centers to feed this rabid AI demand that we've been seeing. And that, of course, is the other side of it. Because when we look at why these other markets were preoccupied with inflation while stocks chose to happily ignore it, here was the stock market's wartime sell-off. We can see, whereas in other markets, we've maybe pulled back a third, then came back. Pulled back half in the case of the dollar or gold, then reasserted the war trade dynamics. In stock markets, we've not only erased all of the war trade, but we've obviously pushed to higher highs. And that has been mainly the product of this AI build-out frenzy. Not surprisingly, semiconductors are ruling the roost as far as the drivers of this thing, and have been a very kind of narrow engine, absolutely out into the stratosphere as far as performance, even within the relatively high-flying tech sector. It's certainly no surprise to anyone that the tech sector is outperforming, but when we consider sort of inside of it, software stocks, IGV, are down about 9% year to date. The Mag 7 is only up about 7.5, 7.6. The equal weighted NASDAQ and the headline index have relatively reasonable numbers on them, equal weighted up about 6.5% so far this year. The headline up almost 19. SMH, the semiconductor ETF, is up almost 60%, 59.5%. And was, in fact, yesterday up something like 61% year to date. It moderated a bit today. And so this really then becomes the critical question for stock markets. Can they continue to power higher because the GDP numbers either reinforce or improve upon this story and tell us there's a lot more vigor in this thing and it can continue to power us along even as consumers are squeezed and even as that leads consumer confidence numbers, as we just saw from the University of Michigan, to a record low, or at least a multi-year low if we look at the Conference Board alternative figures? Or are we going to continue to see this? And so when we put all of this together and say, right, if the AI boom in this GDP data is going to get confirmed or somehow improved upon on revision, higher numbers, bigger impact, faster growth, is that already in the price, or is there more to bake in there? And on the flip side, all of the pressure on consumers, is that going to overpower this AI because consumers are so much bigger as a share of GDP than a business investment that any kind of meaningful deceleration there eventually tips the whole boat over? So this should be very interesting numbers indeed, but at least for today, we get the very important insight that the inflation fears, they're now independent of crude oil. And maybe this was just today. Maybe this will become an issue going forward as far as the move's continuity, but at least for today, inflation fears don't need oil to rise in order to drive market action, and indeed in order to keep the stock market seemingly pinned. Perhaps if they return to the forefront in the wake of this data, a larger correction looms. And so with that in mind, the exposure that I have here for now continues to be, on the one hand, a bet on higher rates, and that's short gold, here directly through the futures, the 1 ounce futures, long the dollar with these shorts in micro Aussie, pound, and euro futures. Again, this is a direct Delta One exposure. And then sort of assorted versions of the view. So I have puts on in IEF, just naked puts themselves that I bought. I have put verticals in TLT, the long end of the curve. Both of those obviously looking for rates to rise in the belly, and the long end of the curve. Long energy through call verticals in UNG for nat gas and oil for USO, looking for the problems there and the disruptions to continue. And short risk, looking at this point, selling a call vertical in the Qs, in the NASDAQ, as well as the Russell, IWM, and still holding on to a bit of put vertical exposure in SPY, but that's expiring in just 2 days. And as I did with NASDAQ, I've been selling call verticals against it to maintain bearish exposure, but also collect premium to pay for these positions that are expiring worthless. And so sort of managing my exposure to the idea while trying to manage down the cost. Likewise, still long Bitcoin through IBIT call verticals, still long the software space, which looked too beaten down and seemed like might be the destination for at least the first stages of a rotation out of the market leaders. That's through a call vertical as well in IGV. And otherwise, looking for the narrative to extrapolate. But at this point, the core of my exposure is looking for the rates story to overtake stock markets as it has elsewhere, and to begin to rattle sentiment as all of this optimism about what the AI build out could be and will be meets the gravitational force of more expensive risk capital and more expensive inputs via higher interest rates and higher costs for everything from energy to building materials, base metals, etc., shipping those materials and doing the work and the cost of labor and all of these things. And that invariably what we see is that once those types of frictions are taken into account, in addition to what is surely legitimate optimism about a wave of AI investment, there is a de-risking period whereby the stock markets have to start caring about inflation and the rates that follow. And that is Macro Money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go there from. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.